markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are powering higher with the Dow, the S&P, NASDAQ solidly in the green. Tech companies are powering the U.S. stock rally after the latest batch of strong earnings. Major indexes close to erasing losses sparked by the tariff shock that rattled markets just weeks ago. Here's where we stand. The S&P now up 74 at 5643. That is a gain of 1.3%. The Dow up 360, an advance of 0.9%. The NASDAQ Composite Index up 408, up 2.3%, with the NASDAQ 100 Index up 2%. The Russell 2000 Index of small cap shares up 1.2%, and the Bloomberg Mag 7 Index up 3.7%. That ahead of earnings after the bell today from Apple and Amazon. The 10-year 4.22%, the 2-year 3.67%. Gold now slumping by 2.3%, 32.12 the ounce. West Texas Intermediate crude up 0.6%, 58.57. Brent, the global benchmark, 61.39 a barrel, up 0.5%. And Bitcoin on the move with a $97,000 handle, up now by 2.7%. More signs this morning of moderation in the labor market heading into tomorrow's monthly employment report. And with that story, here's Bloomberg's Vinny Del Giudice.
The total number of Americans collecting unemployment benefits rose to a 4-year high in mid-April, almost 2 million workers. Initial jobless claims also rose last week. Looking ahead, forecasts point to moderation in April payroll growth in Friday's official data, a gain of 135,000 jobs versus the March gain topping 200,000. Vinny Del Giudice, Bloomberg Radio.
Tesla's chair is denying a report that said board members started a search for a CEO to succeed Elon Musk, saying directors are, quote, highly confident in his abilities. Tesla shares up 1.7%. Kohl's has fired its CEO after the board found he directed the company to do millions of dollars of business with someone he had a personal relationship with on, quote, highly unusual terms. Kohl's shares, they're up 7.8%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks a lot. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. One stock to watch is McDonald's, only down 0.5%. I say that because comp sales for the first quarter missed the average analyst estimates, led by a 3.6% drop in the U.S. That was the worst domestic segment performance for comps since the second quarter of, guess it, 2020, which you never want to be compared to 2020. Joining us now to discuss is Michael Halen, Bloomberg Intelligence Senior Restaurant and Food Service Analyst. Michael, what gets me confused here is you would think if the economy is tightening, people are tightening their belts, that usually is a good economy for McDonald's. What did you notice?
Well, you're right. It typically is thought of as a defensive type of name. Their scale lets them, charge less than competitors and kind of take share in a tough market. And that's what we're seeing they're doing overseas. In the U.S., it was a messy quarter. To your point, it was definitely an underwhelming report, but there was a lot of noise. I mean, the weather was difficult for the restaurant chains in the first quarter. It was very cold in January, snowy in February. It was a bad flu season. They lost that leap year day, so that was hit comps by about 1%, right? So it was kind of messy, and I would say the value menu relaunch maybe didn't go as well as some might have expected, but the stock's not doing bad at all today, and I think it's really because investors are looking forward. There's some things to get excited about. This month it was the Minecraft movie promotion. Next month is going to be the launch of McCrispy strips, and then in the second half we're going to see the return of the McSnack wrap.
Yeah.
And I think investors are looking forward to all those things, and easier comps and same-store sales should improve a good amount here through the year end.
All right, so Alex, we had a remote broadcast a couple weeks ago with the NJIT, New Jersey.
Yeah, we did.
I went to the McDonald's at the Newark train station.
And?
Got the number 2 with a Coke, which has been my go-to order since I was like 12. awesome.
Awesome stuff.
Awesome. I mean, they deliver every time. I don't know. I'm not letting anybody speak a bad word about McDonald's. Hey, Mike, what are your restaurant companies? What are they saying about a world of tariffs? How does it impact their business? How much do they expect to take out of their margin versus maybe passing along to customers? What are you hearing these days?
Yeah, so what we're hearing on these earnings calls is just uncertainty, and I think most of our companies are taking this as an opportunity to kind of lower their guidance, their same-store sales top-line guidance for 2025 here, whether or not their business has been impacted by a consumer slowdown due to the tariff concerns and anything like that. In terms of margins, we're fine. I mean, there's very limited exposure to imports in the restaurant industry. Companies, restaurant chains we cover, they're all sourcing a large majority of their goods domestically, right? And so margins aren't really an issue. I mean, Shake Shack this morning actually increased their guidance for 2025 restaurant margins.
That's interesting. So would this be a relatively then defensive sector, dare I say, in a tariff environment?
Well, I mean, right now the market's trading as if, a recession is on the table. And in that case, consumer spending is going to pull back. I would say restaurants are probably better seated than maybe retailers, right? Because they have less tariff exposure. And the restaurant industry suffered a recession last year. And so we have easier comps to lap, right? And so for those reasons, it may be more attractive. But, if we do see a recession, you don't want to be owning consumer discretionary names historically.
So, Mike, I think I'm a pretty good restaurant feedback person because I'll go to the McDonald's in Newark train station, but I'll go to the top-end steakhouse as well. I'll go anywhere in between. Where do the different segments of the restaurant business, how do you think they're going to fare in an economy that is perhaps slowing down and perhaps even thinking about a recession?
It's really interesting this go-round. And, we've been saying and we continue to think that casual dining is going to outperform this year.
What's an example of casual dining? Because casual for me is different than casual from Tom Keene.
Sure.
Yeah, so casual dining, think Cheesecake Factory reported a solid report yesterday. A name we really like is Cracker Barrel.
Oh, boy.
You're speaking his language right now.
Great company. I know I am. So those chains, they're coming off of really, really weak results last year, and you have some turnarounds in the industry that are kind of boosting results, right? We've seen absolutely phenomenal results out of Chili's. We think the turnaround at Cracker Barrel is going to gain steam. And they have exposure to low-income consumers, but much less so than quick service. So quick service is lapping better comps from last year, tougher comps from last year, and they also have the highest exposure to low and middle-income consumers. And, for that reason, we're a little bit more bearish on those names.
Well, yeah, exactly. And then you have the QSR, right? The quick service restaurants, which would be a McDonald's. Chipotle is a QSR, right?
Well, it's a quick service. They we have a whole new segment. Well, not that new, but kind of new segment called fast casual. Where
yes, that's right.
Price point's a little higher than quick service, a little bit lower than casual dining. The food's better than quick service, and in some cases, actually better than casual dining as well. So yes, Chipotle, Shake Shack, Dutch Bros, Cava, they kind of all all are in that boat, and we're seeing different results, across that space. I think it was pretty, fast casual did pretty good last year, but we're seeing some headwinds. Chipotle didn't have a great quarter. There's been a massive slowdown in same-store sales at Wingstop, and so so you're seeing, kind of a case-by-case basis in terms of the fast casual industry.
All right, Michael, thanks a lot. Michael Halen, Bloomberg Intelligence, Senior Restaurant and Food Service Analyst. I have the best fast food service place.
Go.
I go up to the floor of 6, and I get the veggies and the hummus.
And the cost there?
It is free.
Oh, okay.
It's
Very
free.
good.
Zero for me. All right, coming up, we're going to break down what happened with Microsoft. Anurag Rana, Bloomberg Intelligence Technology Analyst, will be joining us to recap those really solid earnings and what it kind of looks forward to when it comes to cloud and Amazon. We'll break that down for you. This is Bloomberg Intelligence. Happy Thursday.
Listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. So good stuff there. Looking at Microsoft, I mean, this is not a small cap stock. This thing's worth $3.2 trillion. Stock's up 9%. I mean, what kind of money gets made and lost on a day where that kind of market cap moves? That is just extraordinary.
Best post-earnings performance since April 2015.
Yep, that kind of makes sense to me. Anurag Rana, it's his job to tell us what's going on there. He's a technology analyst for Bloomberg Intelligence, joining us from the Tech Hub of Chicago, Illinois. He's been covering this stock for decades. Anurag, I guess the cloud is still a thing here. What's the big driver for our friends at Microsoft?
Yeah, I think it's a cloud plus AI. I think that's the big gain over here. And as you said, I mean, this is a company that is probably 1/3 of the entire software industry, and it beat by a massive margin yesterday. I mean, it was, really, in terms of when you're walking into the quarter, you're looking at, constant currency growth rate of 12%. They beat it by 300 basis points, about 15% growing. Azure growth rate, which was 31% consensus, is going well for them. And that's partially because of their relationship with OpenAI and all the workloads that they are getting from that. I think that's really what's driving a lot of it. They came in, talked about the CapEx still fine. They're not shutting any data centers down. And I think this is probably the cleanest story in tech right now. Everything else, including Apple, for example, has this too much noise around it. This is the reason why the stock's doing what it's doing today.
So does this automatically
because Amazon Web Services does not have that OpenAI kind of relationship on the consumer side. They do have good relationships with a lot of large language model vendors like Anthropic and Meta when it comes to on the enterprise side. Now, the enterprise adoption of AI is still in early. It's going to take several years for that to show up in numbers. So if you're $18 billion, and no other software company has given a really big number out there. They've talked about, like AWS talked about billions, but they've never quantified what that number is. So AWS could be different because it's not AI what's driving their revenue stream.
Is there a narrative yet, software industry, about a world of higher tariffs, Anurag, or are the software companies, like most everybody else out there, kind of wait and see?
No, you are looking at the non-AI IT spending being cut down or pulled back, but that's the second derivative impact. When it comes to direct impact from China, most of them don't have any other than buying boxes from China for expanding their data center work. But that's the kind of cost that perhaps sometimes even absorb, given the scale of the larger companies. The smaller ones will have some problems. But the tariff impact we are seeing in new bookings numbers, new guidance for the full year. People are cautious about it. But that's what I would call as a second degree impact.
What did you make of Microsoft lowering their CapEx just in terms of their expenditures, and then Meta increasing them? What am I learning from their CapEx numbers?
So Microsoft did not pay. Microsoft basically said they're going to be spending on short-term kind of projects, which is going more leases rather than building it on their own, which to us is fine because let's say there is some issue with demand over the next 2 years, they can counter progression than the others. Now, Meta is talking about more CapEx, but I have no idea how they're going to capitalize on it. And then, that's an area of question mark for them. For Microsoft, it comes through Azure Cloud Computing. For AWS, it's the same thing. But how are they going to capitalize it? Is a big question for Meta.
All right, Anurag, Apple, after the close here tonight, what should we all be focusing on?
Oh boy, this is going to be such a noisy quarter with so many different pluses and minuses. First and foremost, I think they're going to see a very good quarter this time from all the product pull forward. So you could see a big jump in iPhone and some of the other products because people are buying it ahead of time. So that's one. Second, it's really hard for me to understand how they can even come and give a good guidance or give any decent guidance for next quarter because the range has to be extremely wide. They don't know how the scenarios are going to play out. So that's going to be the second part. Then comes all the legal issues. We already heard last night there was some, the case they lost on the App Store fees charging. That could be a big amount going into the next 12 months. We'll figure out how they have to ring fence that particular loss of revenue. Then there is the Google. Are moving production to India. That could be construed as good.
All right, Anurag, thanks a lot. We really appreciate that. Anurag Rana joining us, Bloomberg Intelligence, a senior technology analyst. I love that, though. Microsoft, the cleanest story in tech, and a lot of issues in other technology companies today.
Just so many of these issues that are out there: tariff, supply chain, just relations with China, everything. It's kind of rolled up in a ball when you look at Apple. So we'll keep an eye on that. Looking at the market, S&P up 50 points. Intraday highs, but still holding that gain. The Nasdaq's up 1.8%. So tech stocks leading the way here. Again, Apple after the close. Carol and Tim will break that down for you this afternoon. Balance of Power with Joe. Matt, update. Good morning.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan, the man at the center of the Signal chat incident that revealed U.S. military plans to a journalist is out at the White House. CBS's Jennifer Jacobs reports National Security Advisor Mike Waltz and his deputy, Alex Wong, are leaving their jobs.
We know that the president has defended Mike Waltz on several occasions. He called him a good man. He said he learned his lesson after the Signal situation. So Mike Waltz survived that situation. There have been new developments. Don't know exactly what those are yet, but something has shaken the president's confidence in his national security advisor.
CBS's Margaret Brennan reports there have been other policy divides that may be driving the shakeup.
It is not clear who would step into that national security advisor role, nor the deputy role. And that deputy role is extremely important in White Houses because that is the support for the national security advisor who is deciding what makes it on the president's desk or not.
Anti-Trump protests are going on in several cities today, and CBS's Scott MacFarlane says there's also action at some courthouses.
Former judges, people in the judicial branch of government, the legal profession, they're going to be retaking their oaths in some cases. They equate it to retaking your marriage vows and trying to restate their priority is the Constitution, not politics, not a political leader, and distance themselves from this recent rash of vitriol towards judges and attorneys and law firms.
Florida Governor Ron DeSantis touting recent state action and the government's immigration crackdown.
This is the largest immigration enforcement that we've seen in country. Florida state agencies, authorities, illegal aliens across the state.
There's been no medical update on the man who was critically injured at PNC Park during last night's Pirates-Cubs game. CBS News Pittsburgh reporter Laura Linder.
Scary moment for everyone inside PNC Park as a man fell over the outfield wall onto the playing field. And Pittsburgh Public Safety says that he's now in critical condition at the hospital. Now, during the Pirates-Cubs game, the man was above the Clemente wall. And
Buena Vista Social Club gets and checking Wall Street right now, the Dow Jones Industrial Average is up 236 points. The NASDAQ is ahead 339. This is CBS News. A British university has put students up against the latest technology, as we hear from CBS's Michael George.
Who writes better essays, real students or AI? The University of East Anglia compared student-written essays with ones written by ChatGPT and found the AI essays were surprisingly coherent and grammatically correct. The only thing missing? A personal touch. Plus, the AI wouldn't take a clear stance on issues. But teachers say it's getting harder and harder to detect cheating. Researchers hope moving forward, such tools can be used as teaching aids instead of just shortcuts.
Well, the Trump administration has canceled $1 billion in mental health grants for schools that were established after the massacre in Uvalde, Texas. That money was used to hire psychologists and counselors. A conservative strategist says the money has gone to left-wing radicalism and discrimination. Steve Kathan, CBS News.
From the world of politics to the world of business, This is Balance of Power. Live from Washington, D.C.
The door swings at the White House. Welcome to the Thursday edition with news today that Mike Waltz is out as President Trump's national security advisor. The first departure. Bloomberg's Dan Flatley will join us with the latest here as the administration sees its first departure with analysis from our political panel. Republican strategist Ashley Davis, S3 Group, is with us alongside Democratic strategist Adam Hodge from Bully Pulpit. Salt Republicans can't get on the same page. Big meetings on Capitol Hill yesterday. We'll talk reconciliation, tax cuts with Bloomberg's Mike Dorning, all after a look at Wall Street. We start there, as always, smack dab in the middle of earnings season with Charlie Pellet at World Headquarters in New York. Charlie, how's it look?
And right now we are looking higher, a whole lot higher, Joe Matthew. The Dow, the S&P, NASDAQ, all advancing. Tech companies powering us higher. After the latest batch of robust earnings, major indexes close to erasing losses that were sparked by the tariff shock that rattled markets just a few weeks ago. Apple and Amazon after the close of trading. Apple right now down 0.2%. Amazon up 2.5%. S&P now advancing 52 points, up 0.9%. The Dow up 216, up 0.5%. While the NASDAQ Composite Index is up 333 points for NASDAQ. That is a gain right now of 1.9%. The Russell 2000 Index up 0.5%. The Bloomberg Mag 7 Index up by 3.2%. The 10-year, 4.21%. The 2-year, 3.67%. Gold is now down 2.3%, retreating by $75 the ounce to $32.13. West Texas Intermediate crude down 0.8%, $57.76 a barrel. And Bitcoin now up 2.6%, $97,091 on Bitcoin. Bottom line here, an update for the Dow, the S&P, and NASDAQ. As for Washington and markets, Nancy Tengler is Chief Investment Officer at Laffer Tengler Investments.
We've gotten less chaotic messaging from the White House, so there seems to be more strategic understanding and communication, and I credit Scott Bessent for that.
Nancy Tengler of Laffer Tengler interviewed this morning on Bloomberg Open Interest. General Motors has cut its full-year profit outlook, citing its exposure to auto tariffs. GM up 0.4%, and Harley-Davidson has withdrawn its 2025 outlook, citing a lack of clarity around U.S. trade policy. HOG on the ticker symbol. Harley moving higher by 3.4%. Again, recapping, S&P advancing by 1% right now. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Balance of Power continues right now, and back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, good to see Charlie Pellet. As always, you can see him, too, if you get on YouTube. Search Bloomberg Business News Live to find us online as well here on Bloomberg Radio and on satellite radio channel 121. Welcome to the Thursday edition. You made it to Little Friday, and we have news. It happens every day like this, right? We've done this before. High noon and news from the White House. Well, kind of. Bloomberg News is reporting that Michael Waltz is out as President Trump's national security advisor. This, of course, bringing us back to the whole Signalgate controversy. This is what we call it now, remembering when he added the Atlantic journalist to the Signal chat with the Yemeni attack plans, said to have infuriated Donald Trump, who was standing by his man, said Mike Waltz doing a great job. Of course, that only lasts until you're fired. And as we look at the metrics here, I started thinking, well, it's first 100 days, right? So that's, how many Scaramucci's is that? Scaramucci's like 10 or 11, right? So that's 10 Scaramucci's. Not true. It's 9.2. I just want to be accurate here because this is Bloomberg. Data-driven journalism. Anthony Scaramucci on Twitter. Waltz lasts 9.2 Scaramucci's. He certainly did a lot better than Michael Flynn's 22 days on the job in the first administration. And we're lucky to be able to compare notes with Dan Flatley, who has the perfect portfolio for us today. You know, Dan's a friend of the show. He's a neighbor, as we say here in the newsroom. Hi, neighbor. Covering the Treasury Department, having spent a career covering national security, we're going to get to Mike Waltz, and we're going to get to this minerals deal, all with the same brain. Dan, welcome back. Good to see you.
Thanks, Joe.
So, first of all, we don't need to relitigate the whole signal thing or retell the story. People remember this. Let's talk about the job.
Right.
This is a really important role in the White House. The president's gone through a couple of them here in the first, now second term, but it also does not require confirmation. So you could argue this is the easiest guy to replace in the cabinet.
Yeah, Joe, I mean, it's a great place to start because, there's been books written about the role of the National Security Advisor and the National Security Council and how it has become really a center of gravity for the U.S. government and the White House in particular. And part of that is because the U.S. is, I'm leaning on my national security background here, the U.S. has been involved or is involved in more, countries, more continents, its military is every day active around the globe. And Congress, who has nominally the power to declare war and oversight over military activities and all of that, has ceded a lot of its power and authority to the executive branch, to the White House, to the president. And the National Security Advisor has become a much more important role over the last several decades because of that. And one of the things that we've seen in the last two presidential administrations, starting with Trump 1, going to Biden, now with Trump 2.0, is the role of the National Security Advisor encompasses not only traditional things like military activities and strikes against the Houthis, which is kind of where the signal gate thing comes in, but also export controls on semiconductors to China, whether or not the U.S. is going to allow big asset managers to invest in China, all sorts of economic deals and agreements and things like that, like the Ukraine minerals deal. All of that stuff now runs through the White House, runs through the National Security Council. So yeah, Mike Waltz was an important person. He had an important position, and he has a lot of credibility. He was a former Green Beret, great military career, was very active on these issues on Capitol Hill, well respected, and now, according to our reporting and the reporting of others, he's out. And so what does that mean for the Trump administration? Does this tell us anything about the trajectory of where foreign policy is going to go? Uncertain at this point, but Marco Rubio, another sort of well-respected former lawmaker, now Secretary of State, is hanging on and by all accounts doing well in that position. So there's lots of mixed signals, but I think Mike Waltz's cardinal sin, if I could say that in this instance, was adding a journalist from a quote-unquote...
It was a fat finger that he lost his job over.
And I think that is sort of the when you're in this mentality that I think a lot of the Trump folks have, which is it's us against the world, and we know what's right. We have the right policies in place, and we need to be given the space to do that. When you allow in somebody from maybe the enemy camp, that doesn't look so good. And so that's, that is something that is, I think, was his ultimate undoing here.
So there'll be questions about shortlists and replacing him. It won't require confirmation. So Donald Trump at some point will walk into the briefing room or get on Truth Social and give us a name.
Yeah, I mean, I think that, certainly there have been some names thrown around. I don't want to get, too much into that because it's such an active situation. But
there are reports that Witkoff is someone, for instance, who at least would be considered. Is that fair to say?
Yes, I think he's, well, let's put it this way. He's close to the president. Trump values relationships. He values people that appear to be getting stuff done that align with his interests, and that's Witkoff. Whether he's ultimately going to be interested in this job, we don't know. And Joe, as you and I were discussing at one point earlier, there's been a lot of turnover in this job. There was turnover in the first Trump administration. Jake Sullivan made it all 4 years with
Imagine
Biden,
that.
right? Which is like a long time to go. But, part of the reason is it's not subject to Senate confirmation. So that kind of eases some of the burden on Trump in terms of who he's going to pick. But I think you want someone who is broadly aligned with your interests, but is going to be able to work with folks on Capitol Hill and other places in order to kind of get your agenda over the line. And kind of take some fire, or at least kind of like play defense with some of those folks. And Waltz was the perfect person for that. And so who are they going to go to next? Are they going to pick somebody who's more in line with kind of the Make America Great Again, America First policy, or are they going to try to do somebody who's a little bit more traditional, more typical Republican? I think that's kind of the parlor game in Washington, and that's what we're all going to be watching.
It's interesting to think that if it were in fact Steve Witkoff, the National Security Advisor would have a personal relationship with Vladimir Putin, which is pretty remarkable to imagine, picking up the phone and having that conversation. You know who's also engaging in geopolitics is the Treasury Secretary, and that brings us to your current role here covering the Treasury Department. Scott Bessent talking yesterday about a minerals deal with Ukraine. They actually signed this thing. Let's hear from the Treasury Secretary in Washington.
As President Trump said in the Oval that day to Zelensky, you have no cards. Well, you know what? President Trump has now dealt him a royal flush, because now we can take these cards and go and show the Russian leadership that there is no daylight between the Ukrainian people, the American people, between our goals. So this is very innovative.
That's on Fox Business this morning, by the way, to be clear. An important deal for a lot of reasons. This White House has led us to believe that it would create the path to an actual peace deal. Is that the case?
I think that's what the White House believes.
Yeah.
I think that there are still some major sticking points in any potential peace deal with Russia. And you have to start with, does Vladimir Putin want peace in Ukraine? If you talk to the Ukrainians, they say no, he doesn't. He's not interested in peace. He's interested in stalling. He's interested in tilting the field in his favor. He's interested in playing the Trump administration to his advantage. But leaving all that aside and where that all is going to go, I do think that it was, at least for the moment, a victory for both the U.S. and the Ukrainian sides in getting this deal over the finish line. And I, it's interesting to listen to Bessent talk there and use this metaphor of playing cards, right? And he's picking up on something Trump said in the Oval Office to Zelensky, which is, you don't have the cards. So I think that they are now trying to basically square the circle and to say Trump is trying to kind of play to both of his major bases, which is traditional Republicans and the kind of the more MAGA isolationist wings, and say, look, we're going to continue supporting Ukraine. I'm on Ukraine's side. I'm on the right side of history, speaking to his more traditional Republican audience. At the same time, we're getting something out of this. It's not a blank check. And so he's talking more to the MAGA side. And, if you look at it through that lens, it is a clever deal. It's a smart play. What it actually means in terms of a war where many thousands of people have died and are continuing to die on the front lines, that's a harder thing to say. That comes down to guns and butter and that sort of thing. And so, we'll have to see.
They actually got the deal done. Pretty remarkable for the Treasury Secretary to find himself in the middle of all of this. Alongside Dan Flatley. Thank you, Dan, as always, covering the Treasury for us here in Washington at Bloomberg. I'm Joe Matthew, and thanks for being with us here on the fastest show in politics. We'll bring Mike Dorning in next as we turn to Capitol Hill and extending the Trump tax cuts. It's straight ahead right here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all in the green ahead of earnings coming up after the close of trading from Apple and Amazon. Bloomberg Radio and television going to be all over those numbers as they drop. Right now, the S&P up 46. That is a gain of 0.8%. Dow Jones Industrial Average up 156 now, up by about 0.4%. And NASDAQ up 307, a gain of 1.8%. The NASDAQ 100 index up 1.4%. The Bloomberg Mag 7 index after earnings last night from Meta and Microsoft up now by 3.1%. 10-year at 4.22% with the 2-year 3.67%. Gold is down 2.3%, 32.13 the ounce. And West Texas Intermediate crude up 0.2%, 58.09 a barrel on WTI. Bitcoin, meanwhile, up 2.7%, back just above $97,000. Ryanair CEO Michael O'Leary has told a U.S. lawmaker that his airline will consider canceling its 330 Boeing aircraft orders if tariffs significantly affect the price of the planes. O'Leary wrote the letter in response to a warning from Representative Raja Krishnamurthy, who told Ryanair not to buy aircraft from a Chinese plane maker, Comac, for security reasons. Recapping, S&P up 48, gain right now of 0.9%. Balance of Power continues, the Thursday edition. And back we go to Washington. Once again, your host here is Joe Matthew.
All right, Charlie, thank you so much. The great Charlie Pellet in New York, the voice of Wall Street and the New York subway every day here on the fastest show in politics. I'm glad you're here on Bloomberg Radio, satellite radio channel 121, and yeah, YouTube every day, Bloomberg Business News Live. Dial it up and just let it roll. It's all of our shows from D.C. and New York here on the greatest radio network on the planet. We have cameras, too. And we'll welcome our global television audience to the program coming up in our second hour. Donald Trump is in the Rose Garden right now. It's beautiful today in Washington, by the way. Just about time to start turning on the AC, but we're not quite there yet. He's not talking policy. He's talking prayer. This is, in fact, a National Day of Prayer event that's taking place in the Rose Garden. Again, if you're with me on YouTube, you can see him right now behind the podium in front of the colonnade. An invite-only event with the likes of Marjorie Taylor Greene seated, Mike Lindell, and others. We don't know if he's going to be answering questions. That doesn't seem to be the spirit of this. And, of course, with the news of Mike Waltz leaving the building, he may not be answering questions. Talked a bit, though, about the tariffs. And I should back up for a second because it was this morning that his economic advisor, Kevin Hassett, said on TV that we expect tariff news today. Yeah, we're waiting around for headlines. Tariff news expected by the end of the day. President Trump just now talking more about it. He says that Scott Bessent, the Treasury Secretary, is negotiating with 200 countries right now, which is confounding a lot of people because there are only 195 countries. That said, Howard Lutnick has no life, according to Donald Trump, because he's negotiating all the time. We'll let you know if we get news on this later on. It's economic data that we're focused on this week, too. It was GDP yesterday, jobs day tomorrow, right? You just heard Charlie talking about this. And the GDP report showed the first contraction since 2022. Made some real waves here in Washington and on Wall Street, and it's something that we talked to Senator Elizabeth Warren about. She joined us on the late edition of Balance of Power. Myself and Kaylee Lyons. I started by asking Senator Warren if she thought the recession had already started. Listen.
And the overwhelming majority say if we're not already, we are certainly sliding into one. The damage done by the chaos around the Trump tariffs has really delivered a body blow to our economy. And of course, we've seen it in the stock market. We've seen it in the bond market. But look, where we really are on this is that families are struggling, and they're delivering that message. Remember how Donald Trump won. He said he would lower costs on day one. Those were his words, on day one. He gets elected. He immediately says that is one of the main reasons he won. We are 100 days in, and what has happened? The economy has shrunk, and the price of groceries is up for families all across this country. That's a bad economic outlook.
Well, when we consider that outlook then, Senator, knowing we are a week away from the Federal Reserve's next rate decision, if they choose not to cut next week, to wait to June or July or even after that, would President Trump be right that Chairman Powell risks being too late?
You know, the problem now is the crisis that Donald Trump has created. Chairman Powell said, as soon as Donald Trump started announcing these red light, green light tariffs, that we were going to have tariffs across the board on virtually every nation, on virtually every product, that the consequence of that would be to do two things. One is to drive up prices, in other words, an increase in inflation, and two, to drive up unemployment. And you all know what that means. That's stagflation, and it neuters the Fed's only tool, and that is changing the interest rates. Because if they increase the interest rates, that will help push down inflation, but it will drive up unemployment. And of course, the reverse is true. If they lower interest rates, they run the risk of setting inflation aflame at this point. So Donald Trump has created a crisis, and now the tool that the Fed would use becomes much less effective for the Fed to actually be able to use it. This is Donald Trump's problem, and he has created it and now compounded it.
Senator Elizabeth Warren, Democrat from Massachusetts, with us, as I mentioned, on Balance of Power late yesterday. It was right after that interview. We'll connect the dots on a couple of stories here, right? We talked about the economy, the Fed, and yes, tariffs as well. She was headed to the floor to force a vote on tariffs. An important move here, but a largely symbolic one. To force a vote that would challenge the president's authority and reassert congressional authority over this matter. The Senate rejected that effort. It was deadlocked 49-49. And yes, it was J.D. Vance who cast the tie-breaking vote. She had Rand Paul on her side, but not the vice president. This, by the way, is going nowhere in the House, so it really wasn't an issue to begin with. But it's a good place to start with Mike Dorning, watching Congress for us as Bloomberg's Capital Influence Deputy Team Leader. Nice to see you, Mike. Welcome
Great to
back.
be here.
That was really more than a symbolic gesture, even if it did pass, right? This wasn't going to happen in the House. Are Democrats powerless on Capitol Hill with this matter? They have to rely on the courts?
They pretty much have to rely on the courts. But it is like, well, it's primarily symbolic. What it tells you is that there's already strong domestic opposition that includes parts of the Republican Party to Trump's tariffs. And he started this economic game of chicken with China and other countries, see who can break first. And it's showing the world that the U.S. side is already breaking somewhat because the U.S. side isn't really backing Trump entirely. It would have been more embarrassing for him if he'd actually lost the vote on this.
Okay, sure.
But a tie vote with several Republicans defecting signals the weakness on top of the polling data that says most Americans think this is a bad policy, the consumer sentiment dropping and fears of inflation and recession. So it's a bad sign for Trump going into it. But on the other hand, the Democrats can't really do much to force Trump. And Trump has a longer political horizon maybe than some of his Republican lawmakers who are up for re-election shortly.
Well, the real news, I guess, yesterday on Capitol Hill was not this effort. It was the beginning of marking up actual legislation that's going to be part of this reconciliation package. And there have been a lot of meetings. There are meetings with lawmakers who are concerned about Medicaid cuts. There are meetings with Republicans who are worried about SALT. Nobody seems to be on the same page on anything yet. At what point does the Speaker need to corral this group into finalizing bills?
Well, it's always a balance between patience and letting things work out over time and keeping people's feet to the fire with a deadline, even if it's kind of, at the moment, a pretend deadline at the end of May. I mean, they don't really need to get this done until December 31st, and they probably won't. Last time they got it done, I think, in the fall sometime. But by having that, like, look, we want to get this passed by the end of May, that just at least forces more of a tempo to these meetings and tries to get people to get closer to their true bottom lines.
Scott Bessent says 4th of July maybe more realistic. Douglas Holtz-Eakin was on with us yesterday. He used to run the CBO. He's at the American Action Forum now. He said try September. You know, give them the rest of the fiscal year because this may be a lot more complicated than people are allowing for. But that would also mean managing the debt ceiling in a separate package, having to work with Democrats. This is likely to be the Republicans' reality when we get the X date here, right?
There's a good chance of that.
Yeah.
I think, though, the Republicans are going to try for at least a little bit longer to keep it tied up with the debt ceiling to create that artificial deadline. If you don't hold people's feet to the fire now and say, look, we got to get this done by the end of May, we got to get it done by 4th of July, we got to get it done by the end of July, we got to get it done by September, then maybe you won't get it done by October, November when it really counts.
Yeah, sure.
So you got to hold people to the fire. You got to pretend there's these earlier deadlines so that when the true deadline comes, you're not in the embarrassing situation of having taxes go up on December 31st and fixing them 2 weeks later. That looks really bad.
Yeah, you wonder what kind of a fever pitch this debate will get. Does Donald Trump start picking up the phone? Does he go up to the Hill at some point, march in to talk to lawmakers about all of this? Because Democrats they're sitting back watching this happen here.
Yeah, no, it's all the way they're doing this. It's all within the Republican Party. And you saw today the president had some of the key Republicans up to the White House to talk about Medicaid. And there's a difference of opinion between the president, the moderates, the ultra-conservatives on Medicaid, and they're at loggerheads trying to work that out. That could be a big political problem for them, so they've got to approach it, do a lot now.
Yeah, it's funny. No matter how many issues we roll through here, it still ends up being Chip Roy versus the president, right? On so many issues. Chip Roy wants to see Medicaid cuts. The president said in Milwaukee or in Michigan the other night, they're going to raise Medicaid funding. Is that even in the realm of possibility?
I think there's a bit of semantics there. I think what the president might, I didn't listen to the whole president's speech, but sometimes they say, well, the funding will go up automatically as medical costs and the population rises. So if 20% of the population is covered by Medicaid or 10% of the population, it remains 10%, the medical costs will go up and the size of the population will go up, so you will, quote, spend more on Medicaid.
Fascinating. This is the real stuff. This is why we talk to Mike Dorning. Great to have you back. He helps to run our Capitol Influence team here in Washington, and we're going to start getting more news out of the Capitol. You wonder if lawmakers will even dare go home for Memorial Day weekend. Of course they will, but there may not be a lot of town hall meetings when they get there. Big thanks to Mike Dorning. Our panel is coming in next, and we're going to have a lot to talk about with Ashley Davis and Adam Hodge today. Did you see the Elon Musk interview? Can I call it an interview? He sat down with a group of reporters yesterday. Imagine him spending the night in the Lincoln bedroom, stepping down to the White House kitchen for ice cream late at night. The bromance may have been stronger than we realized. We'll have a lot more on that coming up next year on the fastest show in politics. President still speaking. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ off session highs, but still advancing. Tech companies powering stocks higher. S&P up 55 right now, up by 1%. This ahead of earnings after the bell from Apple and Amazon. The Dow up 175 now, up 0.4%. NASDAQ is surging 340 points, up 2%. The NASDAQ 100 index up 1.6%. And the Bloomberg Mag 7 index now up by 3.3%, getting a lift from earnings last night from Meta and Microsoft. The 10-year 4.21%, the 2-year 3.66%. Gold down $75 the ounce, down 2.3%. Spot gold now at $32.13 the ounce. West Texas Intermediate crude down 0.4%, 58 even a barrel on WTI. Bitcoin now advancing 3%. Bitcoin at 97,377. Industry data show U.S. factories struggled in April. And with that story, here's Bloomberg's Vinny Del Giudice.
The ISM's nationwide factory index signaled contraction for a second month. Output posted the biggest drop in 5 years as White House trade policy sowed doubt. The manufacturing data also suggests the strategy of rushing in imports to beat tariffs is drawing to a close. A measure of imports dropped at the fastest pace since 2023. Turbulent times. Vinny Del Giudice, Bloomberg Radio.
From manufacturing to consumer spending, MasterCard's first quarter earnings topped expectations as consumers kept spending. MasterCard shares today, though, down 0.6%. Rival Visa lower now by 0.7%. And McDonald's U.S. sales fell 3.6% in the first quarter. McDonald's shares are trading lower today. Right now, we do have McDonald's down by 1.5%. Again, recapping, stocks higher, S&P up by 0.9%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Back, we go to Washington as Balance of Power continues. Once again, your host, here he is, Joe Matthew.
All right, Charlie, good to have you back. Charlie Pellet in New York, watching Wall Street for us here on the fastest show in politics. Thanks for joining on Bloomberg Radio, on Satellite Radio Channel 121, and on YouTube. Bloomberg Business News Live. Plug it in. You'll see us in the studio here in Washington and in New York throughout the day. You made it to Little Friday. And we do have news. If you're just joining us, the National Security Advisor at the White House is out, Michael Waltz. Hold on to your phones. Was this about Signal? The timing is curious here, as we can now confirm that he was in the building for 9.2 Scaramucci's. That actually delineated by Anthony Scaramucci himself. And the first term, though, interesting, remember? That was the first departure, General Michael Flynn. That was like 20 days. So he did pretty well, I guess, surviving the first 100. We have a lot to talk about with our political panel. With us in Washington right now, Ashley Davis, Republican strategist, S3 Group. Adam Hodge is here as well, Bully Pulpit International. Great to see you both.
Thanks.
All right, Ashley, so let's start here. You have a background in the national security space, and you know the characters we're talking about inside the West Wing. Was it Signalgate? Was it more? And why now?
First of all, thanks for having me on, Joe. Nice to see you. Nice to see you, Adam. I think that it wasn't just Signal. I think Signal was obviously one part of the overall story, but from what I understand, there has been several other issues along the way, and it was just about the timing that it needed to happen now.
Yeah.
I think that because of how Signal and the people that went after the administration for Signal, some of the more liberal media, that made Trump even dig deeper to not fire Waltz or to not fire Hegseth because of that. But I think that it wasn't just Signalgate at all.
Interesting. So he wasn't getting along inside the organization. Adam, how important is this job to be advising the President of the United States, remembering how the door was swinging in Donald Trump's first term? As I mentioned, Michael Flynn didn't even get through a month. And they're talking now potentially about Steve Witkoff replacing Adam Hodge. Is this role being redefined by President Trump?
Well, and let's not forget H.R. McMaster, the first administration, also didn't last. I mean, he had 3 or 4 national security
and has had a lot to say since then.
You know, I mean, I had the pleasure of working with Jake Sullivan, who was there for all of Biden's first term. And the importance of that role in shaping the foreign policy and national security of the United States, domestic and foreign, is so critical. And so to have this turnover, let's not forget, as much as Mike Waltz is the story today, There were reports that a few weeks ago, 3 of his other staff got fired because Laura Loomer, the fringe activist who talked about 9/11 being an inside job, pushed those folks out. And same thing with the head of the NSA. So it's a real problem because it weakens the ability of the national security team to advise the president and to help protect our national security. It's a real problem.
Can I just say,
Yeah.
so my person when I was in was Condi Rice, so my bar was really, really high. I mean, Jake Sullivan was good, obviously, as well. But you're right, it is a very serious position. What I am just wondering, though, is Mike Waltz was qualified to do this. This was more, I think, of a personality issue more than it was that he wasn't able to do the job.
Sure.
I think that this is more the media right now of who's replacing him. I don't think we know yet. I think Wickoff is a good possibility because he's kind of already acting in that position in a way. But yeah, listen, it's super serious position. I think it was actually an embarrassment under the first Trump administration of how many people and how many turnovers there were. And so I do think it's important for him to have some.
You wanted to clear the first 100 days before doing this, right?
Yeah, I do want to say, I want to do my shout out for Susie Wiles here for just this. This is the first big person that was part of the initial team that has left between the first term and the second term. Obviously, there's been chaos in regards to how people usually manage when they're in the White House. Obviously, with the markets, I get all of that, but a lot of that's just Trump's style. But just in regards to leaks, in regards to staff management, I think she's doing a fabulous job.
How about that?
I mean,
she got a big round of applause in the cabinet meeting yesterday. Adam, is there some truth to that?
No, I mean, look, everybody, and especially we talked to some of our businesses and clients, see her as a key voice and key linchpin, a person that they go to when they got to solve problems. And so she clearly has clout and influence within the administration. But I think we should take a step back. 100 days is nothing, and to fire your first person is not exactly a great calling card. It's not exactly a high bar to live by. And I think it is a feature, not a bug, of the Trump administration, this chaos and staff uncertainty. I suspect that will continue. Pete Hegseth is the person I'm watching because he has done a terrible job explaining his errors in the Signalgate controversy. And the turmoil over the Pentagon is even worse than what's going on at the National Security Council. I mean, it is real, barbarians at the gate over there. So I think there's a real question of how long all of that turmoil in the national security team continues. And it's a problem for the president.
We'll have more time on Waltz and Hegseth in our second hour. I do want to ask you about someone else who's maybe not leaving, but winding down in this administration, and that's Elon Musk. Remarkable, I won't call it an interview, kind of had a gaggle with 10 or 12 reporters yesterday. He spoke for about an hour, and some really revealing things. It's almost like an exit interview. It almost seemed like a goodbye in that cabinet meeting yesterday. He's wearing 2 hats. He also got a round of applause from some cabinet members who were not big fans of his just a couple of weeks ago. But some of the quotes that came out of this interview, pretty abstract stuff. Doge is a way of life, he says, like Buddhism. Buddha is not alive anymore, he said. You wouldn't ask the question, who would lead Buddhism, being asked if the Doge will outlast him. I'm not sure Doge is a way of life, Ashley, but I wonder if it will last beyond Elon Musk. How about you?
I'm sorry, I'm laughing at the picture. Yeah, and I don't know if it's Buddhism, but I think that Doge is going to stay post-Elon in a much less chaotic way. I mean, one thing that I thought that the interview was pretty was humbling of him, so to speak, of how it's been since the beginning of this administration. Obviously, he has to go back and run his companies. You saw what happened with his stock. You saw his cars being burnt. He's hated. But I also think he realized that it's really, really hard to cut fat in the federal government.
How about that?
And so there are going to be his people or people in the Doge realm in place in these various agencies and probably more in the agencies than even in the White House to try to cut out some of the fat that needs to happen. And Adam, you've been in as well. I mean, there's a lot of fat in the federal government, but it's just doing it how they ripped the Band-Aid off so fast. Right. That's what the chaos was about.
Sure. Well, so, let's talk about the receipts, Adam. $2 trillion was the initial goal It was actually 1 trillion, but there was a speech. I think Elon just decided to go for broke. I'll make it 2 trillion, he said. Turns out it's 160 billion based on his update yesterday. Cut 1% of the federal workforce, 20,000 people. Was it worth the chaos, I guess is the question.
I mean, clearly not. And it's had an impact on the president's popularity. It's had an impact on Elon's popularity.
Could it last in a more, dare I say, efficient
manner? I think that there is clearly, and there is a bipartisan support, as Ashley was alluding to, for finding more efficient ways for the government to function. I mean, I remember back in the Obama administration, there was talk about combining USTR and Commerce because it seems like the agencies, there was overlap there. There's been efforts at this before. I think what was so reckless about the Trump administration's approach and Elon's approach at Doge is that they just kicked in the door and said, hey, we're here to, and we don't care, get out, you're all fired. And there was no strategy. Remember, we fired the nuclear bomb specialists and then all of a sudden had to claw them back because that was an accident, right? They fired a bunch of people at national parks, and now you got trash piling up across our national parks. I mean, those are just 2 very different examples of the same problem, and it affects American people, people's way of life in some respects. So it has not been worth, the juice has definitely not been worth the squeeze so far. I think it will last, and I wouldn't be surprised if it lasts even beyond the Trump administration, because I think much like CFPB and other issues, Republicans will try to codify it, and there will be efforts to try to find efficiency. And if a Democrat could say, okay, what can we do to find efficiencies that's in a more sane and stable
We've even
way?
seen some state governments try to create their own state-level Doge, which is interesting because people kind of get a sense of what that means. I'm compelled by the personalities here, Ashley, and the personality is Elon Musk. But also Donald Trump, the friendship that they created in a time of stress, right? You picture him in the foxhole together in the Gilded West Wing. He's been asked about where he lived in Washington. Did you see this? He's been sleeping in the Lincoln bedroom, apparently, in the White House. He talked about this. The president said, where are you staying? I was like, I don't know, at a friend's house, I guess. And then he was like, why don't you stay here? I was like, sure. And then conjuring this vision of him meeting after hours. Donald Trump called him late night, Ashley, and encouraged him to go down to the White House kitchen to get some ice cream.
No,
this is like a buddy movie.
Yeah, no, I think they're friends. First of all, there's enough bedrooms in the White House you can have multiple people stay in. And Elon could buy a hotel if he wanted to. He doesn't have to stay on a friend's couch.
That's kind of what I was picturing.
But no, I think they really do like each other. And I actually think that the president truly believes that Elon does what he does out of the love of the United States of America and thinks that he could help. I'm surprised. Elon's not being asked to leave. This was a long enough time for Elon. He realizes this. It's time to go. He said this from the beginning.
Late May, we knew this, right? 130 days or whatever it is.
Right.
That's also the law, though.
Well, sure, yes. That's the contract.
I think he knows. I mean, he's done. Look, working in federal government's not that fun anyway. He kind of came in at the fun.
I don't know. I had a great time.
Do you want to go back in?
Yeah, I will say, you both make it look pretty good, I have to admit. Which Elon Musk do you relate with? Is it the guy who's talking about Doge as Buddhism? Is it the tech executive who fired all these federal workers without asking it first, or the guy snooping down to get ice cream in the middle of the night in the White House?
I mean, I've been known to go down to get ice cream in my own kitchen
from
time to time.
So
of those 3 terrible options, I guess I'll pick
those 3 terrible options.
Door number 3. No, I mean, look, there's no question that this adventure in government and politics has been damaging to Elon and his companies and his brand. And it is, I mean, until, this summer, people weren't driving around about stickers on their own Teslas about how much they hated the person who invented the car.
He talked about the horror of seeing his cars burn.
Yeah, I mean, that is, and I mean, let's be clear, no one should be burning other people's cars. That's crazy. But I think this is a real lesson for CEOs and folks who want to get deeply involved in politics in a very irrational and crash way. When you do damage to people's livelihood, there is political fallout for that. And Elon Musk has learned that better than anybody.
Fascinating. Well, how about for you? Is the takeaway Elon the sort of personal character we're getting to know here, or the guy who was wielding a chainsaw at CPAC a couple of weeks ago?
I think there's probably 2 sides, but I think the likable part of Elon that you hear about is the sneaking down into the kitchen.
Yeah.
But also there are people that that could go bring ice cream to him.
Well, the president does have a Diet Coke button. I feel like there could be an ice cream button. This is a great panel. You're going to come back in our second hour. We'll be back in just a couple. Kaylee Lyons is going to join the conversation as well, and we'll welcome our global television audience to the conversation. These are like the two most cosmopolitan federal workers of all time. Ashley Davis, Adam Hodge. I'm Joe Matthew in Washington. Stay with us. We've got a lot more to follow on the fastest show in politics. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The first departure of the second Trump administration. Welcome to the Thursday edition of Balance of Power, with news today in Washington that Michael Waltz is out as President Trump's national security advisor. I'm Joe Matthew, alongside Kaylee Lyons in Washington. Thanks for joining, Kaylee. This follows, of course, the whole Signalgate scandal, but remembering that President Trump at the time said Michael Waltz had done nothing wrong.
Yeah, even though he said he did take the blame for inadvertently adding a journalist to a group chat in which war or attack plans were discussed, he was standing by his man. But it seems that something has changed, and it's not just Mike Waltz who's going to be out, but his deputy, Alex Wong, as well, leaving a question as to who might be the replacement. Keeping in mind, this is not a cabinet-confirmed position. The president could very quickly appoint someone to step into Waltz's shoes, keeping in mind as well that I think the president in his first term had 6 either acting or official national security advisors. Turnover in this position is nothing new to Donald Trump.
For a critically important and sensitive job inside the White House, and it was, in fact, this very position that brought the first departure in the first Trump White House. Michael Flynn only lasted about 20 days. By the way, Anthony Scaramucci says Mike Waltz lasted 9.2 Scaramucci's.
Yeah, those are the math figures that are important to us here in Washington. But obviously, this has major implications, keeping in mind it comes just one day after the U.S., at long last, after what apparently were pretty incredibly lengthy negotiations, inked a minerals deal with Ukraine.
It wasn't Mike Waltz who drove that conversation. No. It was the Treasury Secretary, Scott Bessent, making us all wonder about exactly where the lines are here of authority inside the White House and who could be on the short list now. Steve Witkoff's name keeps coming up, Kaylee, but it could be a moment before we know.
And we'll get more into it this hour. But first, we have to check on the markets as well. And we do that, as always, with Charlie Pellet up in New York. Hey, Charlie.
And indeed, good afternoon from New York. May Day and earnings day as well. Apple and Amazon earnings after the bell. Bloomberg Television and Radio are going to be all over these numbers as they break shortly after 4 o'clock Wall Street time. Stocks are higher. Tech stocks rallying ahead of those reports. Right now, we have got the S&P up 49, gain there of 0.9%. The Dow up 159, up 0.4%. NASDAQ up 322, a gain of 1.9%. The NASDAQ 100 index up 1.5%. The Russell 2000 index of small cap shares up by about 0.5%. And the Bloomberg Mag 7 index ripping higher after earnings last night from both Meta and Microsoft. Right now, we have got our Mag 7 index up by 3.1%. 10-year 4.20% with a 2-year currently yielding 3.66%. Gold is down $69 the ounce, down 2.1%, $32.19 the ounce on the precious metal. West Texas Intermediate crude, little change now, $58.30 a barrel. And Bitcoin up 2.7%, 97,122 on Bitcoin. GM has cut its full-year profit outlook, citing as much as $5 billion in exposure to auto tariffs. GM shares unchanged on the day right now. And Harley-Davidson has withdrawn its 2025 outlook, citing a lack of clarity around U.S. trade policy and weakening economic conditions. The company uses the ticker HOG, H-O-G. Right now, the stock is up by 3.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington once again. Balance of Power continues. Your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. You can, of course, find Charlie checking the markets for us every day here on Bloomberg TV and radio on Balance of Power, just like you can always find us on this program at this time. And at this time yesterday, we were in the middle, or the White House was, President Trump was, of an elongated cabinet meeting. It lasted about 2 hours, in which he went around the table for every individual to speak that is in his closest orbit. And as of yesterday, that included Mike Waltz, the former Republican congressman from Florida who's been serving as the president's national security advisor. In that cabinet meeting, Waltz was praising the strength, in his words, of President Trump's leadership, talking about how honored he was to serve in that role. But it turns out, based on our reporting today and the reporting of other outlets, he will no longer be serving in that role going forward. He's stepping down as national security advisor, as is his deputy, Alex Wong.
You wonder if he knew at that moment what was going to be reported some 24 hours later. That's where we start our conversation and our coverage right now with Laura Davison, Bloomberg's Washington Deputy Bureau Chief. Before we get to our panel for analysis, we want to get to what we actually know here. Laura, Bloomberg has done a great job reporting on this so far. We should note that this is not an official announcement yet from the White House, correct?
Correct. This is coming from media outlets, including our own, who have confirmed that this is happening. But this is, a remarkable moment in that this is the first member of Trump's cabinet to leave. White House Chief of Staff Susie Wiles had been very adamant that she wanted to keep this initial team together. She didn't want to have infighting. She didn't want to sort of open the floodgates of Trump either firing people or having other people leave.
Well, and when we consider the kind of departure here, the vacancy that this fills, Laura, keeping in mind that Alex Wong left as well, do we have an understanding of who might be on the short list to replace Mike Waltz? Excuse me.
There's a handful of names being floated around. One being Steve Witkoff, who has sort of been at the forefront of all these negotiations overseas going on with Iran, with Israel and Gaza, also with Ukraine and Russia. Kash Patel, the leader of the FBI, also has been in the mix, as well as Rick Grinnell, who was sort of passed over for some of these higher level jobs in the initial wave of when Trump was picking his cabinet. He now is serving as an envoy, also as the head of the Kennedy Center. So he has a couple titles, but is someone who's also looking to move up in Trump's world.
There is a question, Laura, where there's one, could there be more? Now that we have seen the first departure, to your point, remembering that it was Michael Flynn in this same role who was the first departure in the first Trump administration, does this make it more likely that we could see others, a la Pete Hegseth, come under more pressure?
It is possible that we could see more departures now. There's sort of a feeling among Trump's aides that once he's gotten a little taste of firing someone, that there's more to come. Pete Hegseth is sort of the first person that people have turned to as a potential option here. There's sort of two schools of thought. One of that, with the firing of Waltz over this Signalgate issue, that the pressure is relieved on Hegseth. However, Hegseth, has fallen into more trouble with it. Was second Signal chat involving his wife and brother. So he has certainly had the spotlight on him as someone who could be a short-lived Trump cabinet member.
Do we have an idea, Laura, of what other kind of outside influences, if you will, may factor into this decision making? Because we know, for example, Laura Loomer had expressed concern about a number of members of the National Security Council, those who had the ear of the president, who she suggested were not loyal. Is this kind of an extension of the thinking that exists in at least some wings of President Trump's party?
Yes, there's a sort of a thinking in the White House today that, Waltz's faults here and what led to his ouster were, partially his involvement in adding a journalist to the Signal chat, but also that his worldview didn't totally align with the president, that he wasn't totally sort of on the Make America Great Again, America First train, and was a little bit, more towards the center here. And that ultimately sort of created a wedge between him and other members of the cabinet.
All right, Laura Davison, who helps run our coverage here in Washington, is our Deputy Bureau Chief. Thank you so much for joining us on this developing story. And we want to get more now from our political panel joining us today. Ashley Davis is with us, Republican strategist and partner at S3 Group, alongside Adam Hodge, Managing Director at Bully Pulpit International and Democratic strategist. Both of them actually here with us in our Washington, D.C. studio. This is fun, and it's good to see you guys. And we're all having a better day here together than I would imagine Mike Waltz is having today, Ashley. Arguably, the writing had been on the wall weeks ago. When Signalgate first emerged, it kind of seemed like he was going to be in the clear. So what would have needed to change here to have the president go from standing behind his man to no longer doing so?
Well, I'm not 100% believe that this is just about Signalgate. I think that this has many different dynamics to it. I think that Signalgate is a perfect way to say that that's what it's about. But I think that there were some other issues internally, from what I understand, just whether it is some of the policy differences, but also maybe some personality differences. But one of the things that was just said earlier that I think is very interesting that I think we should watch out for is Rick Grinnell, because he wouldn't need to be Senate confirmed. If there's anyone that thinks he's too controversial, he's very loyal to the president, has the national security background. So I don't think it's necessarily Witkoff, as everyone's saying right away. I think there are some others in the whatever, in the pipeline. Yes.
Adam, if you're Pete Hegseth, does this give you cause to worry now that the door has begun swinging, or does this actually give Pete Hegseth some cover because President Trump doesn't want to fire somebody else right now?
I think it maybe buys him another week or two, maybe a
You think the defense secretary is gone in a week or two?
I mean, I think that the noise that has been created around the Signal controversy and the fact that he put his wife and his personal lawyer on that, it's just more drip, drip, drip that the president knows is just damaging to his broader reputation. And it is been a feature of his administration where there is just tremendous staff turnover. So I think it buys him some time, but I think he's got to be really nervous. And the turmoil that you've seen at the Pentagon, it is in chaos at the senior ranks, from everything I hear from folks who are there. And so, like, that is a real, I think, problem for the president. And it also is a threat to our national security if there's chaos at the top of the Pentagon.
Well, I've seen a number of Democratic lawmakers coming out today and saying that they actually think the wrong head rolled here, that it wasn't Mike Waltz that needed to go, but that it was Pete Hegseth, for what we understand are more to what you were just alluding to, kind of violations, if you will, or questions around his use of signals. So could this actually have the reverse effect of actually intensifying the pressure on Pete Hegseth, because everybody is saying, okay, but what about the other guy?
I mean, I think that Mike Waltz had a lot of, like, say what you want about his personal politics in Florida. Democrats felt like he was a serious person. He really could, like, have a real conversation on national security issues. And there's no question that after he goes, there's a lot of questions like who else fills the void. I mean, Rick Grinnell, to your point, Ashley, I mean, that gives a lot of people pause that he's not a real serious person to be leading our national security in the White House, advising the president. So Steve Witkoff is someone who has maybe a little bit more confidence, but ultimately this ladders up to the president. And Democrats certainly feel that the chaos has been a feature of all of his administration, including on the tariffs. Let's not forget.
Mike Waltz, quite a resume, right? A Green Beret, member of Congress. He was very close to the president, said to be loyal to Donald Trump. Washington's a funny place. Where does someone like that land? Does he have another job in Washington or in national security? What does he do?
It continues to, it's going to, I'm going to wait and see how many more stories come out of maybe the real reason why that he was let go.
You're convinced it's not Signalgate?
I think it's one tool in the toolbox. I don't think it's everything, because if he's looked at as not having a relationship with the administration anymore in any way, obviously that's going to hurt him for the next 3.5 years. I don't know what he's going to do. He could write a book. He could go sit on some boards, but it's going to just be difficult, and it's going to be a tough time.
There is a Senate race in Florida and a governor's race in Florida in the next cycle. So
You want to primary Byron Donalds in the governor's race?
And if you want to take, I mean, you kind of need Trump to endorse you in Florida.
That's true, yeah. Maybe a tell-all.
Well, as happened with the man who literally just replaced Mike Waltz in the House of Representatives in a special election last month. When we consider, though, Ashley, the point that Adam was making about even some Democrats thought Mike Waltz was at the very least a serious hand here and brought credibility to national security issues. How do you think his departure might reshape the way in which this White House approaches issues of national security? Questions around Ukraine, for example, but the Middle East too.
I think that we need to see, number one, who he's going to be replaced with, and I'm assuming that you'll see a replacement pretty soon. I mean, this at least is a position that does not need to be Senate confirmed, which is much different. You probably have someone that's already been somewhat cleared in regards to the backgrounds and things that even go in the White House. So, and because it's such a serious position in regards to our national security, I think we see who it is by the end of this week, for sure.
Kaylee, though, you touched on something at the beginning about the amount of turnover we've already seen and Laura Loomer's role in there. I mean, and it's not lost on me that along with Waltz, his deputy is also out.
Alex
that really raises a lot of concerns.
I don't know if we're going to hear from Donald Trump on this today. It wouldn't surprise us if we did. They have tried to make transparency a hallmark here. Kaylee and I spend most of our days with 2 shows to show for ourselves here, throwing to live events with Donald Trump. It was 2 hours worth the other night, an hour and a half yesterday. And I wonder your thoughts here.
Did you get out the popcorn?
Well, sometimes we do, actually. We're pretty good popcorn here in the Bureau. I guess I want to get to you both as professional communicators in the style in which we're seeing information disseminated. Because as you all know, you're on TV a lot and public speaking. You start talking in public for 3 hours a day, you're going to end up saying everything out loud at some point. We had an instance like that yesterday when the president was talking about tariffs and the prospect of empty shelves. Listen to what he said.
Somebody said, oh, the shelves are going to be open. Well, maybe the children will have $2 instead of $30, you know? And maybe the $2 will cost a couple of bucks more than they would normally. But we're not talking about something that we have to go out of our way. They have ships that are loaded up with stuff, much of which, not all of it, but much of which we don't need. And we have to make a fair deal.
That was a remarkable moment, and you're going to hear that played back a lot. Certainly, if we start having supply chain issues, prices increase. Actually, maybe the children will have $20 instead of $30. The ships are loaded up with stuff, much of it we don't need. If we have a problem around the holidays, and you're sitting in the communications office, how do you contain this?
I'm sure that there's lots of cringing that was going around in that room, because obviously it's something that he shouldn't have said. I do remember, though, the first term when he was doing tariffs, that Christmas was going to be canceled, or Halloween, I think it was going to be canceled then too, and it wasn't. So we'll see what happens. But obviously, it's not something he wants to say. But
did that reveal a truth, though, that he's kind of worried about that?
I don't think he has any. I really don't know if there's any idea. I mean, I think this is a wait and see moment. Obviously, there was Kevin Hassett today said that we'll probably have something announced by the end of the day in regards to tariffs. We're supposed to have India, Japan, and South Korea within the next couple weeks. So we'll see what happens. But just on the side note of that, Trump's strategy is to talk and put so many things out that you can't even concentrate on one. And I mean, I'm actually surprised that I haven't. We could do a whole show just on the Christmas toys.
Indeed.
Normally.
Yes.
If that was Biden, right? Or someone that didn't go out in front of the
Jimmy
press
Carter's
as
rolling
much.
on his over in his grave. How about that? Like if Jimmy Carter, this is the version of like put on a sweater because
turn the heat down.
This is the exact same thing, and I guarantee that will be part of lots of Democratic ads over the next several months and in the next cycle. I think what's missing in all of this, though, is just the broader uncertainty in the market and the broader concern from CEOs who are increasingly speaking out because it is hitting their bottom line. I mean, those empty store shelves mean that Walmart or Amazon or other companies aren't selling the things that they would otherwise be selling. That dents profits. And so I suspect over the next few months, you'll see more CEOs and executives speak out about this is the damage that this is causing to our bottom line, to the economy, to our ability to hire more workers. And they'll also stress, though I think if they're smart, the investments that they're still making across the U.S. where they can to help placate the White House.
Well, will the president, though, if we do see corporate profits getting squeezed, if we start to see economic impact, if kids can't get the toys they want for Christmas, just say this is still a Joe Biden problem? Because that is what he suggested yesterday. This is not his economy or his stock market.
Yeah, but that's just a bunch of baloney. I mean, like there's anybody can assess. He's president. The tariffs are all his fault. He put them in place. That's just a bunch of nonsense, and I think that most people can read right through it. He's president. The buck stops with him, theoretically, and on the tariff stuff, it definitely does.
Would you be advising blame the predecessor?
No,
here?
I don't think. Everyone does this the first quarter, first half of the year. You can't do it no matter what party you're in. I mean, you're the one that's in charge now, whether it's tariffs or anything else. You can't blame the person that was before you because it doesn't matter. They're not in office anymore.
And the public's already blaming him. His polling on the economy has tanked because of this.
But I do want to say that one thing that this does is this puts tremendous pressure on Congress to get the tax cuts permanent, and I think that the president realizes that the tariffs, especially if we don't have major trade deals, we have to get this done in regards to Republicans in the House and Senate. So I think he's going to be putting a lot of time and effort. He has no ability to let this fail.
Well, the gears are turning on Capitol Hill. We'll have more on that a little later on this hour. This is a great panel. Thank you both. Ashley Davis, Adam Hodge, covering the news of the day with Michael Waltz, now apparently out as the president's national security advisor. Bloomberg News is now reporting that as we wait for an official word from the White House as well on a potential trade deal. Kevin Hassett saying that could come today as well. We'll have a lot more ahead right here on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks advancing after last night's robust tech reports, specifically from Meta and Microsoft. After the close of trading today, we will be getting earnings from Apple and Amazon. Yes, Bloomberg Television and Radio are going to be all over those numbers as they drop. The Dow, the S&P, NASDAQ are all advancing. S&P right now is up 66 points. That is a gain of 1.2%. NASDAQ up 379. That's a gain of 2.2%. The NASDAQ 100 index up 1.8%. And the Dow up 267, up by 0.7%. The Bloomberg Mag 7 index, after Microsoft and Meta last night, surging today by 3.5%. 10-year 4.20%, with the 2-year 3.66%. Spot gold is falling $70 the ounce, $32.17, a drop there of 2.2%. And West Texas Intermediate crude up 0.7%, $58.61 for a barrel of WTI. Morgan Stanley shares are gaining 1.7%. Morgan Stanley working on a plan to add cryptocurrency trading to its E-Trade platform. And Rory McIlroy launching a sports fund at TPG Sports with investment firm TPG, which has an anchor commitment from an Abu Dhabi-based investment firm with about $110 billion under management, joining an increasing number of current athletes delving into asset management. Recapping, the S&P now higher by 1.2%. Balance of power continues right now, and back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you very much indeed. Welcome back to Balance of Power on Bloomberg TV and Radio. We are live in Washington. We're at the White House just moments ago. President Trump wrapped up an event marking the National Day of Prayer, in which he welcomed a number of high-profile individuals to the White House Rose Garden, including the Speaker of the House, Mike Johnson, who got a special shout-out from the president. Trump saying that he's done a great job and is working very hard on a great, big, beautiful bill, speaking to the budget reconciliation process, which is hot underway on Capitol Hill. And the president actually also noted a meeting that had just taken place with some key figures in that process, including the chair of the House Energy and Commerce Committee, the one that will be charged in figuring out the Medicaid question when it comes to how much to cut to offset the massive tax cuts Republicans are looking for. To hear the president say it, Joe, the final details on the tax bill are coming together. We just don't know exactly what those details look like yet.
Well, no, we don't. And this could be a long and drawn-out process. It is important, though, that markups have begun. So we're actually getting to some real work that's taking place in the House, remembering that the whole point of reconciliation is to kind of get around the filibuster and maybe the opposing party. So we have an important conversation and an opportunity to spend some time with a high-ranking official in that party. Susan Del Bene, the congresswoman from Washington's 1st District, also chair of the DCCC, tasked with getting Democrats elected and retaking the majority in the midterms. It's great to have you back with us, Congresswoman, as we consider the process that's underway right now and the point that we've already established here. Reconciliation is not exactly supposed to be a bipartisan affair, but will Democrats have any seat at the table to try to control the language that goes into this legislation that's currently being written?
Well, we haven't seen the language, so to your point, I think that the language is going to come out at the last minute and go straight into committees to be marked up. So this is anything but a bipartisan process, which is really unfortunate, because we should hear from folks all across, representing districts across the country, and debate issues so we come up with the strongest policy for the American people. But that's not what this is about. This is about continuing to move forward Donald Trump's agenda. It's not about getting feedback from constituents or stakeholders. It's about doing what Donald Trump is telling Republicans to do. So I think we're going to see some kind of really damaging legislation come out. And you talked about Medicaid, devastating cuts to Medicaid that will hurt families all across the country.
Well, and when we consider the committee that you sit on, specifically, Congresswoman, the Ways and Means Committee, have you heard anything from the chair, Jason Smith, about what he is intending exactly to mark up, or when that markup will be happening?
No, in fact, we're kind of waiting to hear when the markup is going to happen. He has indicated that he might know when it's going to happen, but hasn't bothered to tell folks yet. I think they're going to try to jam things through very quickly, release a bill right before we meet in committee, kind of push that through and not really have really engage in debate. We're going to try to continue to highlight what we're hearing across the country, that folks want a tax code that's fair, that supports families across the country, that we are making investments in our kids, in workers, instead of giving tax breaks to the wealthiest and to large corporations. Unfortunately, that seems to be their focus. And we'll see when they roll it out, but I think that's what we all expect to see.
Well, Congresswoman, Democrats may have a big role to play here in potentially avoiding a default. We're going to get an X date in the next bit of time here when we have a better sense of when we're actually going to hit the debt ceiling. And if that matter has to be handled outside of reconciliation, then Speaker Johnson's going to have to work with people like you. What will Democrats look for in exchange for votes on raising the debt ceiling?
Well, I think we are going to continue to push for the things that we are important, standing up for programs that help our communities. We've seen this administration with rubber stamping from House Republicans strip programs that people rely on, dismantle Social Security, these cuts to Medicaid, ripping apart our institutions, firing people in the federal government with no plan, no rationale, and raising prices. The tariffs that are raising prices on families across the country and damaging our economy. The number one issue that Republicans said that they would handle for families in this last election was to lower costs. And President Trump said he would do it on day one. Broken promise after broken promise. We're seeing great damage to the economy that hurts families across the country. So we're going to continue to stand up for policies to help families and to fight against just the damage that this administration continues to put on due to the American people. And again,
I just want to follow up on the Medicaid issue, though, Congresswoman, because the president has said, though, that there would be no Medicaid cuts. The speakers said that as well, right? Are you hearing from Chip Roy or other members who are demanding it?
If you look at the budget that Republicans passed in the House and in the Senate, requires massive cuts to Medicaid. That's what they voted on. That's what's on the table. And now we'll see what they put forward in this reconciliation bill. But their budget already called for massive cuts to Medicaid.
If we could return, Congresswoman, to what you were just saying about the economic damage that could be done here, the greater the degree of that economic damage, does that mean the wider the map for you as you try to retake the majority next year?
Well, when you listen to people across the country, you hear outrage from people across the country, and they're scared. They're scared because they see the damaging policies that this administration has put forward, attacks on programs they rely on, costs going up. And folks want people who are going to fight for them, not folks who are blindly loyal to Donald Trump. So absolutely, we have opportunities across the country. We put out our map, the districts in play, where we think we have opportunities to flip districts. It's all over the country. And as we've seen in special elections, Republicans are losing ground. And I think we still have opportunities to continue to expand our map as we look forward, because people want to see a change. They want a Congress that's going to do its job and stand up for the American people. We are a co-equal branch of government. We are not a rubber stamp for the Trump administration.
So politically speaking, then, as chair of the DCCC, are Trump tariffs the best thing that happened to Democrats?
Well, Trump tariffs are devastating for families. We're
politically
seeing costs
speaking
go up, but this is about what is right for the American people, and we're going to hold them accountable. We're going to hold them accountable for the damage that they're doing. People are outraged and they're scared. If Republicans actually held town halls in their districts and listened to their constituents, that's what they'd be hearing, and that's what we stand for. And we're going to hold them accountable and make sure that they have representatives who are going to stand up for them.
Well, and when we consider the makeup of those representatives, Congresswoman, how many seats realistically do you think you could pick up in 2026? What would you count as a landslide midterm election?
You know, we need 3 more seats to take back the majority. Our priority is making sure we have the gavels, that Hakeem Jeffries is Speaker. Hakeem Jeffries And we're going to fight for every seat so we have a strong majority across the country. Our districts in play, the maps where we're on offense, we have 35 districts across the country where we feel like we have opportunities, and we will continue to update that as Republicans continue to do damage. That's our focus, but job one is to make sure we have the gavels so there's a check on this president and there's a part of the federal government that is standing up for the American people.
You mentioned the town halls, Congresswoman, and indeed Republicans are holding fewer of them. Are you encouraging your members to hold more as we approach Memorial Day?
Well, the DCCC has been working with the DNC, with local and state officials in districts across the country to have town halls so people's stories can be heard. People want to talk about the challenges they faced when there have been cuts to the Veterans Administration. They struggle to access their veterans benefits, the struggles that they face because of tariffs and rising costs, the impact that the cuts that this administration have had on their communities. It's so important that we hear the stories and people understand what's happening on the ground. Republicans may not want to hear that, but we are hearing it everywhere, and we want to make sure people have an opportunity to be heard.
Well, when we consider Republicans potentially criticizing Republican members, there's also some criticism going around inside the Democratic Party right now. Congresswoman David Hogg, who serves as one of the vice chairs of the DNC, of course, a survivor of the Parkland school shooting, announced he's whipping $25 million into play to unseat incumbent Democrats. Have you spoken to him about that?
You know, I think Democrats are united in making sure we take back the House. That is job one. That is our focus. That is what we are working on across the country. And again, our number one priority has to be making sure that we have a check on this president and that we have folks who are going to stand up for the American people. So we are united in doing that and are going to continue to move forward to make sure that we have the gavels as we head into the next Congress.
I want to ask you about the president's attack on Act Blue, a major online donation platform for Democrats. The president planning to sign a presidential memorandum here to crack down on foreign contributions in American elections. What do we need to know about this?
You know, I think it's unfortunate, not surprising to see Republicans and the president continue to attack elections across the country to try to prevent voters from having access to the ballot, from trying to prevent people from being able to be involved in campaigns. We absolutely need to make sure that we're standing up for voting rights across the country. And we're going to continue to see baseless attacks from this president on vote by mail, on democratic institutions. We need to continue to make sure we stand up to that and make sure that people across the country have access to the ballot because their voices need to be heard.
All right, the chair of the DCCC, Congresswoman Susan DelBene, Democrat representing Washington's 1st District. Thank you so much for joining us here on Balance of Power. And we still have more ahead as we turn back to Mike Waltz out as National Security Advisor, at least unofficially. We'll have more on that on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. First trading day of the brand new month. And we have got the Dow, the S&P, NASDAQ. They're all advancing right now. 60-point gain on the S&P, up now by just about 1.1%. Dow Industrials up 232 now, higher by about 0.6%. The NASDAQ Composite Index up 342 points for NASDAQ. That is a gain of 2%. The Bloomberg Mag 7 Index is surging 3.2%. This after earnings last night from Meta Platforms and Microsoft. Meta up 4.3%, Microsoft up 8.5%. Of course, after the close of trading, both Apple and Amazon will be checking in, and we got you covered on Bloomberg Television and Radio. The 10-year 4.20%, the 2-year right now 3.67%. Spot gold is falling $75 the ounce, down 2.3%. Gold now at $32.13 the ounce. West Texas Intermediate crude up 0.4%. WTI 58.44 a barrel. Brent, the global benchmark, higher by 0.4%, 61.33 right now on Brent. And Bitcoin up $2,100 to 96,760 for Bitcoin. That is a gain of 2.3%. Ryanair CEO Michael O'Leary has told a U.S. lawmaker that the airline would consider canceling its 330 Boeing aircraft orders if tariffs significantly affect the price of the planes. O'Leary wrote the letter in response to a warning from U.S. Representative Raja Krishnamurthy, who told Ryanair not to buy aircraft from Chinese playmaker Comac for security reasons. O'Leary says he would consider buying from Comac if he could get better terms, emphasizing the need to obtain the lowest cost for Ryanair's business model. Ryanair ADRs, they're up right now by 0.6% on an up day for the rest of the market. Boeing shares are little changed, but down just under 0.1%. General Motors has cut its full-year profit outlook, citing as much as $5 billion in exposure to auto tariffs, among the biggest financial hits revealed by any company so far from President Trump's trade war. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie, thank you so much. Keeping an eye on the markets for us, as always, here at Bloomberg. And of course, one of those market moves today is inclusive of NVIDIA, the stock up about 4%. After we saw NVIDIA CEO Jensen Huang actually in Washington yesterday. He got up early in the day with our colleague Anne-Marie Hordern on Capitol Hill and then made his way over to the White House for the president's big Investing in America event, marking, of course, 100 days in office and the trillions of dollars in investments he says are coming to the U.S. Part of that, of course, are commitments NVIDIA is making, though some of that money already had been announced. But Jensen Huang actually went up to the podium.
Sure did.
And talked about the importance of investing not just in manufacturing, but in technology specifically, as NVIDIA, of course, is trying to ingratiate itself with the White House. That is also looking at policy that impacts NVIDIA's ability to sell chips in certain places.
Now we're getting on to something here. If you can see him there, that was from yesterday in the cross hall at the White House. If you're with us on Bloomberg TV or on YouTube, he did not have the leather jacket. He did have a suit and tie. And remarkable, I want to get into this with Mike Shepard, Kaylee. This was less than 24 hours ago, and all of a sudden there's a headline on the terminal. U.S. weighs easing NVIDIA chip curbs on UAE as Trump plans visit. We've been talking about turning the screws in a more strict way. We actually increasing export controls. So maybe we're going in the other direction now that these two men got to spend some time together. Mike Shepard with us in Washington right now. Is it as simple as that? You pay a visit to the White House, spend some time with the boss, and now Mike's writing a good story about you.
Well, that's certainly what Donald Trump would like the world to think, that simply paying a visit and paying homage and maybe delivering some of the things that he wants to hear, including, Kaylee, as you mentioned, investments. NVIDIA was among the companies that was singled out yesterday during this White House event titled Investing in America. And NVIDIA has committed to spending up to $500 billion on producing AI infrastructure here in the U.S. Not just the chips themselves, but the servers, the whole package, the whole enchilada that goes with one of their assemblies. And that's a lot of money, and it is something they are trying to fulfill here together with Taiwan Semiconductor Manufacturing Co., which actually produces and builds the things that they design. But in return, what do they get out of it? They are concerned at the same time about what they're seeing potentially happening abroad. New rules that the Biden administration published right before their term ended, this is like a week before Donald Trump took office, would set different levels of access for countries when it comes to AI chips, especially those made by NVIDIA. And that means that for NVIDIA, the stakes of this rule and how it ultimately gets implemented are really, really high. They depend on China, of course, as a significant market. It is increasingly closed off by U.S. export controls, but their concern is that other countries, a number of other countries, including the UAE and others, Israel as well, may also face higher restrictions, limits on how many of these sophisticated chips they can buy.
Well, and it is the UAE that Bloomberg has some new reporting on today ahead of the president's trip there in just a couple of weeks. He's looking at restrictions on chips we sell to the UAE specifically. We sell them fighter jets, Mike. Why can't they have the chips, right?
Well, and that was one of the questions that our reporting turned up the president is having asked. If we can sell them the F-35, why can't we sell them unlimited quantities of these AI chips? And really the answer is the concern, of course, over China, and that there could be some leakage of technology ultimately to China. As a way of addressing that, G42, which is one of the big investment vehicles in the Emirate, they had cut off ties and worked with Huawei Technologies, which is one of the perennial targets here in Washington. And that was seen as maybe a step in the right direction, but maybe not enough just yet. The Biden administration, to be fair, had been in discussions with the Emiratis about possibly dialing back future chip restrictions, but those talks ultimately ended after President Donald Trump won the election in November, and now they're having to kind of pick up where they left off. But they are getting a little bit of help here from Jensen Huang, who wants to be sure that NVIDIA's chips somehow don't lose key markets and access to markets. And what he's arguing is that if you cut us off, countries may be forced to turn to China as a source of almost as sophisticated chips as ours.
All right, Bloomberg's Michael Shepard, thank you so much, joining us with Bloomberg's exclusive breaking reporting from earlier today. Thank you so much. Of course, we've gotten a lot of that lately. We also were dealing with breaking news on the late edition of Balance of Power last night as Bloomberg reported that the U.S. and Ukraine had at long last actually signed the natural resources deal that the U.S., of course, has long argued means that it has a vested interest in Ukraine and its infrastructure, in its mining capacities, and therefore would act as a kind of security guarantee. And when that news broke, we actually got real-time reaction from Michael Allen, former national security advisor to President George W. Bush, now with Beacon Global Strategies. And this is what he told us.
In order for a peace to become everlasting, I think the Ukrainians have to be able to deter the Russians, and they're never going to be able to deter the Russians unless they have enough of a treasury to support enough of a fighting force in order for Russia and for Vladimir Putin to say in the future, you know what, this is too risky for me to try again. And so if they feel like they can purchase military assistance on their own and even reimburse the United States for things that we can uniquely supply, I think it's good for peace ultimately.
We want to get more reaction now from Kelly Grieco. She's senior fellow at the Stimson Center's Reimagining U.S. Grand Strategy program and is here with us on Bloomberg TV and radio. Kelly, welcome back to Balance of Power. Now that this deal is signed, what real security guarantee do you think it does provide Ukraine? Is simply having a U.S. vested interest, potentially U.S. personnel on Ukrainian soil, enough of an actual deterrent to a Russian aggressor?
Well, thank you for having me. I'm afraid that I'm not going to be giving you good news about security guarantees. I don't think this deal offers anything in the way of something that could be construed as a security guarantee. This is a largely symbolic deal. Even if there are eventually U.S. personnel meaning really civilians, right, on the ground exploring mining, it's really not a security guarantee. I just don't see this as actually providing anything credible in the way that it ties American hands moving forward.
The White House has framed this as kind of an indirect security guarantee, Kelly, right? As you suggest, U.S. contractors at some point will be teaming in Ukraine. How dare Russia attack Ukraine with Americans on the ground? I guess my question, though, is how long it would take for these contractors to actually dig in. It could take many, many years to get working mines and processing in place.
Yes, I mean, I think the first question is, are there U.S. companies that are interested in doing this, given the security situation? I mean, that's the first thing, right? And the second is, from a business perspective, do they see this as a potentially profitable enterprise? Because there are real questions about exactly what is there in terms of minerals, because these are based on a lot of Soviet, surveys, and also is it going to be worth the investment, right? It'll take a lot of startup costs to do this. So, I think that's one set of questions, right, about whether we're going to see this actually happening. But assuming it does, and there are contractors on the ground, I'll just say that, we had hundreds of thousands of U.S. military forces in West Germany during the Cold War, and there were always questions about whether that would be sufficient to draw us directly in to a military engagement with the Soviet Union. So I'm very doubtful that U.S. civilians being there, to essentially try to gain profits, economic opportunity, that would be a death of, tens or even hundreds or even thousands might be enough to draw us into a military conflict. I just don't see that happening.
Okay, so your skepticism around this being something that can provide a long-term durable peace is duly noted, Kelly, but do you think in the short term it can help precipitate a peace deal of some kind between the U.S. and Russia? Does this still put some incremental pressure on the Kremlin?
Yeah, so I think this deal does two things. As I said, I think it's symbolic, but it does two things on a symbolic level that are useful. One, it gave Donald Trump a sense that he was getting something back from the Ukrainians, and that seemed to be very important to him. And I think the other thing it did is it actually did signal some level of repair in the U.S.-Ukrainian relationship from what we saw, in that dramatic White House blow up. And so I think the fact that, it seems like the United States and Ukraine have restored their working relationship is really important as a signal. And there is a couple lines in the agreement itself, the text that the Ukrainians released, that I think is a signal to Russia. One being that it refers to Russian full-scale invasion of Ukraine, which I think is quite significant. And so we see some hardening language that the American side is willing to use in talking about the Russians, which I think is a signal that we're going to see more pressure on Putin to actually negotiate in a serious way.
Kelly Grieco, I want to ask you about what's going on in the Red Sea, because with so much news, it's not something that's been on the front page lately. The fact is the U.S. forces continue to attack Houthi rebels in Yemen, and the UK is now participating in joint operations. This is, of course, the same attack that was referred to in the Signalgate scandal that has apparently helped to contribute to the end of Mike Waltz's career as National Security Advisor at the White House. There was a report just a couple of days ago that the USS Harry Truman had to take such evasive measures after being shot at by Houthi rebels that an FA-18 fighter jet actually fell out of the boat while it was being towed into the ocean, $67 million into the drink. What are we not hearing about that's taking place in the Red Sea right now? How active are our forces? And what kind of threat are they under when we hear about missiles being fired at aircraft carriers?
Yeah, so, this morning I was reading a story that said we've now hit 1,000 targets, which is extraordinary to me, particularly because earlier this week I read another report saying it was 800. So, in a span of a few days, it sounds like we've hit another 200 targets. What we're seeing is a lot of use of force, a lot of strikes are being conducted, but it's actually not generating an operational strategic effect in terms of reducing the Houthi threat to the Red Sea. And of course, this is coming at enormous costs, and not just in terms of those missile strikes, but also these kinds of incidents, one F-18 being shot down accidentally by a carrier, and another, this case where the aircraft went off the side, into the Red Sea itself. We call those soft kills in the military field, in the sense that, it wasn't directly shot down by the Houthis, but the Houthis get, credit in a sense for the loss of 2 F-18s because they wouldn't have been lost other than the fact they were participating in these operations. So this is enormously expensive for us, and it's not achieving an operational strategic effect. I can't tell you why we're still doing this other than that it seems that we want to be doing something about the problem and projecting some level of strength. But if the goal is to, preserve the Red Sea and traffic of the Red Sea, that's clearly not being achieved.
Wow. Kelly, it's good to have you back. Kelly Grieco, Senior Fellow at the Stimson Center's Reimagining U.S. Grand Strategy Program. Good to have you with us right here on Balance of Power here on Bloomberg. We're still in waiting mode. We could have news on trade later today. And when I get back here with Kaylee a little bit later on today, we might be talking about that, Kaylee. Kevin Hassett said there would be news on tariffs at some point before the end of the day. Japan, India? What do we think?
I don't know. Hasn't gotten more specific than that, but hopefully we'll get some news. And we're also looking, of course, for official confirmation from the White House, from President Trump himself, that he intends to oust his national security advisor, Mike Waltz. So we have much to get to later on. We'll be back at 5 p.m. Eastern Time. In the meantime, Bloomberg Business Week Daily is straight ahead right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, this is Bloomberg Business Week Daily for this Thursday, May 1st, first trading day of May 2025. And yeah, we kind of have a rally underway, but gotta say, folks, we are off our best levels of the session.
Still, I think it's fair to say thanks, Mega Cap Tech, for the move higher.
Send a thank you note?
Yeah, NASDAQ Composite up 2%, the S&P 500 up 1%. We're also seeing, though, Carol, yields across the curve move higher, especially those yields on the front end. 10 basis points to the upside on the 2-year right now.
Yeah, some big movements. So we got a lot to tackle. Don't forget, we did have earnings from Microsoft and Meta. They are rallying in today's session. We've got another dynamic tech duo reporting after the closing bell. We're talking about Apple and Amazon. Apple a little changed ahead of it, but Amazon, it started rallying after some of the earnings last night, and it is still up about 2.9%. So this hour, first of all, we're going to kind of go backwards. Meta and Microsoft, that's lifting stocks. So what you need to know, and then we're going to get into a preview of Apple, which does, as we said, reports after the closing bell today.
Yeah, expecting those numbers around 4:30. We will, of course, bring those to you live as we get them on Bloomberg Business Week Daily and Bloomberg Television. Plus, we're talking Elon Musk because he recounts his free reign at the White House as the Tesla board chair denies a report that it's looking for a CEO to take Elon's place. Big news yesterday.
Yeah, our reporter talking to him. And then we're going to get into a great read on the consumer, Wayfair's CFO on the quarter, the outlook, and as we said, what consumers have been buying and what they might be buying or not in the future. We'll see what she has to say. First up, though, let's get to the trade. What's going on the equity side, the bond universe? Here's Charlie Pellet.
Hi, thank you very much indeed. Strong tech earnings boosting the U.S. stock market today with the Dow, the S&P, NASDAQ all rallying. We'll have a whole lot more on those tech earnings coming up for you in just a moment with our Mandeep Singh. But here's where we stand. The S&P right now is advancing 1%, keeping it all in context as a baseline, up 57 right now, 56.26 on the S&P. The Dow up 195. Dow Industrials up 0.5%. NASDAQ, though, higher now by 2%. The NASDAQ 100 index up 1.6%. The Bloomberg Mag 7 index up 3.2%. Meta's up 4.5%. Microsoft after earnings up by 8.7%. And the big events, Apple and Amazon after the close of trading. Complete coverage on Bloomberg Television and radio when those numbers drop. The 10-year 4.22% with a 2-year currently yielding 3.70%. Gold tumbling 2.3%. Spot gold down $74 the ounce, 32.13, and Bitcoin right now up 2.5%, 96,895. Crude West Texas Intermediate up 0.6%, 58.57 a barrel. The U.S. is considering easing restrictions on NVIDIA sales to the UAE, with President Trump potentially announcing the start of work on a bilateral chip deal during his upcoming trip to the Gulf. NVIDIA right now up by 4.1%. And briefly, Kimberly-Clark will invest $2 billion in American manufacturing sites. That, according to the Wall Street Journal. KMB on the ticker. It is down now by 1.1%. Recapping, stocks higher. S&P getting a lift from tech stocks up by 1%. NASDAQ up 2%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Charlie, of course, breaking down the tech trade because, yes, indeed, shares of Meta Platforms, Microsoft, have been rallying really since last night, just after they posted earnings. I'm looking at Microsoft up about 8.7%, and Tim, Meta Platforms up about 4.5%.
Yeah, well, let's talk a little bit about what happened with Microsoft. Customer demand for cloud services has held steady. Meta Platforms jumped after the company's advertising sales quelled Wall Street concerns. Let's bring in Mandeep Singh. He's Bloomberg Intelligence Senior Tech Industry Analyst. He joins us here in the studio. We spoke to you yesterday, Mandeep, before the calls. Yeah. A big question I think a lot of investors had was, what are we going to hear from Microsoft in terms of guidance? What did we get?
Well, Microsoft's guided to Azure growth accelerating in the next quarter, and next quarter is their last fiscal quarter for this year. So, look, I think the overall print suggested that cloud demand, the traditional cloud demand, is getting a bump because of the AI share that they are gaining when it comes to generative AI. So that 35% growth you saw, you could see an uptick in the next quarter because AI is 16 percentage points of growth. So it's almost half of the Azure growth. And Azure is like 1/3 of Microsoft's overall revenue. So
you talked about this. This was
yeah.
showing monetization of AI, right?
Yeah.
Microsoft clearly showing it.
Yeah. I mean, look, and the best way to frame this is Microsoft has got the cloud side, which is the application side.
Right.
Azure is the infrastructure side. So they are one of the biggest adopters of AI. So they have the infrastructure and they are deploying it in their Office 365, and that's why they are doing so well.
Can I ask you, is Microsoft a growth company again?
Well, with these kind of prints, they certainly are. I mean, how do you explain, again, Azure, when people talk about it, it's an $80 billion run rate business growing at 35%.
It's killer.
And
right?
It is. And so, I mean, that's why these companies, the Mag 7, are so special because of the kind of growth rates they can show, as well as the free cash flow they print.
Are they special too, at least this company? Is it special because it is insulated from some of the concerns that Main Street could be having right now? We'll get to Meta Platforms in just a second, but is Microsoft insulated from economic challenges here in the U.S.?
Absolutely. I think software businesses are the most kind of insulated businesses when it comes to, you know, the cyclical downturns. And that's where, even though we had great prints last night, there is an element of pull forward. Look, everything got pulled forward. That's why Meta also did so well. That's why Microsoft, because everyone knows that there is uncertainty when it comes to 2Q and what transpired.
That's why GDP wasn't so great,
So does
because
that-
everything got pulled forward.
So should we assume then the current quarters? You said they guided Microsoft for the current quarter looking still good. So we can't make the jump that just because this quarter there was some pulling forward, or the last quarter, that next quarter, this current quarter is going to be bad. We can't make that jump yet.
And AI decisions, I would say, are somewhat longer term than current week or next 2 weeks. So even though you have visibility for next quarter, the second half visibility, the calendar second half visibility is still low. Nobody knows if it's going to continue at this pace.
I got to say, because of you, Tim and I have been playing around so much, and I know I've said this to you before with like ChatGPT and stuff, and actually finding it useful. So I do feel like all of a sudden, not that we're the arbiter of like the world, but I mean, it gives us an indication that increasingly people are saying, oh, I get it. Here's what I can use it for.
I mean, look at the amount of code that Microsoft said AI is writing. 30% of the code, incremental code that is written in Microsoft is written with AI now, AI tools.
30%
of incremental code.
Okay, got it.
Carol's a huge gamer, so she was like, you got to ask about the Xbox price increases.
I'm working on it. Addict,
okay,
that's me.
They're raising prices for its Xbox games, consoles, and accessories amid broader uncertainty within the gaming industry. Not immune to supply chain challenges, not immune to tariffs. Is that notable for investors?
I think that may be a sign of what's to come with Apple. I mean, look, so far we haven't heard about any price increases from Apple, which is the biggest consumer device company. But at some point, I feel tariffs, if the reciprocal tariffs come back in July, which is the extension we have so far.
Right.
And it's not as if we have backtracked everything when it comes to tariffs. So this is not too far out. But at the same time, the result of it was there was a pull forward in demand across the board. Yes. And so that's where I just feel like thinking, oh, everything is great, you will see accelerating growth throughout the year, it may be a false assumption here.
Should we talk Meta?
Yeah, let's talk Meta, because I think there were a lot of concerns about what happened with Snap earlier this week.
Yeah.
Meta basically said, don't be concerned about us.
Yeah, and that's where I think Meta, just because of their sheer size in terms of users, I mean, the core business, 52% margin, you know, when your business is accelerating 16%, so, and it's not a small business, you know, $160 billion
to move
run
that,
rate.
right? To make
so it is, and that's what gives them the cash cow when it comes to, you know, raising their CapEx. I would have thought stock would have turned down because they raised their CapEx, which has happened to Meta in the past.
That's
Whenever
right.
they have raised CapEx, it's not always that the stock goes up. But this time, the street was okay because they talked about, you know, how they plan to use Llama and LLM, and still we don't know whether it's going to make money in terms of how Microsoft's cloud business is growing.
Right.
But at the same time, they're getting the benefit of doubt because the core business is doing so well in the face of uncertainty.
Pretty wild, right? I know. We talked with you after the numbers, and it just like the enthusiasm, at least among the street and investors, still there. Mandeep, thank you. Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst right here in studio. All right, from Meta and Microsoft to Musk, we go. How's that for alliteration?
Hey, 100% A+ for you, Carol Nasser. Tesla's chair denied a report that said board members started a search for each CEO to succeed Elon Musk, saying directors are, quote, highly confident in his abilities.
All right, at the same time, as Elon has promised to spend more time at his company, Musk will maintain a presence in the White House in the president's inner circle and will continue to work on the initiative from his micro office in the West Wing. Both of those stories are among the most read on the Bloomberg. Let's get to it. Lots to cover. Bloomberg News senior reporter Jennifer Delowy is with us. She is at the White House, also here in studio. Bloomberg Business Week columnist Max Chafkin, co-host of the Elon podcast, Elon Inc. podcast, and the author of The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power.
Max is in our macro office, not our micro office.
Our macro studio.
Yeah.
Max is going to come in just a moment. Jen, we got to start with you. You talked with Elon along with some other reporters, set the scene, the chat yesterday, what you all asked about, and what he said.
Well, I mean, this was really a remarkable opportunity, remarkable because we haven't had many of them, to hear directly from Elon Musk as he discusses his government role. Of course, he's been at, cabinet meetings, he's been in the Oval Office and spoken to reporters occasionally. But in this moment in the Roosevelt Room with other reporters, he was really opening up much more about what he's done over the last 100 or so days, leading the DOGE effort, the Department of Government Efficiency program that he's been running for President Trump. And, he spoke quite colorfully about, the experience, not just the $160 billion in government savings that he says he's been able to root out with this program and cut. He told us about flying on Air Force One, about staying in the Lincoln bedroom at the president's request, and even tucking into, ice cream from the White House fridge. So it was really remarkable. It told us a lot about, I think, his access to the president, about his status really in Trump's orbit, even as he is making this retreat from the White House.
Well, Jennifer, on that retreat, investors cheered the news last week in Tesla that he would be spending more time away from Washington, D.C. Now we're hearing he'll have this micro office. What can you tell us about how much time he will be in D.C. or how much time he'll be spending on DOGE? Moving forward.
Right. He told us that he anticipates spending about 1 to 2 days a week on average, and coming into Washington, D.C. basically once every other week. So you could see a situation where he's in town for 3 days working and then comes back a couple weeks later. This is, of course, a marked contrast from the beginning of the term when, it was an all hands on deck situation, really intense, as he described it. And he would spend, 7 days a week here sometimes. Working just to get into these agencies and start figuring out a plan for accessing data and examining their spending.
Max, I want to bring you in. You're listening to Jen talk about this conversation, kind of him talking about his time in the White House. And I think we were all glued to the cabinet meeting where he had the two hats on, took them off, and he got kind of serious, it felt like.
Yeah, tonally kind of a valedictory tone. I don't know. The messaging is a little bit confusing because on one hand he's saying, taking steps back. On the other hand, 1 to 2 days a week is that's a lot of days.
Right.
This is a guy who is running simultaneously 5 companies. He's got a lot of responsibilities, even if he is, as Jen says, scaling down from spending like all his time in Washington and spending a significant chunk of time in Washington.
Yeah, so on that, Jennifer, the timing that he's doing here, also the figures of $160 billion, I think, getting a lot of attention, especially earlier this year when, or maybe even a few months ago, when we heard that $2 trillion was his goal of cutting from the government. Have we learned if that goal was over a 10-year period, over a 5-year period, or how the $160 billion sort of fits into that goal, or if that goal has changed?
What we do know is that the ambition is clearly being ratcheted downward. And while he is not willing to forego reaching, a $1 trillion target, he wouldn't rule that out completely. He did say that doing so on any basis would require a lot of, willpower from elected officials, and he's just not sure that the willpower is there. He wouldn't rule it out, but it did seem very much like a concession that he's gotten a lot of the easier, lower hanging fruit, and that this is hard to do on an enduring basis. And by the way, I'll just say on his time here, he is limited as a special government employee to 130 days of service per calendar year.
Yeah, I mean, and it was $2 trillion. In fact, was his original claim, and that was an annual number. That's the budget deficit. When he was at Madison Square Garden before the election, Howard Lutnick asked him how much he was going to cut the deficit. He said easily $2 trillion or something along those lines. So it's a huge difference and really an unusual, just for Elon Musk. This is somebody who is kind of used to projecting dominance, who just tends to go from victory to victory to victory. This is a come down. I mean, and he's doing his best. And I think that's part of why you're seeing these media availabilities, this effort to to actually have a voice in the story, because it's a failure, at least in the terms that he set for what he was trying to do.
Jen, before we let you go, I mean, should we assume that Elon will still have a voice or have the president's ear ongoing, even though he maybe isn't physically at the White House? There are limitations, right? How many days he can serve the government in this capacity, that he will still pick up the phone, the president will still pick up the phone, there will be that constant communication, or has something changed in that relationship?
There's all the indications are that he will continue to have this status around the president. I mean, he's clearly had altercations and disagreements with members of the administration, and it is perhaps one of the only folks who can do that right now. He's, as we noted at the top of this conversation, he's got a micro office in the West Wing of the White House, and he's not giving that up. Office space in this building is pretty difficult to come by, and that alone is an indication of the fact that he has stature with the president, and that seems to be enduring.
Did we figure out what a micro office is?
It's like an office, but smaller.
What is that?
I don't know. That's just what I'm guessing.
Does he have to share desks? That's kind of a thing nowadays. I know. All right, Jen, incredible reporting. So appreciate it. Jen Deloy, senior reporter at Bloomberg News there at the White House. We're going to stay with Max, though.
Max, I wanted to follow up on one thing that you said about the status as a special government employee, because you talk about this a lot on the Elon Inc. podcast. Yeah. How is that defined if he's planning on spending 1 or 2 days a week still?
I mean, yeah.
Does that violate that status? How does that work?
It's my guess is the accounting here is probably a little bit fuzzy. It's 130 work days. Like, I don't know if Elon Musk he has been staying here, as Jen was saying, weeks at a time, essentially, in Donald Trump's orbit. Now, he's also been, of course, attending SpaceX meetings, attending Tesla.
He's played video games from his West Wing office. If you're playing video games in the office, does it count as work? I don't know. I don't know. Does it count as a work day? I don't know.
My suspicion...
Does it count as work when you play video games at the office?
I never play video games at the office.
Sorry.
My suspicion, I mean, taking it down from semi-full-time or whatever he was to 1 to 2 days a week, what I think that does is two things. One is it allows him to tell Tesla shareholders, hey, I'm not distracted. The second thing is it probably gives them a little bit of flexibility as far as like not going over that 130 days. I have to think that he's going to have as much time in the White House with Donald Trump as he wants, and the administration will figure out a way to account for his time so that it's not breaking the law.
Because the president likes this relationship, pretty cool, and also because of Elon's deep pockets.
Yeah, I mean, he is a really important. I mean, there's a lot of ink has been spilled about the sort of popularity of Doge and the lack thereof. The fact that making these cuts has not, in addition to falling well short of the claims of deficit reduction, this has been very unpopular. On the other hand, Trump really needs Elon Musk. He is the most important donor on the Republican side right now. He's going to be key if the Republicans want to do well in the midterms. And, as Trump looks forward to his legacy, 2028, who the candidate's going to be, that person is going to need Elon Musk in their corner.
Can we ask about...
You're going there?
Yeah.
Go there,
Does
please.
Elon have to be worried about the Tesla board replacing him? I mean, the board chair has come out and said, nope. But we had another bad data point for Tesla out of France. So I'm just curious, does he really have to be worried?
So this report, you're referring to the Wall Street Journal report that the board had contacted executive search firms. If we're talking about a normal company, this would be nothing, right? The fact that the stock's been all over the place, he's clearly distracted. Of course they'd be talking to other companies. And what makes this crazy and what makes the board's denial not that surprising is the board has been so behind Elon Musk for years. And, this is the same board who has been fighting in court to pay him like the largest bonus, in history, despite the fact that Tesla's stock price has been very iffy. So the board, is very much still in Elon Musk's corner. If you look at the makeup of the board, you're looking at his brother, people he has close relationships to. So I think, a couple of things are possible here, assuming that the journal's sources are legit, which I do, is that, there may be some opponent on the board who's been talking to search firms, or perhaps this is somebody on the board trying to send a message to Elon Musk, trying to get through to him, saying, hey, this is real. We need you to be involved. But in any case, I wouldn't expect him to be leaving as CEO anytime soon. If he were to leave, the stock price would be in trouble, be my prediction.
Some other members of the board, you mentioned Elon's brother, Kimball Musk, on the board. He's been on the board for 21 years. You've got James Murdoch, who's been on the board for close to 8 years. Jeff Straubel, who's been on the board for 2 years, and then Joe Gebbia, among others, including Kathleen Wilson-Thompson as well. Robin Denholm, the chair of the board, we should note. Max, before we let you go, why do you think, are we still at a point where Elon is so closely tied to Tesla and Tesla's future? Because couldn't some investors, or perhaps even institutional investors, see this as like, wait a second, this could actually be a positive sign for Tesla because it would help get it beyond the, being inextricably bound to politics?
Yeah, if you talk to investors, you do hear that view, but it's very much a minority view. And the reason it's a minority view, I'm saying among Tesla investors, not necessarily among outside observers, is because the valuation of Tesla right now is very much not about its automotive ambitions. So if you replaced Elon Musk with a normal CEO, what you have is a car company. But many of Tesla's investors don't want to have a car company. They want to have an AI company. Yeah. And it's not clear who runs that company, who can sell that story.
Musk has got an AI company.
A second one.
He does. He's got XAI.
Absolutely. But Musk has told this story about driverless taxis and the Optimus robot. That's a humanoid robot. And when you look at the bullish valuations, if you listen to the bulls, they are not counting on the Model 3 or the Model Y, the Tesla's kind of normal cars, which are very successful in their own terms. They're expecting this entirely new AI-driven revenue stream, which really mostly just exists in Elon Musk's head. And if you take Elon Musk out of the equation, how do you do that model? It becomes harder. And people, you're laughing, but Elon Musk has achieved impressive things. And from the point of view of the investors, if anyone can do it, he can.
And laughing, but I feel like they're investing in Elon, right? And all the craziness and all the innovation that comes with him. It's pretty cool
that's
stuff.
how it goes.
Thank you, Max Chafkin. Thank you so much. Bloomberg Business Week columnist Max Chafkin, co-host of the Elon Inc. podcast, and as we remind you, author of The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power. We do have a headline crossing.
Yeah, we got a couple of headlines. Mike Waltz is leaving as National Security Advisor to be a UN ambassador, and Marco Rubio is taking his place to serve as interim National Security Advisor. A post from the president on Truth Social. I'm pleased to announce that I'll be nominating Mike Waltz to be the next United States ambassador to the United Nations. He continues, I know he will do the same in his new role. In the interim, Secretary of State Marco Rubio will serve as National Security Advisor while continuing his strong leadership at the State Department. That coming on Truth Social from President Trump.
All right, folks, back to the markets we go. Ahead of some big earnings. We're bouncing around, but we are in the green. Let's get the rundown with Charlie Pellet.
Thank you very much. In the green, higher across the board. We got you covered on markets. And, of course, we'll have you covered on Apple and Amazon after the close of trading. Bloomberg TV and radio are going to be all over that as those numbers drop after the close of trading. So here's where we stand. The S&P right now up 65 at 56.34. On the S&P, that is a gain of 1.2%. The Dow up 242 points now, up 0.6%. The Nasdaq Composite Index up 2.1%. Nasdaq 100 Index right now up by just about 1.8%. The Bloomberg Mag 7 Index after Meta and Microsoft last night surging by 3.4%. The 10-year 4.23% with the 2-year 3.71%. Gold is now down 2.2%, down $72 the ounce to $32.16. And West Texas Intermediate crude up 1.9%, $59.30 right now for a barrel of WTI. Eli Lilly is lower after CVS Health announced a plan to drop its blockbuster weight loss drug Zepbound, making rival Wegovy more widely available. Lilly down 9.5%, CVS Health up now by just about 6%. Again, repeating the headline we brought you moments ago, President Trump picking Marco Rubio Rubio for interim national security advisor. Rubio will be remaining at the State Department. Mike Waltz stepping down. Waltz will be the next U.S. ambassador to the United Nations. Recapping, S&P up by 1.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Breaking down the trade. When you look at trading right now, another stock that's been rallying in a big way today, in fact, up about 8.5% at its highs, is Wayfair. Stock right now still a gain of about 3.25%, rallying after earnings results came in better than expected as consumers brought forward spending while suppliers are holding back from price increases. We should point out, though, the stock's off about 30% year to date. Kate Gulliver is the Chief Financial Officer at Wayfair. We're delighted to have her back with us. She joins us once again from Boston. Kate, how are you and how is your environment? It's been about a month since we last talked. How has it changed?
Yeah, great question. I guess I just start with first, that we printed this morning. We feel great about the quarter, the strength in the top line, frankly, in the U.S. segment, and ultimately the flow through to adjusted EBITDA, the enduring strength in the business. So, we feel like we're on very solid ground right now.
We saw earlier, and even earlier this week as well, from companies such as Meta Platforms, but mostly Microsoft, and then, of course, with the GDP figure, that companies and people are pulling purchases forward. I'm curious what you saw on the platform over the last month in terms of what customers are buying, how they're buying it, and how that behavior has maybe changed.
Yeah, it's a great question. We shared on the call this morning, there's one category where we have seen some pull forward of demand, and that's in appliances. So, we don't do a large business in appliances. We got into that business a few years ago, but that category, we have seen what we would call, a pull forward of demand. We actually have not seen a pull forward of demand in sort of the core furniture part of the business. We look at this on a variety of different metrics around, search volumes, traffic, conversion, et cetera. And from everything that we're seeing, over the past month, to your question, we've not really seen any discernible pull forward on the furniture business, really just on the appliance part. And the appliance part is a very small part of our business in total. And obviously, the last month that you're referring to, would be post the quarter that we posted this morning, which ended on March 31st.
Is that lack of pull forward a sign at all to you of a lack of confidence that the consumer has in their situation right now? Is it concerning to you? These are obviously big purchases. We're talking furniture here. If consumers don't feel comfortable buying those, then they might not buy.
Yeah, great question. So, first, our average AOV is about $300, right? So we sell a range of products and the average ticket size of about $300. We did say actually that demand had been quite healthy in April quarter to date period. And so we feel very good about where demand is. I do want to point out that our category, we're hearing a lot of noise in the consumer, and certainly something that we're following very closely and, monitoring quite thoughtfully. But we are in our category, we've been in a position where our category has actually been down for multiple years in a row. At various points from sort of back half of 21 to current, our category has been down double digits during some of that time. Over this last quarter, we still saw the category under pressure in the US. So we're talking about a category, that has had actually sort of a negative consumer impact for some time after obviously a big pull forward in the beginning of COVID.
Well, that's interesting. Yeah, exactly. Right. COVID was crazy, right? I'm assuming we all talked about everybody doing, buying for their home because they were living, working, doing everything in their home. Does the environment feel, after a couple of years of things being pulled back, does it feel more normal? How do you describe today's environment? Especially, Kate, when we talk to so many leaders and heads of companies where, they're using the word uncertainty. You've got, as Tim mentioned, companies giving out dual earnings outlooks depending on what happens out of the White House and in terms of tariffs. So I'm just curious how you would kind of describe it.
Yeah, it's a great question. So maybe to start with our category and some of the evolution of our category over this period. To your point, we had significant pull forward in the category in the COVID time, right? So in the sort of 2020, 2021 time. Since then, the category has been down consistently since then.
And actually, when we look at the data, if you were to take a normalized growth rate from 2019 to now, typically is a category that grows somewhere on the order of 3 to 4% a year. If you were to sort of straight line that out, we're quite a bit below where the trend line is. We actually think on a basis or on a sort of total sales basis for the category itself is actually below, starting to be below 2019 levels, right? So we're seeing a category that has historically been, over the last few years, quite depressed, which may be different than some of the other consumer discretionary categories that folks are referring to. That said, yes, it's absolutely an uncertain environment. This category, while it's not down as much as it was in sort of 22, 23, it was still down last quarter. So our focus then becomes on share gain, right? So if the category is uncertain, if the overall consumer environment is uncertain, what we want to do is make sure that we're gaining share. We've done that consistently every quarter since the fourth quarter of 2022, and that we're doing that in a very cost-disciplined way, and that's where you've seen us grow our margins and adjusted EBITDA dollars throughout that period as well. So, certainly there's a lot of noise out there. There's a lot of uncertainty. Within that, we're trying to control what we can control, and to us, that results in share gain and, EBITDA growth.
Hey, Kate, I think it's fair to say maybe not all customers know that you're a marketplace. You don't necessarily have inventory when people are looking at the Wayfair platform. But you have relationships with all of these suppliers, and you have many suppliers, but I want to ask you to characterize what you're hearing from these suppliers, because they are the ones who are affected by tariffs. Such a small portion of this stuff is actually made in the U.S. What have the conversations been like with the largest folks on your platform? What are they saying?
Yeah, my understanding is it's something like more than 20,000 suppliers that you're working with.
Yes, that's exactly right. So I appreciate that you know it. And to your point, mostly to the consumer, it reads like a retailer on the front end. You're absolutely right in terms of the dynamic. But on the back end, you have the benefits of a marketplace. And we do think that is a benefit to us during this time because we work with over 20,000 suppliers from around 100 different countries, including the U.S. There is some, domestic manufacturing in this space. But, we work with suppliers from all over the world. These suppliers range in size. They have a wide range of categories that they're involved in, and those categories all have different dynamics. I will point out that no single supplier comprises any meaningful portion of our sales. So, from a sales perspective, these suppliers are quite diversified. And what we are focused on with our suppliers is partnering with them right now to have conversations around what levers are at their disposal, depending on, how the environment moves from here. And to us, that means helping them understand, where we're seeing demand, what we're seeing in terms of price elasticity. So if they were to change wholesales, what does that result in from a price elasticity perspective, and how might that impact them in their given category? Many of our products are highly substitutable. So, let's take this chair I'm sitting on right now. We probably sell many chairs quite similar to this chair. So if you're a supplier and you raise price in that category, you could be at a disadvantage than somebody else who's been able to maintain a more cost-efficient wholesale. And so that's something we help the suppliers understand and, share information with them on. We also talk them through what other levers they have during a time where you might have some, demand disruption. How do they think about leaning in and using our 3PL program called Castlegate to be able to get inventory, into the country? We actually did talk about in the first quarter some pull forward of inventory into the Castlegate network to land ahead of, tariff conversations. How do they think about promotions? How do they think about supplier advertising or retail media? So all of these are tools in their toolkit, and our focus is really partnering with these suppliers so that they're getting the same information that we're getting, and we're helping think through, these different levers and what is best to pull when.
I am curious, in terms of the consumer, you said that they bought a lot of appliances. That's a smaller part of your business, or small part, that they weren't pulling forward in terms of furniture. Is that, I don't know, you understand this world more than most, and I'm just curious, do you think consumers, we've talked about worsening consumer sentiment, we've all seen the numbers, that's sentiment, and then there's actual actions. Do you think the consumer is slowing down, the consumer is stressed right now?
Yeah, I guess I won't speak to the consumer broadly. I can tell you what we're seeing in the category. The category itself was down in Q1, right? So we look at a variety of different panels for the category, various credit card panels. We also talk to suppliers because we work with 20,000 of them. So we have a pretty good read on what's happening with the category as a whole. And when we look at the U.S., for Q1, the category was down. Now, in our case, that's a continuation of a trend that's been going on for quite some time. In the category, as I said, has been down since, sort of, let's say, back half of 21. So the category itself has remained under pressure. We haven't seen an alleviation, of that pressure. That said, we feel good about our navigating through that and our ability to continue to gain share in that environment.
How do you see that holding up if tariffs remain in effect, or if we don't see a 145% tariff come off of China?
Yeah, I go to the dynamic of the marketplace and what we're really focused on driving there, which is helping suppliers understand the competitive dynamics and our ability to work with suppliers from all over the world. So certainly we work with suppliers from China, but we work with suppliers from India, Turkey, Brazil, Southeast Asia, Mexico, the US, right, everywhere. And so what you'll see happen, as different tariff rates evolve, is suppliers want to be quite prudent in making sure, particularly because, frankly, demand has been so slow for them over the past few years. How do they be thoughtful about, if and when they modulate price and if and when they modulate, availability? Because what they want to do is maintain share. In some cases, if they see an opportunity, gain share within a category that they sell on us. And this is where the substitution helps, because if one specific geography or region is more, impacted than another, you can see that other region will actually start to take share, right? So suppliers that actually are not disadvantaged from a price perspective will take share within, say, this share category.
All right, so it sounds like glass more half full in terms of the outlook. I'm just trying to gauge. I mean, it does sound like your suppliers have a lot of move, but give us an idea. If you had to use a word to kind of describe the environment today, you have such a great read on the consumer and spending. Just as we wrap up, what would be that word?
Yeah, it is a very fluid environment, and our focus is on controlling what we can control. We think we're set up quite well to continue to offer our consumer the best value. And, that's the best that we can do during this time, deliver for our consumer. And we feel in partnership with our suppliers, we're going to be able to do that. And we're set up on a nice cost structure and a nice balance sheet to be able to continue to deliver that going forward.
And your suppliers feel confident about being able to navigate kind of all this craziness that's going on?
Yeah, I mean, certainly, we want to partner with them to help them because there is a lot of noise out there. And so we're trying to help them sort of navigate through this. But you have suppliers, a range of scale, a range of sophistication, a range of geographies that they work in. And, we feel good about our ability to help them navigate through.
All right. So enjoy it. Kate, thank you so much. Be well. Kate Gulliver. She's
Thanks,
the chief.
Nice to talk to you again.
Same here. She's the chief financial officer over at Wayfair. As we mentioned, their stock definitely popping and outperforming the overall trade today, up as much as 8.5%. Right now, Tim, with about a 3.25% gain.
All right. With some breaking news to get to, President Trump says Secretary of State Marco Rubio will also serve as interim national security advisor. He said this in a post on Truth Social earlier this hour. The president says he's nominating Mike Waltz to be the next U.S. ambassador to the UN. He most recently served as national security advisor, to the president. Tyler Kendall is Bloomberg Washington correspondent. She's usually in D.C. She's here in our studio. This comes against the backdrop of so-called Signalgate. I look at a move like this, it's being presented as a way that, Mike Waltz is moving to another position. Is this a promotion? Is it a demotion? Is it a lateral move? How are you looking at it?
Well, President Trump has long defended Mike Waltz. Even when Signalgate first came out, he said that, he trusts him and he still believes in him. In terms of a promotion versus a demotion, the national security advisor is in the West Wing. He sees the president every day. He gets a security detail, much like the chief of staff, that other members of the administration don't necessarily get. He also has been at the forefront of most of, if not all, of these foreign policy negotiations, particularly when it comes to Ukraine and Russia, as the administration tries to push forward that they are making progress. They're announcing that critical minerals agreement just the other day. He was the one that went to Saudi Arabia to kick off those talks between...
So he's been out there front and center.
Exactly. Meanwhile, not to say, though, that the ambassador to the UN has also been a high-profile position for this administration, considering Elise Stefanik wasn't able to take that role. So it does seem like it is a shift here, but in terms of a demotion or a promotion, having access to the White House every day, this is going to be a very stark difference, not to mention he's likely going to be moving out of Washington to complete it.
Right. He can't just walk in, right, from an office. It's interesting. Can he still, what, I'm always thinking about the optics of something like this. Like, what does it mean? I mean, he still has a job in the Trump administration, right? But it's a different job.
Definitely. Particularly, it's a little bit more removed, right, from being at the forefront of negotiating these deals that the administration, particularly as we cross into the 100-day mark, is trying to show that they are making progress on. So when you have somebody that has been leading them now no longer leading them, of course, that's going to raise questions about momentum and who picks up those talks. But of course, we are now learning that the Secretary of State, at least, will serve in this role as an interim capacity, who has also been part of the negotiations.
Any idea at this point whose names have been bandied about for taking on a full-time role as National Security Advisor now that Mike Waltz is out?
Well, there are reports that Steve Witkoff could potentially move into that. Of course, he's been serving in this special envoy capacity. This would be, of course, a much more firmer role. He would get that security detail that I was mentioning, and he would be at the White House every day. And sort of have that more firm administration position.
But that would also leave a vacancy at the role that he's had, which has been traveling around the world to many different countries on behalf of the president.
Definitely. But still, President Trump is basically signaling to us, though, that he has a pretty long roster of people that he has been pulling into these different situations. However, Witkoff has, of course, been absolutely pivotal. He's the one that is going directly to the Kremlin, for example, to meet face-to-face with Putin as they try to get some sort of movement here.
So Defense Secretary Pete Hegseth, okay for now?
Well, with that said, when we are talking about Signalgate, there is an Inspector General's investigation currently going into place, and that's at the Pentagon. That is specifically looking into the Secretary of State, Pete Hegseth. And he has faced some renewed criticism in recent weeks, since it appears there might have been perhaps another Signalgate, so-called, that he had his wife and his brother also added to some chats.
Marco Rubio is very busy right now. Our own David Gura reminding us that he's right now Secretary of State, Interim National Security Advisor, Acting Administrator of USAID, and also Acting Archivist for the United States. That's a lot of work. Those are a lot of jobs.
That is a lot of work, particularly when you look at how this White House is trying to make progress on so many different foreign policy fronts, since President Trump had pledged that he could help bring an end to most of these conflicts, and quickly. Of course, we have Israel and Hamas, Ukraine and Russia, restarting talks with Iran when it comes to their nuclear capabilities. So it is and pair that also with the fact that the State Department is trying to actually slim down, pare back on its departments, both in the United States, but also its offices around the world.
Well, it sounds like Marco Rubio is doing his part, like doing multiple jobs. One last question. Why did President Trump have to do this?
That is a good question.
Like, I'm just curious, like political strategists, I think it felt like this, it's been out of the news cycle.
It has, and the person who brought it back in the news cycle wasn't Mike Waltz. It was Pete Hegseth.
Right. So I'm just curious.
So according to our reporting, one person familiar with the matter who asked not to be identified, because obviously this is private discussions, said that the president actually soured on Waltz after the Signal chat incident, because he believed that Waltz had erred when he asked Elon Musk to look into how that journalist had gotten into his phone. And apparently, according to this person telling Bloomberg News, he should have just admitted that he made a mistake and then let it go, instead of implying that there was something else here at play, something else. How did this reporter get in? It appears, according to our reporting, that President Trump just wanted to, dust it off and move on, but perhaps Waltz himself maybe implicated himself a little bit more.
Interesting. All right, a lot going on, right? And we're just now 101 days?
I think you stop counting after the first 100 days, Carol. I think that's how it works.
I bet you do. Good to have you here in New York. Tyler Kendall, Bloomberg Washington correspondent, as we said, usually in the nation's capital, reporting on the comings and goings, certainly, of the President Trump White House.
Hey, Charlie Pellet has been reporting on the comings and goings of the stock market today and all the business news. Let's get an update from him. Hey, Charlie.
Well, thank you very much indeed. Stocks higher, but one other diplomatic development do want to pass along while you were talking about the Waltz and Marco Rubio moves. The U.S. has named Julie Davis to lead the embassy in Ukraine. That according to a statement today from Washington. The Dow, the S&P, NASDAQ all advancing right now, with the S&P up 68, gain there of 1.2%. Dow Industrials up 263, up by about 0.6%. NASDAQ up 382 for the NASDAQ Composite Index. That is a gain of just about 2.2%. The Bloomberg Mag 7 Index up 3.5%, surging after last night's reports out of Meta and Microsoft. Microsoft right now, by the way, up 9.1%. Apple and Amazon will report after the close of trading. 10-year yield right now at 4.22%, with the 2-year 3.70%. Gold down 1.9%, 32.26 the ounce, and West West Texas Intermediate crude up 1.6%, $59.12 for a barrel of WTI. Kohl's has fired its CEO after the board found he directed the company to do millions of dollars of business with someone he had a personal relationship with on, quote, highly unusual terms. Kohl's shares, they're surging now by 9.2%. And MasterCard's first quarter earnings topped expectations. MA on the ticker. We got my MasterCard up now by 0.3%. Rival Visa lower by 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. A lot going on today. We have some big Mag 7 earnings, as you know, Apple and Amazon after the bell. Right now, Apple shares just up about 0.2%, but we should point out that shares of Apple have clawed back a good portion of the ground that they lost in the historic tariff-induced sell-off last month. It doesn't mean, though, Tim, that investors are in the clear here on this one.
No, but we'll get some more details, hopefully, on the call and in that earnings report today, expected across at 4:30 Wall Street time. Before then, though, we've got Mark Gurman with us. He's Bloomberg News Managing Editor for Global Consumer Tech. He joins us from our San Francisco bureau. Mark, when we spoke to you earlier this week, you said, I don't really care that much about the numbers that they report. I want to hear from Tim Cook on tariffs, on the supply chain, and any commentary around that. Are you sticking to it?
Oh, yeah, definitely. I think investors and people like myself are interested in what's to come, what's the forward-looking sentiment, right? And there's not a lot of time or interest, in, at least in my view, or in terms of how much time I have, to be backward-looking, right? And so we'll see how they did, right? Wall Street is looking for a little bit of growth compared to last year, but still a dip from 2 years ago, which was their all-time record for the second quarter. That was back in 2023. But yeah, I'm focused on what Tim Cook has to say about the implications from tariffs. I'm interested in what Tim Cook has to say regarding the new judgment in its App Store-related lawsuit with Epic Games. I'm interested in what he has to say regarding artificial intelligence and the idea that, you know, Apple's not innovating at the pace that it used to. Definitely there should be some interesting questions for him and the CFO, Kevin Perek, on the call. We'll see if those questions get asked.
All right, number one, was that list in order? I want to check with you, Mark. I mean, so is it supply chain first that really is the most important?
I mean, that's the hot topic right now, right? We want to know what he's going to say about potential price increases, moves, prioritization of production in India. We want to know what kind of granular detail he's going to get into. If I were to guess, he'd probably be very vague. But it would be nice to hear some detail. I think investors want to know if margins are going to be reduced, if prices are going to be increased. So I think this is going to be a pretty important earnings call. Like I said, not because of the numbers of the prepared remarks, but because of how they answer those questions at the end from analysts. In terms of artificial intelligence, they very publicly, at least through our reporting, have made a series of moves to its AI department. Clearly, they know that a lot of work needs to be done there. They know how far ahead Amazon, Anthropic, OpenAI, Google, Microsoft, Samsung, everyone is in the AI space compared to Apple. They need to step it up, and they know that. Curious to see what Tim Cook has to say about that. Definitely want to get into the question about the App Store. Yesterday, the judge ruled in California that across the United States, nationwide, they can no longer charge developers a fee for revenue collected outside of the App Store. I mean, it sounds ridiculous, but up until this point, Apple was making developers write them a check for 27% of the revenue collected outside the store. Now, as would make sense, as was originally ruled, they cannot do that.
Mark, in the last couple of minutes we have with you, I want to talk a little pricing and sort of home in on that. I asked Mandeep Singh from Bloomberg Intelligence earlier about Microsoft raising prices on Xbox and games amid this trade war. He said maybe that is an indication to come of what Apple will do when it comes to hardware. My question to you is, how much pricing power does Apple have when it comes to the iPhone, given its history of not raising prices, and also that people now can pay for these things through installment plans?
I think the latter point is what's important. When carriers moved away from the subsidies several years ago, Apple started advertising these phone prices, mostly focusing on marketing the monthly prices, the installment prices. So if prices do go up, you'll see them triple down on that idea. Maybe they'll get back into the subscription idea that they have been working on. It's a project they shut down at the end of last year. Maybe they'll find new ways to push people towards installment plans. But the reality is that we're due for iPhone price changes anyways. Even aside from the Trump tariffs, the combination of all the new technologies that have been added over the last several years, with inflation, the complexity of manufacturing, how advanced these things have become, we were due for price increases anyways. So I think it's going to be a factor combining all of this stuff.
Mark, 30 seconds. I want to go back to Epic and the court case. How much, I mean, of a financial hit could this possibly get? What kind of numbers might we, are you looking for? How is it a big deal?
The scary thing for Apple is that it's basically infinite. If developers start implementing their apps and app purchases in a way that is conducive to getting that 0% commission, working with companies like Stripe, it could be infinite. In-app purchases are the majority of revenue that Apple makes in the App Store, which generates about $20 billion per year. So we don't know, and anyone who tells you that they have a guess is lying because it's impossible to know.
All right. That's real money, though, potentially. Mark Gurman, good stuff. You set us up so well for when Apple reports later on. 4:30 p.m. Wall Street time is when we're expecting it. Mark is managing editor for Global Consumer Tech at Bloomberg News out there in our San Francisco bureau. Folks, you are watching and listening Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Business Week Daily. Carol Masser, Tim Stenovec here at Bloomberg headquarters. As we mentioned, we've seen a rally underway on this Thursday, but we're definitely off our best levels of the session. A lot of big tech earnings last night, getting another drop today. Of course, Apple and Amazon after the closing bell, we'll be watching out for that.
I'm also looking at what's happening in the bond market right now. We're going to be speaking on Bloomberg Business Week Daily, if you're sticking with us on radio, in just a few minutes with Michael McKee and Ira Jersey. We're going to talk a little bit about about what's happening in the bond market, the economic news, what we heard from Treasury Secretary Scott Bessent
Yields have
earlier.
kicked up.
Yields have kicked up. We're off our, the highs of the day, but still 2-year up by more than 9 basis points right now.
And the Treasury Secretary has definitely been talking about what he is seeing in yields. Let's take a look at some others on this Thursday. With us is Bloomberg News cross-asset reporter Emily Graffeo. Emily, Eli Lilly, that's the first name you have for us, and this one really selling off today.
Yeah, it was down as much as 12%. It's pared some of those losses, but it's still down right now about 10%. They had earnings, so they cut their full year earnings outlook. But I think what's capturing actually more attention is that CVS is dropping their Zepbound weight loss drug from their list of preferred drugs. And this is really a blow to Eli Lilly because they negotiated a deal with one of their top competitors, Novo Nordisk, and they're now going to make Novo's Wegovy more widely available to those CVS members. So this is not a good day to be long Eli Lilly, but good for Novo.
I feel like the back and forth with these drugs, you kind of see this, right, as different things, different developments. And some of them, you'll see gaining, declining. It just kind of moves around.
Well, there's this price war going on. I mean, earlier this week, Novo reached this deal with Hims and Hers, along with 2 other telehealth providers, to sell a month's supply of Wegovy, starting at $499. That's before subscription fees. Lilly announced an expanded partnership with Weight Watchers on April 29th that was aimed at reaching customers who are looking for lower cost treatment options. So there's a lot of back and forth in the space.
Yeah, Novo actually was up as much as 3.5% today. It's in the red now, which is interesting because earlier in the trading session, it was very clear, like, this is good for Eli Lilly, this is bad for Novo. Healthcare is the worst performing sector in the S&P 500 today. So just broadly, that sector is lower.
All right, let's talk about another one that is definitely selling off as well, Qualcomm.
Okay, so Qualcomm shares are falling. The chipmaker gave a tepid revenue forecast. It actually wasn't that bad. I mean, they said revenue will be $9.9 billion to $10.7 billion, with the midpoint of that range is actually below the estimates, which were 10.33. So, I mean, we're just talking numbers here, but they are the biggest maker of chips that run smartphones. So there's a lot of focus on Qualcomm amid the trade war. We have Apple earnings coming up. I imagine we'll be focusing on this as well. Like, just how much is this company going to be affected by tariffs and global trade? So, yeah, that's in focus right now.
Okay, and a name that's not necessarily a tech name, but one that's getting a lot of attention right now. Carrier Global is on your radar. How come?
Yeah, I had to flag this because the headline today, Carrier Global mitigates tariffs helped by price increases. They said in on a call with investors, they're fully mitigating tariff exposure through essentially raising prices. I hadn't heard of this company, but it's fairly large. It's now 60 billion in market cap. They manufacture HVAC equipment, and I guess they've figured out a way to mitigate that tariff response. But like, it's good for the shareholders, it's good for the stock price. But now for all the customers that have to buy these HVAC, equipment parts, they have to potentially pay more.
What's interesting, it's a company that has pricing power, right? I mean, thinking about it in the context of other companies and how they're dealing with passing along these prices. If they do find price increases, do they pass them on to the consumer? Do they absorb them? It depends on what you're selling.
I mean, the CEO said, right, we're fully mitigating our tariff exposure through supply chain and productivity actions with the balance of about $300 million via price. So it sounds like they've got multiple approaches where they are able to do things, and make it work.
Yeah, I mean, they raised their earnings outlook for the year. The stock was down about 8% through the year, but right now it's much higher. Let's see. Sorry, I'm just getting it to load. Now up 12%. Highest jump, biggest jump since April 2020.
Yeah. And it's up about 3% year to date. Yeah, I think that's kind of interesting. No offense, but I need my air conditioning.
Everybody does.
In my United States.
And my heating when it gets cold.
But that is one of the narratives that we've talked about, Carol, that has emerged in recent years, is the idea of these climate control companies that do indoor climate control.
Yeah.
Like, that's, that's not discretionary, right? That's something that's a necessity, especially as different parts of the world get warmer.
Yeah, I mean, in high school when I was trying to save on gas, I would definitely just keep the windows down in the car instead of turning the air conditioning on.
But yeah, I would say it's somewhat of a consumer staple.
We do a lot of crazy
What
things
about
in
your
high school.
apartment?
Yeah.
In the summer. Air conditioning's on.
The air conditioning's on
Exactly.
now. Yeah. I'm a respectable adult now. I put the AC on.
You are indeed. All right, Bloomberg News cross-asset reporter Emily Graffeo. For more conversations, check out our Stock Movers podcast. They are 5-minute episodes, the biggest winners, losers in the stock market. You can find it at Spotify, Apple, or anywhere you get your podcasts.
Hey, I mentioned we're talking fixed income. We're talking what's going on in the Treasury market. We're also talking about all the economic data. That's just a little bit of what we're covering next on Bloomberg Business Week Daily. And yes, of course, it is an earnings palooza.
It is indeed. And for those of you watching on TV, the close is coming your way. Do not go anywhere, though. Tim and I continuing on Bloomberg Business Week Daily.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. A big change at the White House involving one of President Trump's closest advisors, National Security Advisor Mike Waltz. Here's Linda Kenyon.
President Trump says he is nominating Mike Waltz to be the next U.S. ambassador to the United Nations. The president also announced Secretary of State Marco Rubio will serve as interim National Security Advisor. Waltz was ousted from the Trump cabinet this morning, and then several hours later, the move to the UN was released. President Trump's first pick as UN ambassador was New York Republican Representative Elise Stefanik, whose vote in the House was considered crucial to advance the president's agenda.
Analyst Larry Sabato.
Most people thought Waltz would be fired in the week after Signalgate, especially when we learned that there was more than one. This was a continuing controversy, and Trump usually likes to cut controversies off quickly.
CBS's Ed O'Keefe at the White House on the president's decision.
Well, it sounds like a promotion, or at least gives him a landing spot. This administration has signaled from the start that they didn't necessarily consider the United Nations a serious organization or a job that they had to worry that much about. So it's a landing spot for Waltz, but it is in essence being put out to pasture because this, at least so far, is not seen as a priority for this president who's at the UN, given that he's trying to make so many changes in foreign policy unilaterally and really shake up the global order.
A federal judge ruled today that the Trump administration cannot use the Alien Enemies Act to detain and deport alleged Venezuelan gang members. On Capitol Hill, Democrats have a resolution to rein in the president's immigration moves. Senator Chuck Schumer.
Donald Trump is deporting American citizens with no due process. A threat against one is a threat against all.
On this May Day, a lot of protests are focusing on the plight of immigrants, as Brandon Eisen reports from Chicago.
Thousands of unionized workers from all industries demanding advancements in ongoing contract negotiations toward better wages and working conditions, representing 50,000 workers across the Midwest, service workers, janitors, security officers, airport and residential workers. President of SEIU Local 1, Jeannie Castro.
I think the message today is that immigrants are essential. They're the backbone of our economy. They're certainly the backbone of our city.
Brandon Eisen for CBS News, Chicago.
In Israel, officials say a wildfire that shut down the main road from Jerusalem to Tel Aviv is now under control. It had threatened the city of Jerusalem itself. 3 Palestinians have been arrested for allegedly starting it. The numbers have been off all day on Wall Street, up and down, not by much, but slightly. The Dow currently ahead 233 points. This is CBS News. company town formed by the world's richest person is on the brink of becoming an official city.
A vote is set for Saturday to turn the South Texas home of Elon Musk's SpaceX rocket company into an official city known as Starbase.
Ignition, liftoff.
Approval is likely. Most of the eligible voters are SpaceX workers. In fact, 200 of 283 eligible voters have already cast ballots. Opponents say this gives Musk and his company too much power in the coastal area, with control over access to popular swimming and camping areas known for generations as the Poor People's Beach. Those beaches have been closed at times for rocket launches. Steve Kathan, CBS News.
Many animals seem to love music. Ronan the sea lion can keep a better beat than most humans. She now joins animals like Snowball the dancing cockatoo in upending the belief only humans can rock out. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are 55 minutes away from the closing bell on this Thursday, May 1st. Carol Masser, Tim Stenivek, live here in our Bloomberg Interactive Broker studio. Coming up, we'll get the latest on the trade. We've also got the Treasury Secretary, Scott Bessent, saying the market is sending a signal that the Fed should be cutting, and former U.S. Treasury Secretary Larry Summers said that would be a, quote, very serious error. So we've got a roundtable with our own Mike McKee and Ira Jersey. We're going to get that going in just a moment.
Also, it is the busiest day for the S&P 500 earnings for the quarter. 62 companies worth a combined $9 trillion in market value.
That's a lot.
We got Apple.
Yeah.
We got Amazon.
Yep.
We got Amgen.
Yep.
We got Airbnb.
Yep.
And those are just the ones that start with A, Carol.
Get ready. There's going to be a lot of numbers. Nicely done.
Thank you. Charlie's laughing, which is a good sign.
You worked on this, didn't you?
Sometimes I do work.
You work
Despite
a lot.
my best intentions.
All right, a lot coming your way in the next 2 hours, guys. Let's get to it, and let's get to that chuckling Charlie Pellet.
All right, and here's what's going on. This is precisely why you count on Bloomberg Radio and Television. Jobs, Fed decisions, and yes, key earnings reports. This is exactly why we are here for you. After the bell today, Carol touched on it. We got Apple and Amazon coming up. We'll be all over those numbers as they drop. The Dow, the S&P, NASDAQ solidly in the green right now, up 66. Dow Industrial up 254 on the Dow, up 0.6%. It is the S&P 500 index up 66, gain there of just about 1.2%. NASDAQ up 375 now, up 2.1%. The Bloomberg Mag 7 index ahead of those earnings after the bell up 3.5%. And after earnings last night from Meta and Microsoft, Meta right now up 5.6%. Microsoft up by 8.9%. 10-year at 4.22% with a 2-year 3.69%. Spot gold at $32.25 the ounce, down 1.9%. West Texas Intermediate crude just above $59 a barrel, $59.19 now, up by 1.7%. First trading day of the brand new month with April in the rearview mirror. So what is the market backdrop? Liz Ann Saunders is Chief Investment Strategist at Charles Schwab.
I think what we're seeing now is there was a lot of debate in the onset of the escalation of the trade war as to whether the growth hit would come first or the inflation pop would come first, and it looks like the growth hit may be coming first.
And Liz Ann Saunders interviewed this morning on Bloomberg Intelligence. General Motors, perhaps, is an economic indicator. It is cutting its full-year profit outlook, citing as much as $5 billion of exposure to auto tariffs. GM shares right now, we'll call it unchanged on the day. And Harley-Davidson has withdrawn its 2025 outlook, citing a lack of clarity around U.S. trade policy. HOG, H-O-G on the ticker, up by 3.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Well, Treasury Secretary Scott Bessent said that the U.S. Treasury market is telegraphing that the Federal Reserve ought to lower interest rates.
There's been a substantial decrease in the 10-year since the beginning of the year, but especially since January 20th. And President Trump and I are targeting that point on the curve. We are seeing that 2-year rates are now below Fed funds rates. So that's a market signal that they think the Fed should be cutting.
That's Treasury Secretary Scott Bessent earlier today on Fox Business. Separately, weekly data showed jobless claims jumped to the highest level since February, and U.S. manufacturing activity shrank by the most since November. Oh, yeah. Then there's also tomorrow's payrolls report and next week's Fed meeting. So a lot to get to, and we got a great roundtable for that. Michael McKee is Bloomberg News international economics and policy correspondent, and Ira Jersey is chief U.S. interest rate strategist for Bloomberg Intelligence. Mike's here in the studio. Ira is in Princeton. Mike, I do want to start with you on these comments from the Treasury Secretary and on what the Fed is going to do. I mean, nobody really thinks that the Federal Reserve is going to cut next week, right?
Nobody really thinks that.
Okay.
It's not going to happen.
And the market, the signal that the market is sending?
The signal is not really a signal. What the market is saying is that sometime in the next 2 years, the Fed funds rate will be lower. And that's about all you can take out of it, because the 2-year note yield went below the Fed funds rate in the end of 2022, beginning of 2023, and has basically stayed there since. So it's not a new message, and there are, I'm sure, many reasons beyond my ken as an investor type to know why, but fortunately you have a bond genius waiting to explain it.
I can see Carol getting ready to talk to the bond genius.
I know, not me. Aforementioned bond genius, Ira Jersey. Come on in on this conversation. Talk to us about this relationship, as Mike mentioned, between the 2-year and the Fed fund rate. You know, when it is an indicator of something or when it can be an indicator of nothing.
Well, the 2-year note is just, on average, it's going to be the expectation of where the market thinks, say, overnight rates are going to be over the next 2 years. So certainly the market is thinking that rates are going to be lower. And when you look at other instruments like T-bills, for example, or the thing that we always look at, which is the secured overnight financing rate futures, so SOFR futures, which are the most liquid traded rates instrument that there is, it's suggesting that the Fed is going to cut 125 basis points by the middle of next year. So the market is certainly geared up for the Fed to cut. The earliest cut that's priced is more like July, with a chance of a June cut priced in right now. So you know, the cuts are coming according to the market. Now, ironically, and we put this out today in our monthly outlook, I suspect that the Fed might wait a bit longer to start cutting rates than the market's currently pricing, or than Secretary Bessent or President Trump would like them to, because they are going to be worried about inflation and the tariff effects and the like. But I do think once they start cutting, they'll be pretty aggressive. So I think they'll probably still get to where the market's priced for the terminal rate, about 3%. But it's just probably going to happen later than some other people in the administration would like.
I got a sort of definitional question here for you on that. Given that what you're talking about, the average over a 2-year period of where the 2-year would be, is this what the market thinks should be done now, as the Secretary suggested, or is this something the market kind of wants and expects because they are projecting forward what will happen to the economy?
Yeah, so the 2-year is just the market discounting where it thinks the Fed is going to cut to over, over some period of time. And if you think about the 2-year in particular, it's going to be very sensitive to what the Federal Reserve is going to do. And one of the reasons why it's selling off a little bit today, yields are, the last time I looked, about 9 basis points higher in the 2-year yield, is because when you look at, we've priced out basically a full cut. We were priced for 143 basis points, 1.43% of cuts by the middle of next year. We're now pricing for only 1.23. So again, we've priced out basically an entire cut today, and the 2-year is the average over that period of time. Cut that in half, and now you see why we're off 9 basis points in the 2-year. It's just a discounting mechanism, nothing more. But it does show that the market thinks that the Fed's going to be cutting. It's not saying the Fed should be cutting. Those are two different things.
All right. Brown Brothers Harriman, Kinnikos Associates, Soros Fund Management, Key Square Group, Bessent Capital, Treasury Secretary. Mike, I think it's safe to say that Scott Bessent understands how the market works. So for him to make this comment and understand perhaps how this relationship can be there for a long time, I would assume he looks at charts. I mean, like, what do we make of him saying this? Especially when we've got the President of the United States, who is very vocal and critical of the Federal Reserve and the Fed chair.
Scott Bessent knows how Donald Trump works. And he knows that parroting what Donald Trump wants, whether it's a good idea or not from a financial market standpoint, is what he needs to do to keep his job. I'm sure that's behind it, because Scott would know what Ira just was saying, that this isn't a request by the markets to cut rates. It's a sort of forecast down the road. So you kind of have to expect this, and I wouldn't be surprised to see more of it, more of this kind of thing from the Treasury Secretary, not as harsh as the president does.
So is it good then, Ira, that markets kind of do their thing? I mean, we saw rates go up. I mean, they're going to do what they're going to do, correct? They are independent.
Yeah, the market's going to price what they think the likely outcomes are going to be, whether it's the Federal Reserve or tariffs or something else. I think what is very telling about a lot of this and what's been going on is, look, a couple of weeks ago, we were looking at a market that was really worried that Jay Powell was going to be fired, that maybe interest rates are going to be too low. So you had the steepening of the yield curve because we were going to have tariff-led inflation that was going to be more persistent because the Fed was going to be easier than it should be. A lot of that angst, I think, or some of that angst at least, has died down somewhat over the last couple of weeks. And importantly, the market is going to price a range of things. So when we look at something like the 2-year note, remember, it's not necessarily pricing for the 5 cuts that are priced into the futures market. It's also priced for maybe part of that, but also priced for worst case and better case scenarios in that as well. So if you look at the options market, it certainly shows that there's a skew toward lower rates, but it's not 100% that the Fed's going to cut all the way down to about 3%, so 1.25% lower in the Fed funds rate. The markets are always going to discount these things, and it's going to change again, right? There's going to be some headline or something else, and we're going to
jobs report or something.
Yep.
Speaking of
maybe tomorrow morning.
Well, speaking of the jobs report tomorrow morning, we're going to get to that in a second, Mike, but economic data that we got today, weekly data showed jobless claims jumping to the highest level since February. U.S. manufacturing activity shrank by the most since November. How do you look at that?
The jobless claims is a red herring. In New York, when the schools close for holidays like Easter, Passover, the employees, non-teacher employees, bus drivers, janitors, cooks, can file for unemployment claims. And that was the last week of the vacation for kids in New York City. It happens every year. And so
the nuances.
So that is not.
That's why we bow down to Mike.
It's exactly why we bow down.
Not the first sign of the world going to heck. But the numbers from the ISM, they were better than people thought they were, but they're still pretty much all showing contraction. And so it's not good news. What it does tell you is that we're going to see manufacturing slow because new orders are slowing. It didn't slow as much as people thought they would, but they are slowing. So that's more weight on the idea that the economy will slow and maybe people will, the Fed will cut interest rates.
Final thought to you, Ira, in terms of that jobs report tomorrow. As you said, could we see a shift in think and sentiment, and certainly a yield shift based on the data tomorrow? And just got about 20 seconds left here.
Yeah, if we get a sub 100,000 payroll print, I think we probably rally back and probably undo all of the bear flattening that we had today, and we'll probably bull steepen pretty significantly tomorrow if that happens.
Mike, is that likely?
Probably not likely, but anything can happen.
Anything's possible.
That's why you have to tune in tomorrow, 8:30.
You'll be here. You'll be up early.
Mike will be here. We'll be listening early on. Michael McKee and, of course, Ira Jersey. Guys, thank you so much. This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go until the closing bell. First trading day of the brand new month. Big day for earnings. Last night, of course, we heard from Meta and Microsoft after the close of trading today. Apple and Amazon, yeah, we're going to be all over those numbers as they drop. The S&P right now up 64. That is a gain of 1.2%. The S&P 500 index 56.34 where we stand, with the Dow up 250 now, up by about 0.6%. The Nasdaq Composite Index surging 372, up by about 2.1%. The Bloomberg Mag 7 Index right now up by 3.5%. Your 10-year 4.22%, the 2-year 3.70%. Gold now down 1.9%, 32.26 the ounce, and West Texas Intermediate crude up 1.6%, 59.16 on WTI. Bitcoin, meanwhile, at 96,645, up by 2.2%. Well, the big news after the close of trading going to be those earnings reports out of Apple and Amazon. Analysts and investors will be looking for any insights at Apple about the future impact of tariffs and the company's ongoing efforts to catch up in AI. Service revenue estimated at $26.72 billion. Carolina Milanesi is president of Creative Strategies.
We also have to remember that Apple is becoming more dependent on revenue coming from services. And so we might see some give from a price perspective on the actual phones and other devices, thinking that they can recoup some of that from the services side.
Carolina Milanesi of Creative Strategies. All of this coming down roughly 1 hour from now on Apple. Apple shares ahead of earnings. Little change. They have been lower for part of the day today. Right now showing a gain of just about 0.1%. But Amazon ripping higher, taking part in that broader tech rally. Amazon right now up by 3.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. Really do appreciate it. Couple stories that we want to get to, a couple stocks that we want to get to. First, General Motors cutting its full-year profit outlook due to as much as $5 billion of exposure to auto tariffs. This among the biggest financial hits revealed by any company so far from President Trump's trade war. The stock is flat right now. It's been bouncing around throughout the day, but no big move one way or the other as we speak right now.
No, exactly. So, but an interesting story, and continuing to watch what's going on with GM. We should point out at its lows down about 1%, but up almost as much as 3% today. So quite a swing here. Keith Naughton is Bloomberg News auto reporter. He joins us from Detroit. What do we need to know about this? It feels grim, but give us the perspective and context.
Well, I mean, the context, Carol, is it could have been worse. So a week ago, Ryan Brinkman at JP Morgan, for example, put out a note that said the tariffs would cost $10.5 billion to GM. So in some ways, the $5 billion number, which is certainly eye-popping, is a bit of a relief to Wall Street.
It's still $5 billion.
Was some of this priced in, though, because shares are down 15% year to date? And, you know, if we think about not necessarily what has been telegraphed by the company, Keith, but just understanding, you know, what this company does and exposure to and its exposure to tariffs, it's something that is talked about a lot.
Yeah, I think, Tim, though, what is not always fully appreciated is just how exposed General Motors is to tariffs.
Okay.
General Motors is the largest importer of cars to the United States.
So repeat that. This is an a quote-unquote American company.
General Motors.
Yeah, American company.
America's number one automaker is America's number one auto importer. They import more cars than Toyota, more cars than Mercedes, more cars than Hyundai. They imported 1.2 million cars to America last year, which included over 400,000 from South Korea. So it's not just Mexico, it's not just Canada, and by the way, they make plenty of cars in Mexico and Canada. It is also from Asia, because they import cars from China, too. The Buick line is almost entirely imported from Asia.
And that's just on a per vehicle basis. That's when we're talking about aggregate vehicles here. That doesn't even get into the fact that, let's say, you know, the upholstery on a chair or a seat that might be made here in the U.S., an auto seat, crossing the border back and forth, or certain components crossing the border back and forth in the manufacturing process for a car that is actually made in the U.S. No, Keith?
Yeah, well, so, and Tim, that's why this number is actually lower than Wall Street was anticipating. The breaks that President Trump gave earlier this week on the auto part tariffs, which go in place on Saturday, that is actually saving GM and all automakers a lot of money and a lot of exposure on tariffs. So where GM is really getting hurt is the imports, particularly the imports it's bringing in from Asia. That's what distinguishes it from Ford and from Stellantis, Chrysler's parent. GM brings in so much from South Korea, and those aren't getting any breaks. The vehicles made in Mexico and Canada, if they're compliant with the trade agreement, USMCA trade agreement, then you get a break on tariffs. That doesn't happen if you're building cars in Korea.
Hey, Keith, I am curious, Mary Barr is saying we look forward to maintaining our strong dialogue with the administration on trade and other policies as they continue to evolve. That was actually in a letter to shareholders. There are ongoing discussions with key trade partners that may also have an impact. We will continue to be nimble and disciplined and keep you updated as we know more. It's been a busy week for them in terms of talking to the street, talking to investors. Can you read between the lines and say, okay, wait a minute, they're having a productive conversation with the administration, or can you read between the lines, they're not necessarily having a productive conversation about the impact and what this all means?
No, I think they are lobbying hard to explain that in this effort to protect the American auto industry, those are the words that President Trump has used, that it's actually hurting the American auto industry because the American auto industry, the American automakers, particularly GM, are so dependent on imports. I think the other thing to read from Mary Barra's comments is that GM is furiously trying to move production into the United States. They have a lot of factories in the United States. They're already moving pickup truck production to a factory they have in Indiana instead of producing as many in Mexico and Canada. So they have some open capacity in the United States at their factories in the U.S., and they are trying to get product in there as quickly as they can.
Hey, just quickly, just got about 30 seconds, Keith. So more production by GM in the United States, if indeed that happens, what does that do for pricing for Americans who want to buy GM cars?
That would protect the pricing more. They wouldn't have to raise the prices as much, although they're all saying they're going to hold off on price increases for the moment.
All right. Interesting, and obviously a moving story. Hey, Keith, thank you, as always. Keith Naughton, Bloomberg News auto reporter, joining us right there from Detroit.
Okay, so we get an update from GM earlier this morning. We just talked about that. Also out with an update, Eli Lilly. Shares falling as much as 12% earlier in the session. The biggest intraday drop going back to October. Shares now down 10.5%. This after CVS announced a plan to drop its blockbuster weight loss drug Zepbound from its preferred list, making rival Wegovy more widely available. Madison Muller is Bloomberg News health reporter. She joins us here in the Bloomberg Interactive Brokers studio. So Lilly maintained its sales guidance. Zepbound performed in line with Wall Street's expectations, but investors who've been hoping for a more explosive growth were underwhelmed. Are we seeing price wars here?
Yeah, that is what is definitely starting to happen here. I mean, coming on the heels of the news that we discussed earlier this week, which was that Novo Nordisk was partnering or working with some telehealth companies to distribute distribute pens of its blockbuster drug Wegovy at a lower cost. And now we're seeing Novo partner with CVS Retail Pharmacies and CVS's Drug Benefits Manager unit to provide more cost savings for patients and for health plans that cover weight loss drugs. So it's definitely heating up.
Is it just negotiating, or is it, I mean, we've talked with you too that they're similar drugs, but they're not all exactly the same. So I'm just a little curious about how that factors in.
Yeah, I mean, that is part of the interesting thing. I mean, Lilly has said, and they were saying today, that the price of the medication, they purposefully priced it lower. I mean, for competitive reasons, it came onto the market after Novo Nordisk's drug. Lilly's drug Zepbound is a little bit more effective, but both drugs work really well for weight loss. Lilly's drug costs around $1,000 a month, while Novo's is about $1,300 a month. But the higher list prices mean that drug makers, when they're negotiating with these PBMs, can provide greater discounts, bigger rebates. So in some ways, it actually turns out to be a benefit when they're at the negotiating table. But those that's one of the things, and we were talking about this earlier, there's not a lot of clarity about how these negotiations work, what happens behind the scenes, and that's not something that we're probably going to get anytime soon.
So is today's stock move all about this CVS news?
Yeah, I mean, in part, I think it sort of compounded the underwhelming results that you mentioned earlier. I mean, it was a good quarter for Lilly, but their expectations for this company are so high now that they just can't really afford to have a inline quarter. Investors were looking for more growth and looking for Zepbound sales that sort of smash past estimates like they did last year, and that's just not what happened. So it was just a little bit disappointing, I think. And then seeing the CVS news, it was interesting because CVS and Lilly both reported earnings today, so we sort of got to see this happen in real time.
All right. So, I mean, I don't know. Can this change? I mean, how much of it is about the GLP-1 still for Lilly? Like we always talk about the pipeline and other things.
It's like more than a $700 billion company at this point.
Yeah.
This
so
is huge.
help us put this in perspective.
I mean, and that is really, that valuation is really about weight loss drugs.
It is.
But the thing is, Lilly's, like you just mentioned, their pipeline, people are so excited about Lilly's pipeline because not only do they have Zepbound, which is, like we said earlier, a little bit more effective, but they also have a weight loss pill that's coming pretty soon, as early as 2026, the CEO has said. And that is thought to be the next big thing in this market. They are far ahead of the competition when it comes to that, and they're going to continue to sort of dominate the space.
So can I just ask one follow in terms of the PBMs and negotiating? So if they come out with a pill, is that a whole separate negotiation because it's a different form of delivery versus an injection?
Yeah, I mean, that is the question. I mean, the thought is that the pills will be priced lower to begin with because they're easier to manufacture. Pills are typically a little bit cheaper. But Novo has a pill on the market right now called Rybelsus that doesn't work as well for weight loss, but it's around the same price as Ozempic. So it sort of is to be determined what will happen with the pricing war, but the expectation is that it will be a little bit cheaper.
On pricing, you and the team out with a story about a price war here, reminding us that Novo reached a deal with Hims & Hers this week, along with 2 other telehealth medicine providers for a month's supply starting at $499. This is of Wegovy before subscription fees. Lilly announcing an expanded partnership with Weight Watchers on April 29th. How low is this price going to go?
That's the question. I mean, and I think that's what investors were worried about today.
Price war is great for consumers.
Exactly.
Not good for investors, not good for companies.
And we've seen these companies get, and we say in the story, publicly lambasted for the prices of their drugs. I mean, Bernie Sanders called the CEO of Novo Nordisk into a hearing last year and really railed him on the price of these medications. And they are bringing the prices down, and they are expanding accessibility options, affordability options for patients. But I think investors were concerned what this means for Lilly. Are they going to lose out on share because of this?
Where is it manufactured? Is it all here so far?
They do. Their supply chains are sort of all over the place. Novo makes some of the drug here. They do. They make some in Denmark. Same with Lilly. The first step happens in Ireland. A lot more happens here. So they are also potentially exposed to tariffs.
Madison Muller, the best health reporter here at Bloomberg News. Check her out on the Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We are roughly 20 minutes away from the big event. After the close of trading, we'll be hearing from Apple and Amazon stocks higher. So let's head right over to the first word breaking news desk for today's afternoon call. Here she is, Jordan Fitzgerald.
Thanks, Charlie. The main U.S. averages are in the green on the back of big tech earnings, with the S&P cash up 1.2%. Leading the Dow, we have Microsoft, Amazon, and NVIDIA, with Amgen, Merck, and UNH lagging. Lilly is down more than 10% after results, with MasterCard little changed. The 10-year yield is up to 4.2%. Gold is down. Oil is up after Trump threatened to sanction Iranian oil. Bitcoin is up more than 2%. And in the healthcare space, Humana dropped after being hit by a DOJ bribe suit. And in tech, the U.S. may ease NVIDIA chip curbs on the UAE. Wrapping up, Apple and Amazon, like you said, reporting after the bell. Live from the First Word breaking news desk, I'm Jordan Fitzgerald. All yours, Charlie.
All right, I thank you very much, Jordan. And to hear live breaking news over your Bloomberg type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. About 18 minutes to go until we wrap up the trade on this first trading day of May 1st, 2025. Charlie just breaking down the numbers along with Jordan, and you can see that, up about 1% on the S&P 500, off our best levels of the session. And you've got really those big tech names continuing to push the NASDAQ 100 higher, up about 1.6%. In particular, Meta and Microsoft, we talked about it earlier. After the close, we get the A's of the Mag 7.
Airbnb.
No.
Amgen.
No.
Oh, no?
No.
Oh, okay.
Funny how that works.
Apple and Amazon. That's what you're talking about. Okay.
Exactly.
Okay. Hey, let's see what Max Wasserman has to say about this. He's founder and senior portfolio manager at Miramar Capital. Max, I don't want to talk about these individual names with you. We're going to have plenty on that in just a few minutes. I want to hear your thoughts on the macro environment right now, given that we've seen such a rally over the last few days. Hard to believe that April ended the way it did, given the selling that we saw in the first part of the month.
Yeah, it's great to be here. It's fascinating to see all the turmoil that's taken place in the marketplace based on commentary out of the White House. But if you look behind that and you look at what's happening in the economy, we are seeing signs of economy slowing down, and you're still seeing embedded inflation. So the question becomes, will the Fed take that embedded inflation and hold off? Will it look at the tariffs as a transitory inflation that can be that needs to be dealt with, or it can just leave it alone? But we see the economy slowing down. We see the consumer eventually being hurt by that. And if the tariffs, again, it's hard to handicap that because he keeps making exceptions all the time, right? I mean, you just heard the latest thing about Iran with oil. So it becomes very challenging. But we think this market is slowing down, and we think the consumer is going to be hurt by that. And we think the market needs to reflect that. And we think it is for the most part, but there's areas of pockets where technology, they're still gravitating to that right now.
Hey, do you feel like with conviction, Max, that you could say, okay, this is our market for the rest of 2025, or it could change dramatically for the better, for the worse?
Yeah, I don't think you can do conviction for an afternoon with this White House. I mean, every single time you hear about a tariff, you hear an exception. And you're going to hear that tonight. It's going to be interesting to hear from the two companies this evening. But not even mentioning names, one of the companies gets 70% of their products that they sell to America is from China. So that has to be inflationary unless they get an exemption. But the question becomes planning or investing. You have to really take a long-term look and not trade this short-term because the information's changing by the hour. But we do see good companies out there that have been hit hard that, you know, over 6, 12, 18 months should be good investments, paying you good dividends. So we like that. But just short term, you know, fasten your seatbelt, and they say, and put the trays in the upright position, because it all depends on what the White House says. And then next week, what does the Fed say about this?
Max, you can name names if you want. You feel free to.
Yeah. Sure. I mean, it's interesting to see what is Amazon going to say.
Yeah.
70% of their goods are coming from China, basically. Over 2.5 times what they sell from here. So what kind of inflation is that going to be?
We also,
and how are they going to handle it?
I think it'll be under an extra microscope, given what we heard earlier this week after that Punchbowl News report, sort of the back and forth from the White House about what ended up happening, or what, a call between Bezos and the president regarding being transparent about those prices and where that's coming from. There was a lot of back and forth there, so I think there will be a lot of questions about the impact on consumers. Typically Amazon is a story that has to do less with retail and more with AWS, and we kind of got a preview of AWS yesterday with Microsoft. Okay, so that's some views on tariffs. What about the inflationary side of things? And that's certainly related to tariffs. How are you looking at about the inflation path forward?
I still think it's stubborn. We still think it's embedded in there, and we would not be for the Fed cutting because we think inflation's still built in to the marketplace.
Where specifically? Because we're seeing a move away in oil prices. We're seeing lower oil prices. Where are you seeing inflation embedded? And why?
Well, basically, you're seeing the consumer spending. They're telling you that the prices went up a little bit there. You're also seeing in the fact that housing, right? Well, people aren't buying housing, but the cost of basically maintaining your home. If you want to do repairs in your home, the cost of the wood, the cost of the products. We're seeing that as an issue. You're also seeing the fact of goods that are being bought are higher than they were. So the question really becomes is, if the consumer is anticipating higher rates or a slowdown, they pull back on the spending. So, well, yeah, you looked earlier about the cloud, but you look at the impact to consumer if they're facing day to day. You look at companies like Procter & Gamble that's telling you they're facing that issue with the products they're being selling. That's the basics of what's happened to the home. So the inflation's still there. Yes, energy has come down a little bit. And yes, they say food prices, but still, when you look at it, the consumer is slowing down the spending. But is that going to be permanent? I don't know, because I can't tell you what we look like inflation. I think the Fed is too early to act. I think they need to be more patient, because what you don't want them to do is jump the gun, cut rates, and then you have the White House change the issue on tariffs, and next thing you know, you have inflation ticking up again. And I do think stagflation is a very big concern here.
All right, so net, as you say, things can change rapidly. We live it every day, every minute, every hour. Having said that, do you believe that things will settle at some point where higher tariffs, though, they're not the tariffs that they were, that there's going to be some higher level of tariffs and disruptions as supply chains, some maybe are brought indeed back to the United States, and things are changing that could ultimately lead to a very different investment environment going forward, a different level of profitability for companies here in the United States? I mean, what's the long-term game that you think might be very different for the investment environment?
Well, it's hard to predict the long-term game, because if you see...
So are you saying it could just go back to the way it was before?
I don't think it's going to go back the way it was, but I think the market's reflecting disruption. Right? Yeah. If you look at take out technology, the market's reflecting it. Consumers are reflecting it. Energy stocks are reflecting it. Healthcare is showing disruptions. And you have to ask yourself, what's actually being moved back here? I mean, what's happening really? Not what's being talked about, but what's actually being moved here. Semiconductors are getting exceptions, but you have to look at what's happening with Taiwan. So long term, I am bullish, but I think you're going to be choppy for the next 2 quarters. I think the second half of the year, as we get through this and really settle into what tariffs are really going to look like, and the companies have the ability to plan for it, and the consumers get used to what they have to deal with. And then you'll know where the Fed is. Do I think the Fed's going to cut interest rates to the fourth quarter? Probably. I don't want them to cut earlier, because that means the economy is really slowing down. But it's hard to tell. I mean, if you look at right now, they said GDP was negative, but that was a pull forward from all the imports. People were front loading that. So the question becomes employment. Employment, a lot of the problems that you just had was New York related, was a big uptick. But you have to wait. The economy's still strong, but we're seeing really good signs of a slowdown. I think the second half of the year, everybody will be more adjusted to what we're actually dealing with. And I think that's going to create an incredible investment opportunity if you can look longer than 3 to 6 months.
And we do know that you are finding opportunities, Visa, Waste Management. There's a couple companies that you definitely have been buying. So any market environment, there are opportunities. Next time, we'll talk more about the specifics of that. Max Wasserman, founder, senior portfolio manager at Miramar Capital, around $500 million in assets under management, joining us from Northbrook, Illinois. Folks, counting down to the close, about 10 minutes to go in the trading day.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody, just a few minutes to go, under 7 minutes to go until we wrap up the trade. And then, of course, we're going to start to get big-time earnings. Amazon, shortly after the closing bell, is expected. And then about 4:30 p.m. Wall Street time, we'll get Apple earnings. A bunch in between as well. MicroStrategy, Amgen, Airbnb, GoDaddy, Reddit, Live Nation, Motorola. I'm leaving stuff out. Twilio, Instacart. There's a lot of stuff coming our way.
Yeah, but you know what?
What?
People really care about the big ones.
Yeah.
And this is the biggest day
They
when
do.
it comes to S&P 500 earnings.
It's a big deal, right? Yeah.
Oh, it's a huge deal. Yeah, there are a couple important stats to keep in mind. Maybe I'll repeat them during our simulcast, Carol Masser.
I bet you
Busiest day for the S&P 500 for earnings this quarter.
Okay.
62 companies worth a combined $9 trillion
That's a lot of stuff.
in market value.
That's a lot of stuff.
Hey, I know this next story is going to get your attention.
Because you're going to call my attention to it. Which story? I don't know where you want to go.
Salt talks.
Oh, gosh, you know. State and local taxes.
If there's one way I know I can push Carol Masser.
Me and Matt Miller.
You and Matt Miller. I was going to say, yeah, Matt Miller is like, I'm expecting to get some IBs from him in just a second.
If you live in this area, I mean, state and local taxes are a big deal. And when our deductions were limited, it's kind of a big bummer. It's just, it costs a lot to live in this area. So key House Republicans today talking about some different ways to discuss, to direct an expanded state and local tax deduction to those making less than $400,000 as they seek to balance the cost of the tax break with the political needs of several lawmakers from New York and other high tax states.
The $10,000 cap on salt is one of the most contentious issues in the GOP debate on its giant tax bill, and it remained unresolved as lawmakers left Washington on Thursday. Wait, why do they get to leave on Thursday?
I don't know.
I thought they just got back from vacation.
I know, just back.
I'm serious. Why didn't they just get back?
I don't know how that works.
Okay.
I mean, we only pay for their salaries.
Yeah.
I'm just saying.
I don't know. Interesting. Okay.
Yeah.
Republicans on the House tax panel discussed a series of options to direct the deduction to middle-class households. That's from New York Representative Nicole Malliotakis. She told reporters that committee members delved into options, including the overall cap level, how many years to extend it, and if there should be income limits for those who can claim the write-off, she said.
Yeah, so this is where targeting the middle-class taxpayer could be accomplished through an income tax limit or through the size of the cap itself, which would limit the benefits going toward those with the highest property and income tax bills. Can I just say?
Please.
Those
Go ahead.
have the
I'm
highest
listening.
state and local taxes.
Yes, yes, please,
I mean,
go ahead.
It's expensive to live around here. And so, I think when you start to put what might be considered middle class across the, like what's middle class maybe here versus middle class in another part of the country, I think some would argue is different.
You bring up a really,
And
really
so
good point.
this is, we know the cost of living on the coasts is often a lot more expensive than living perhaps in the middle part of the country. I'm not saying anything about, I know it. I have relatives who live in different parts and their state and local taxes are a lot lower. So I don't know, when you start putting an income cap, I don't know if that is necessarily fair for all states.
You know what we haven't heard a lot about lately?
And you know what people say?
What?
Why should we give you a deduction? Like, you get a deduction. What is it? The argument? Everybody else is paying, like, for your ability to deduct more, but we pay more taxes living in these, when you're higher income or higher.
This is why I like bringing up these stories.
I don't know that I'm being so articulate,
No,
but
this
it
is
gets
why I like
us
bringing up these
going.
stories with Carol here. You don't hear a lot
I
about
almost forgot that we have big earnings coming.
You don't hear a lot about the tax increase for those making more than $1 million a year, which we started hearing about a few weeks ago.
Yeah.
Some cold water was thrown on that.
How come?
Well, there were Republicans in the party who pushed back on that.
Why?
I think you'd have to ask them, but I think that...
Nice.
I know. I mean, I don't know why. I don't know why.
I don't know. I mean, people have been talking about millionaires.
These have to get paid. These tax cuts have to get
taxes.
paid for somehow, right? Especially, and especially the additional stuff on taxes on
I don't
tips.
know about you, but
no taxes on
I gotta
tips, no
balance
taxes
my
on Social
budget.
Security. Yeah.
Okay. I'm going to...
I love it when I bring... this is why I bring up salt.
Cleansing breath.
Let's see what Matt Miller has to say.
Yeah, I'm sure he'll be sending. Get ready for Apple and Amazon earnings. Folks, over to our TV colleagues. The closing bell starts right now.
This starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're taking you through that closing bell with a global simulcast. It's already started. Scarlet Fu's already here. Carol Masters there as well.
Was she wheeled in?
Too. No, she actually walked in today. Believe it or
used
not,
my
Carol
legs,
Master.
yeah.
You know, she does have legs, Colonel Dan. All right, welcome to our audiences across all of our Bloomberg platforms here on a very, very busy afternoon. Carol Master, we get a slew of earnings after the bell, including from the granddaddy, Apple.
Yeah, and I'm looking at stocks selling into the close here. We're still green across the screen, but we're moving down towards our lows of the session. Amazon, Tim, up about 3% ahead of earnings. Apple, it's been pretty little changed. Yeah, it's just up about 1/3 of 1%.
I'd said yesterday was one of the busiest days for S&P 500 companies. Today is actually the busiest. 62 companies worth a combined $9 trillion in market value. We've heard from some of them, but Amazon and Apple are the ones that we are focusing on in the next few minutes.
And it feels like after this, it's kind of, after the climax, we'll get NVIDIA in the coming weeks, but from here on out, it's really about listening for any kind of progress on trade deals. By the way, the Magnificent Seven and the NASDAQ 100 are now above their levels pre-Liberation Day. The S&P 500 getting ever so closer to wiping out those losses.
Just tripping when it comes to all of April. But guys, how much of this is short covering mechanical buying versus fundamental buying? And I wonder if we'll get any clarity on that after we open tomorrow.
Yeah, I am curious, though, about the earnings, particularly out of Amazon and Apple. We talk about everything that's gone on with the trade wars here. Two companies really at the center of that. And, of course, also two companies that have shown resilience through past economic travails. It's an 8th day of gains for the S&P 500 off the highs of the day, but a close, it looks like right around that 5,600 level as we wait for these numbers to settle. That's a gain of more than 30 points or 0.6%. The Dow Jones Industrial Average higher by 74 points or 0.2%. The NASDAQ Composite is out front on the back of those big results out of Microsoft and Meta, a gain of about 264 points or 1.5%. The Russell 2000 lagging slightly here on the day, up, but only about 0.6% on the
All right, quick check on the S&P 500, about 208 names to the upside in today's trade, 293 to the downside, guys, 2 unchanged.
All right, a quick look here at the IMAP. All the sectors related to big tech, infotech, communication services, consumer discretionary, they're leading the gains, each up by at least 1%. In terms of the weak segments of the market, you've got healthcare, of course, a clear defensive sector, down 2.8%. Consumer staples and materials, each down about 0.5 to 0.75%.
Well, just a quick check on yields as well. We saw selling pretty much all across the curve and the front end in particular. And the question was why? And no one seemed to know why. I talked to Ira Jersey, Bloomberg Intelligence is like, I don't know. The ISM manufacturing wasn't great, but it was a little better than estimated. So maybe it was that. Guys, Amazon's out.
All right, let's get to Amazon. That's crossing the wire right now. The company basically saying that in its most recent quarter, it did see net sales. I'm going to start with the bottom line here. So operating margins coming in at about 11.8%. That does appear to be a beat. EPS on the bottom line also appears to beat at $1.59. The street was looking for $1.36. Sales coming in at $156 billion, roughly in line with estimates. Here is your forecast. The company says that for the second quarter, it does expect to see net sales in a range of $159 to $164 billion. The street on average was looking for about $161. So the bottom end of that forecast is below what the street was looking for. Similar story on operating income, and the guidance on the EPS side, also a similar story as well. The company saying that it sees an impact of about 10 basis points from FX, given some of the moves in the dollar as well. Those are the headline numbers here. You see the knee-jerk reaction, guys, down about 3.6%.
Yeah, the second quarter operating income coming from between $13 billion to $17.5 billion, when the estimate was for $17.82 billion. That was a huge miss there. A lot of questions are going to come up about who exactly is absorbing the higher costs of what is coming from China in these goods that are sold to consumers, especially in the wake of what happened earlier this week with the back and forth between Amazon and the White House after that Punchbowl News report. But I think a lot of questions about tariffs on this call.
Yeah, absolutely. And I was just kind of doing a quick look through the press release. I don't see really any commentary so far on it, but it's going to be about that, right? In terms of their costs and certainly what they're seeing with consumers, maybe in terms of buying ahead of it, or what kind of slowdowns they might be seeing already.
And that's so interesting, given that so many people are saying that this is kind of the poster child for a company that's really hit by the tariffs in so many different ways. Yet you look at the commentary in the press release from Andy Jassy, talking about being pleased with the start to 2025, citing all the different things that they're working on, Alexa Plus, the new Titanium 2, Tranium 2 chips, Prime members expecting speed delivery records. It's as if it's any other quarter when we all know that there's so much in the balance.
Well, that's what was so interesting about what they said about tariffs. It was mentioned once in the press release, and it says, our results are inherently unpredictable and may be materially affected by many factors. They talk about the FX rate, changes in global economic and geopolitical conditions, tariff, trade policies, consumer demand, and spending, including the impact of recession fears as well as inflation. I mean, take that for what it is. Like, you have an outlook, but that's a material set of risks.
But that's like fine print at the bottom, right, about the financial guidance. And I'm wondering if that's any different than it would be 3 months ago.
Yeah, that's exactly like kind of the kitchen sink there of everything that could impact.
But what are analysts interested in, and what are we interested in? That's what's going to be asked on the call later.
And they're going to be asked, and I think the two things coming into this that we had talked to a lot of people about was that we know we're going to see a hit with regards to the e-commerce side of the business at some point in the future. The idea is AWS and some of the other services that they sell, can that hold up? So when you look at the growth of AWS in the most recent quarter, 17% growth, that's great. It was in line with estimates, though it's not materially different than what they had in the year ago period. Similar story for some of their other units here. You're not seeing an acceleration in that growth coming into this environment, so that's going to raise a lot of questions as to what these numbers look like for Q2 and beyond.
All right, guys, just to kind of recap, because we are seeing shares of Amazon down, kind of deep selling, almost 5% here in the aftermarket, so staying near the lows in the after hours. Again, the key line sees second quarter operating income $13 billion to $17.5 billion, quite a gap there. Estimate on the street was at $17.82 billion, and again, as Romaine mentioned, Amazon guidance sees impact of about 10 basis points from FX, but we really want the commentary and what they are going to say about the retail business, really important in terms of tariffs, because it's been an interesting week already in terms of speculation about the impact for Amazon.
And just in terms of the outlook here, just to put a more fine line under it, the second quarter net sales number will be $159 billion to $164 billion. Analysts were looking for, on average, $161.42 billion. I bring up the top line here because a couple of analysts have said that you really want to look at the top line. It's a pure read on what kind of issues the company faces, as opposed to the bottom line, where you can, decide to factor in different things, and you can figure out how you want to do accounting with expenses, with R&D. So you can tweak that as you want to, essentially.
Right. Let's get to some other earnings. Several crossing the wire right now. Airbnb shares down about 3%. They are mentioning tariffs. They are actually lowering their guidance and making it clear here that there are some challenges ahead. They're giving a weak outlook, basically saying that growth for the main metric that basically tracks nights in experience, that's expected to moderate from the 7.9 number that they had in the first quarter. They did not actually say what that new number would be, basically just moderation from the first quarter, and they've made it clear that they've seen relatively softer results in the past few weeks, and they expect that to continue in the weeks ahead.
All right, guys, just want to hit Instacart for a moment, because the first quarter appeared to do fairly well, and then we'll get to the outlook in a moment. So first quarter revenue, $897 million. That beat estimates. A gross transaction value, that's the key metric for them, is $9.12 billion. That wound up beating estimates. Looking at the outlook, that same number, that gross transaction value for the second quarter, looking anywhere from $8.85 to $9 billion. Orders for the first quarter coming up. Pretty rosy outlooks, guys. Best order growth for this company since 2022.
All right, Instacart to the upside, not the case for Block. It is dropping like a rock, down about 10% here in the after hours. It's down more than 30% year to date. The company cut its adjusted operating income guidance for the full year. The guidance missing the average analyst estimate. Here's the numbers. For the year, adjusted operating income of $1.9 billion. It had seen $2.1 billion. The estimates for $2.13 billion. Company sees gross profit of $9.96 billion. The estimate
estimates above that at almost 10.2 billion, and sees adjusted operating margin of 19%, had seen 21%. Again, continue to see block down about 10% in the aftermarket.
All right, and let's just take a look at Reddit. The stock is surging in after-hours trade after its second quarter revenue forecast topped analyst estimates. But if you look at the quarter that ended, that was a huge beat as well. Just to give you an idea, the average revenue per user, $3.63. Analysts were looking for $3.44. For this quarter, the second quarter, it is saying that it sees revenue from $410 to $430 million. Analysts were looking for just somewhere in the neighborhood of $393 million. So that gives you a sense of the scope of the beat here. And again, Reddit surging right now after posting this big beat.
I'm looking at Atlassian, shares of Atlassian ticker team down close to 15% at this point. Fourth quarter adjusted operating margin came in just shy of estimates at 22%. Fourth quarter adjusted gross margin coming in above estimates at 84.5%. The company's shares are falling post-market. Fourth quarter cloud revenue year over year up about 23%. Third quarter revenue for the most recent quarter up $1.36 billion, just above estimates of $1.35 billion. Shares continue to move lower, down 16.8%.
Roku also out with earnings. The shares had been higher. They've been oscillating between gains and losses. First quarter revenue did rise 16% in the quarter to about $1.02 billion. That matches the average of analyst estimates. Bottom line numbers also match the average of analyst estimates. However, the company did say going forward for the second quarter that its revenue might come in a little bit light. It's projecting revenue for the quarter of $1.07 billion, just a touch below what the street was looking for. It also gave gross profit guidance of $465 million, also a touch light from what the street was looking for, and adjusted EBITDA, Scarlett, of $70 million, or Carol, which is also a touch light from what the street was looking for.
All right, a lot of earnings. Just to recap, Amazon continuing to be down more than 4% here in the after hours. Again, seeing the second quarter operating income $13 billion to $17.5 billion. Estimate on the street is $17.82 billion. A lot of earnings, folks. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We know, Alex, you're heading out. Scarlett and Romaine, of course, continuing out there on Bloomberg Television, and Tim and I continuing right here on Bloomberg Business Week Daily. Thanks, guys.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. That's Carol Massar. I'm Tim Stenivek. I'm looking at shares of Amazon in the after hours, down about 4% as we speak. One number that really sticks out to everybody: second quarter operating income outlook misses. $13 billion to $17.5 billion. The estimate was for $17.82 billion. Let's get into it with Caroline Hyde. She's the co-host of Bloomberg Technology on Bloomberg TV each day at 11 Wall Street time. She joins us here in the Bloomberg Interactive Brokers studio. Caroline, typically we'd be talking about AWS.
Yeah.
In any other quarter.
That's crazy.
That's not at all. I mean, for years, that's what we would do. AWS, that's what we care about. That's where the margins are. But then you have Liberation Day, so-called Liberation Day. And now all anybody cares about is who's paying for these tariffs.
But I suppose there's also still the focus on margins. The reason we care so much about AWS is it's the profit driver.
Right.
But we're now worrying about a profit issue here with an operating income number coming in well below expectations. That breadth of guidance that they give us, that almost like 4 billion wiggle room, that's very normal.
Is that operating income guidance is that due to tariffs, or is it due to competition when it comes to AWS?
I think you have to work out also whether it's infrastructure spend. Look, what happened with Meta was that they said, look, we're going to have to be spending more on our capital expenditure because the infrastructure costs are going to be a little bit higher, but profitability overall is going to be sucked up by what ultimately they're going to have to pay for. From a margin perspective, is it that they suck up some of the margin, hit themselves to keep the consumer, which is in a vulnerable position, keep coming back to Amazon? Is it also that the third-party sellers are going to be retrenching a little bit more? What was going to be happening to advertising? Because they did really well on advertising. But if you're seeing from some of these Snap and the likes of others talking about the Chinese retailers no longer wanting to be overall spending on advertising, is that going to be taking a knot in terms of the overall margin generation? And ultimately, what does this mean in terms of how much AWS and its strength being able to prop up ultimately an e-commerce side of the business that has to suck up a margin hit if they're going to be able to keep the consumer coming.
We were kind of blown away. And I mean, I went through the press release really quickly. I didn't see tariffs. Alex mentioned one, but it was kind of in the the
Just
bottom
boilerplate at the
disclosure.
bottom.
Like they didn't seem to touch it, and you kind of
Would you touch it?
After
what happened this
Lee
week?
did not touch it.
After
right?
what happened
like,
this
she
week?
didn't even use the word tariff as the CFO of Meta. They at least put tariff and trade policies, which are the only new lines in that forward-looking guidance paragraph.
All right. So, but that's going to be
Don't
top of
say
mind.
the word.
I know. It's like kind of amazing, but I get it. I mean, I don't know. What kind of color can we expect from them? I think there's so much speculation. I mean, will they be able to really pinpoint the cost? Like, what are they seeing at this point, Caroline?
Because I think Andy Jassy did give an interview earlier in the month, well, earlier in last month now, in April. Isn't it mad that it's May? But
it's crazy.
Looking back, and really he was saying, look, there's going to be horses for courses. There are some negotiations that we're in the midst of.
Yeah.
And yes, maybe we start to try and push back and ask for ultimately the ultimate seller, the Chinese seller. Remember, Amazon gets about 70% of its products from China, whether they're selling them on their own platform, whether they're selling them via third parties. And so are they going to pass that off on them? If they're in the midst of a negotiation, maybe they do. But otherwise, if they've got the contract already existing, they're going to have to suck it up a little bit themselves. And we certainly know that they're not going to be making it evident how much the tariff is going to be adding to their prices.
Well, how do you roll that into, right? That's the report that they... were they really considering?
I'm sure... a lot of these things, it's the same with the Tesla story, and then potentially maybe they have to consider a new CEO at some point. There's probably no smoke without fire. I'm pretty sure at some point the whole side of the business, now the
That's
whole
the
side,
Shein
super
sort
low
of
cost. Well,
version
Shein
of
and Temu are making
Amazon.
it evident how much tariffs are increasing.
They are.
So probably you went internally, oh boy, that's what they're doing. Maybe we should consider something similar. But at no point was this signed off. At no point was this run up the ladder and them going, oh yeah, off you go, start making it evident. So I'm pretty sure that they are clear that this was not signed off, this was not agreed
But
to.
they have to be
But they
discussing.
have to consider it. It'd be foolish not to.
Amazon at least find itself in the position that this is not a story that's unique to Amazon from the perspective of a retailer. A company such as Walmart and Target would have to go through the same thing.
Oh, so true.
What is different, though, is Amazon's exposure for its cloud business. So we can't look at Microsoft as sort of a pure play comparison to Amazon anymore, or even Google Cloud. What does it mean that Amazon, it kind of doesn't matter if they have to raise prices to the extent of competition coming in and saying, we can get this product for cheaper for elsewhere. Because if Amazon's prices go up from their suppliers, I'm talking physical goods here that are sold through the retail site, everybody's prices are going to go up too. And that just means, as American consumers who buy this stuff, we're the ones who are going to have to be paying.
And that is trying to be what's told to the consumer base right now. Evidently, this is going to be an inflationary pressure. Bank of America Securities, ahead of these numbers, put it really well, that basically, it's going to be the biggest focus is tariffs. And given that everyone's in the same boat, ultimately, you're going to have to bet a little bit that Amazon's going to weather this better than anyone else. They've got the cash on the balance sheet. They've got potential ability to stomach some of the margin hit much more so than a Wayfair or some others that are offering e-commerce out there. And so, Amazon is the one perhaps in this difficult situation that you build on to ride out the storm.
But there's always the flip side too, because, the 70% of their goods, right, that come from China, whether it's directly or through, they employ Chinese workers, right? So I'm just curious, what's the Chinese perspective on Amazon and the importance it is to their economy? Do we ever think of, I don't know.
I don't know, and that's the key question for Xi Jinping, is that ultimately how much do they have to support their own economy, support some of their exporters at this moment? And I'm pretty sure that China has decided that they're going to fight fire with fire in many ways and decide that, look, if you want to cut us off, so be it. But I think Amazon is the one in the position here that has to help with the renegotiations, has to stomach some of the margin hit, because we don't know where this is going for the next few months. At the moment, they're facing 125% tariff.
Right.
Where does it go from here? How much are they able to change supply chains? So in an interim, they probably suck up the margin hit. In the longer term, how do they start to change? As we've seen with Apple, suddenly a lot of my goods are coming from India now, which other countries start to benefit. But you're right, what is their relationship like with their suppliers? How are they trying to make things? what things that's interesting with Amazon always, they're not afraid to disappoint investors on profit.
Good point.
Yeah.
Their sales are actually looking pretty good.
They spent a decade doing it.
Yeah.
A decade doing it.
Their forecast is good and resilient for sales. It's just they're saying, sorry guys, suck up the operating margin hit.
The stock is now, I mean, still down 2%, but it's not down 4 or 5%, which it was before.
Call hasn't started.
No, true.
And they're talking all about the innovations. They're talking about the satellite side of the business. They're talking about putting Saks as an offering on the e-commerce site. They're talking about what you can get in terms of AI innovations if you're coming to their cloud computing. Also, their foundational models that they're going to aim at consumers too. They've got their own chips. They're going to try and talk up the resiliency of their business model when in the interim, yes, they might going to have to pass on some cost to the consumer base, and the e-commerce bit just lags somewhat.
It's just like, as you said, amazing. We would normally be just like all over AWS.
AWS, that's what
it's just kind of fascinating,
about.
right?
Caroline, you got to go.
Yeah.
TV is calling. They want to talk to you.
Thanks.
Caroline is the co-host of Bloomberg Technology on Bloomberg TV, 11 o'clock Wall Street time. Let's go continue on Amazon, specifically on the retail side. I want to bring in Poonam Goyal, senior analyst for e-commerce at Leisure, off-price retail for Bloomberg Intelligence. She joins us from New York City this afternoon. Let's talk about this miss when it comes to second quarter operating income, the outlook there. Is that a result of tariffs in your view?
It has to be, because when I think about the operating margin that they just posted with AWS, incredible, near 40%, the downside that we're seeing going into 2Q, I can't think of anything else that could be driving that than higher costs that they'll have to absorb due to the tariffs.
Are you surprised that, we kind of, went through that press release. There's really nothing on tariffs. There's that disclosure that kind of dumps everything at the very bottom of the page. Not surprising to see that they didn't really address it in the release, and I guess it's all going to come out on the call.
Yeah, I think there's going to be a lot of questions about tariffs. Keep in mind that, Amazon is directly exposed on the 1P side. So roughly 40% of its business is where they do have to deal with tariffs. The other 60%, that's 3P, the sellers have to deal with them. But Amazon helps you set the price on its platform to make it competitive. So there's just a lot of back and forth that's going on. And with some suppliers, they are working one-on-one to see where they can help offset the price increases. But the biggest delta between 1Q and 2Q is tariffs. So the guidance that we see here has to be a result of that wide net that they've casted.
You mentioned the P's.
What are you
Translate for us.
Sure, third party and first party. So first party is when Amazon owns the goods. So basically they take on the cost. And they directly source it from the supplier. The third party is if you and I go onto Amazon and we start selling stuff.
What's the breakdown in terms of actual goods that are sold third party versus first party?
Sure. Third party we estimate is about 65%, and first party is about 35 to 40%. So
okay.
It's 60-40.
And is there more, third party is more from China, or do we not know, than first party?
Well, Amazon doesn't tell you how much they get from China, but just by looking at what's on their platforms and third-party data, irrespective third-party or first-party, it's estimated that over 70% of what's sold on the Amazon.com platform is from China. So it's a large, large, large piece of their marketplace.
And just to remind everybody, I mean, you study e-commerce, athleisure, off-price retail. This is your world. This stuff is made overseas. Very little of it is made here in the U.S.
Very little. I mean, food is the only thing we may procure locally that Amazon sells, really. Everything else, the bulk of what you buy in retail in the U.S. is made outside of the U.S. It doesn't matter who you are.
What?
I don't know.
Okay. I'll let him have a moment. What's interesting, Poonam, we kind of just laugh that normally when we're talking Amazon, we're all over Amazon Web Services, and it's like, oh yeah, that retail business. So what an interesting kind of report to go through and what we're focusing on. I do want to point out, though, that AWS reported first quarter sales gained 17% to $29.3 billion, in line with analyst estimates. It was the unit's slowest growth in a year. So it does feel like, I don't know, what do we get out of that?
I think it's okay. I mean, we're going to see businesses pull forward spend, pull back on spend. There's still a lot of momentum here on the AWS side. And really, while the sales were just in line, the margin was incredible, 39% operating margins, 39.5% roughly. That's huge. Consensus is looking for about 35%. So we do think, this business will ebb and flow and you'll have high margins, you'll have low margins depending on where they invest. But the long-term potential of AWS is still pretty sizable, and there's a long runway here.
Okay, so if we think about this in the context of what we've heard from other companies thus far, what we heard from Microsoft yesterday, and as a reminder, I mean, you cover the e-commerce, the athleisure, the off-price retail. How do you think about this in terms of the retail world, like the Walmarts of the world, the Targets of the world? How does this report sort of inform the way we should be thinking about and investors should be thinking about those other companies?
I think if Amazon's facing these tariff headwinds, so is everyone else, including Walmart, including smaller companies, medium-sized companies. And really, there is no escape from this. Unless we see things calm from here, the 145% tariff that you see on China is sizable.
Yeah.
And if that stays that way, the consumer is going to be paying higher prices. We will see some out of stocks on shelves in the coming months, as most companies have halted shipments from China. And it's not going to be an overnight switch to take everything that you make in China to somewhere else.
Or even impossible for some things, some analysts have said. Well, you said empty shelves. Right. Where are we going to see them? What do you think we'll see empty?
I saw empty shelves, but in like a drugstore, but I don't know.
That's because everybody stole everything there, Carol.
I know.
Come on, don't you know how this works?
I know it's always a little war perspective. Go ahead, Poonam, sorry.
Well, you won't see empty shelves on Amazon, but you will see out of stocks. In fact, I was just browsing the web randomly, and I started to see some things that just said out of stock, like we'll let you know when it comes back. So I think you'll start to see inventory, especially that comes out of China, be put on hold. And we don't know when it'll come back, because unless you raise the prices or double them, you're not making the same margin on them.
What's the consumer's willingness to pay for this stuff? Because as I was mentioning to Caroline, if we see these price increases across the board, if we see them at Target, if we see them at Walmart, it's not like this is an Amazon-specific story. We're going to see this everywhere. At what point does the consumer throw in the towel and say, I'm not going to do this, I'm not going to pay?
I think the consumer will say, I'm not going to pay when prices go up 30, 40%, right? It's going to get more expensive. And if they say they don't pay, it means before they bought 10 things, now they'll buy 3 things. Where are they buying those 3 things? Are they going to trade down from a national brand to a private brand? Are they going to buy more staples that they can, like staple colors that they can reuse, recycle, rewear, and wear less fashion that goes out of style quickly? There's going to be trade-offs if prices rise materially. That said, we do think that, people will just switch brands, they'll switch options where they can get things cheaper. We're going into the back half in just a few months, and that's the peak selling season of retail. When you think about toys specifically, right, for the holidays, when you think of back to school.
Yeah.
I mean, what do you get your kids if you're not going to get them the Barbie? And you're not going to pay,
Can only get them 2 Barbies.
Not 30 Barbies, Carol.
Only 2 dolls.
Yeah,
apparently.
2 dolls.
Right.
Sorry. No, I'm just repeating, what we've heard. Hey, one last question. I will say, though, with the Amazon cart, like when you put them in and like you automatically see the value, like if things start to get more expensive, like you might pull back. 30 seconds, top question you think must be asked on the Amazon call.
How are we weathering this tariff storm that we're going into, especially, with 3P sellers? How are they going to control that Amazon is still an attractive place where value is seen, because they don't have a control on prices for everything?
All right, going to leave it there. Hey, Poonam, thank you so much. Super good conversation. Poonam Goyal, Senior Analyst for E-commerce, Athleisure, Off-Price Retail for Bloomberg Intelligence. Shares of Amazon, by the way, which gave a weaker than expected forecast for operating profit in the current quarter. Stock is now down about 3.7%, off its lows, but still down.
Let's bring in Ed Ludlow. He's the co-host of Bloomberg Technology on Bloomberg TV, 11 o'clock Wall Street time on Bloomberg. Ed, this idea, this narrative that's emerging, tariffs, trade policies that could cause consumers to pull back on spending. How are you looking at this number that is sending shares lower in the after hours?
So what's so interesting is we've got to get super specific on Amazon's statement. For many quarters, Amazon used words substantial uncertainty in the basic boilerplate or footnotes of their forward guidance.
Right.
Actually, in the statement, Andy Jassy and the text of it doesn't say anything about trade or tariffs. What they've done is add this language to the blurb that precedes the financial guidance, and they say may be materially affected by many factors, such as fluctuations in foreign exchange rates, but they went on to say 10 basis points in the current period, changes in global economic and geopolitical conditions, tariffs, and trade policies. It's in the boilerplate. That's so interesting. Like if you
but it's boilerplate. Don't you put everything? You throw the kitchen sink at it, right?
You yes, typically you would. But what I'm saying is that they're not attributing a quote to the CEO, Andy Jassy. They're not putting it in the specific bullets that are in the press release.
It's in the fine print.
It's in the financial fine print. And that is such a subtle way of getting at this. And so Poonam is amazing, right? But the way that you look at it is that operating income is largely derived from the cloud unit.
Because it's AWS is the most profitable part of Amazon's
I guess my
business.
point is we don't even have the answer yet. You've got to wait for the call, and then you might find out some detail on what the actual impact of trade was.
But I guess the question is, since we learned from Microsoft yesterday that the cloud business is alive and healthy, perhaps people are looking at this and saying, okay, if second quarter operating profit for the quarter that we're looking at right now, if we're seeing that as weaker than expected, then that profit is being offset by Amazon eating tariffs or the consumer pulling back.
You should be an analyst. That was pretty good.
But is that, I mean, that's how I'm interpreting it.
That's completely accurate. I mean, let's go really simply. In cloud computing, Amazon is the #1 player and Microsoft is the #2 player. Microsoft, the #2 player, grew its cloud business by 33%, which is an acceleration of growth in tough environment and exceeded people's expectations. Even on the net sales, AWS, did they miss in the first quarter? Just slightly. On the net sales, right? But it's not that you're not going in the right direction, right? You say disclosure, that's against the average of analysts' estimates, but that's kind of interesting. And then all I'm saying is that operating income, which is the metric that the market's trading on until we get to the call, just the bulk of it comes from cloud. Yet clearly did an expert job at like explaining that, on the .com side, there's going to be impact. But I'm just saying we don't actually know anything yet.
We don't really know. I mean, like going back to the press release, like you said, well, for them to throw it in the boilerplate area of the press release, which to be quite honest, when I went through, I'm like, oh yeah, that's the boilerplate stuff. Like I kind of blew it off.
A company goes public and they're doing, they release the S1 or whatever.
Yeah,
it's like everything is in there.
A lot of stuff could go wrong.
Yeah,
we understand.
The sky could fall.
So what does that mean from someone who follows this company so closely when they throw it down there?
I'm just going to state matter-of-factly, for lots of quarters, all that paragraph said was substantial uncertainty. And now it says many more things that it didn't say before. Yeah. And that's quite a deliberate decision by an investor relations team or anyone else.
So significant on its own.
Yeah.
It's kind of like a Fed statement, right? Where when you go through and look at the changes to the Fed statement.
But does it have to also do with our political environment?
I think that it's been a difficult week. Recap, Punchbowl reported that Amazon would label the tariff prices on the platform. Amazon disputed that reporting, but then actually explained it had been considered for a very specific part of their business called Haul, which is low-cost goods, and it drew the ire of the administration. And I don't know. How can I possibly know that? But it is just an interesting language. Go.
We'll get an Apple.
Let's go for it. Second quarter revenue.
Meets estimates.
Let's go to it. Yeah. Second quarter EPS, $1.65 a share. That's 3 pennies better.
China.
Board authorized a buyback of up to $100 billion of company stock. Greater China revenue, $16 billion versus the estimate of $16.83 billion, so that's a miss. And second quarter revenue, $95.36 billion, a little bit better than what the street was expecting of $94.59 billion. You've got shares of Apple just down by 0.8%, 1% lower here in the aftermarket.
Remember, this is the current quarter. This is Apple's second quarter right now, even though it's the first quarter of the year.
This is an outlook, right?
Digging into this is not the outlook, exactly. Digging into these numbers a little bit. Second quarter iPad revenue coming in above estimates. Second quarter iPhone revenue coming in above estimates. Second quarter operating expenses coming in above estimates. Second quarter Mac revenue coming in above estimates. Second quarter wearables, home and accessories coming in shy of estimates. Second quarter products revenue coming in above estimates. Second quarter revenue as a total coming in above estimates. And that second quarter EPS coming in just above estimates.
Zero mention of the word trade, zero mention of the word tariffs in the earnings statement.
Makes sense.
Strong performance on iPhone overall, by the way, in terms of it exceeded analyst estimates. I'm going to choose some words here from Apple CEO Tim Cook. Actually, no, sorry, forgive me. It's actually from
the CFO,
isn't it?
Yeah.
Thanks to our high levels of customer loyalty and satisfaction. I'm probably putting more emphasis on that than we really should, but the iPhone was strong there. The other way of looking at it is, let's go back to the third-party soft data. What did it show us? people bought handsets and moved handsets in the first 3 months of this year before tariffs took effect?
They pulled it forward.
We did.
They pulled it forward. Like everybody was doing. I mean, we
can't
saw.
say one of our colleagues like bought them for all the family. Well, their iPhone revenue, right? 46.84 billion. The estimate was 45.94. That's a sign of people pulling forward.
All I'm saying, every quarter before this tariffs and trade were the story, we would always discuss about how, oh my goodness, the third-party data that tracks the handset movement from China, it's so weak. And then every quarter, Apple would turn around and outperform. This time, we kind of have the logic or evidence that we know the third-party data was strong in that period, and it showed that even if people weren't buying the handsets, they were moving across borders to make them available.
You know what? That quarter's done. We care about this quarter, Ed. As Mark Gurman reminded us again today, doesn't care necessarily about these numbers. He said it again. I gave him the opportunity to move away from it. He said, nope, I'm sticking by it. I want to hear commentary about trade. I want to hear commentary about tariffs. Before we get there, though, Ed, I want to get...
Like he wants to know margins, prices, right?
Yeah,
are they going
to raise prices? They have pricing power, at least here in the U.S. Second quarter Greater China revenue came in shy of estimates. $16 billion, estimates for $16.83 billion. How do you look at that miss?
Let's just state what's fair is that we don't know the answer, and on the call we're going to learn an awful lot, aren't we?
Yeah.
But same with the Tesla narrative that we had a couple of weeks ago. Apple is an American company, and if you are a Chinese citizen, part of the still growing middle class buying a handset, do you buy an iPhone or do you buy something domestic? You'd wager that the sell side will pose that question. It's soft. It's not that much softer. It's a miss, right? But again, what they will say is they will look at what they often do is they say, we thought we were the number one in this market, handset by handset, or we're the number one in terms of Mac. If they maintain that commentary, I think that would be some confidence for the street. You know what I'm talking about? They often say, like, according to our own research, we are the number one smartphone in this price category in that market.
Right.
You can't tell that from the earnings release. You just don't know. What we know is that Greater China came in below consensus estimate.
China's a tough market for the handset, though, because you don't have the same network effects that you have here in the U.S. when it comes to that iOS ecosystem. Like, we talk about the blue bubbles versus the green bubbles here.
Yeah.
But if you're using over-the-top messaging apps like WeChat, it doesn't really matter if you jump from an Android-based smartphone to an iOS smartphone.
Just to rehash,
it's a lot easier to do, too.
Recap. Apple shares, they're down about, 1.8%, 2% in the aftermarket. Again, the company's revenue, it did for the second quarter come in better than forecast. Second quarter iPhone revenue came in stronger than forecast. Second quarter Greater China revenue was light, $16 billion versus an estimate of $16.83 billion. And again, the company authorizing up to $100 billion share buyback boosted its dividend as well. Apple's shares, just real quickly, they're down about 15% year to date. So maybe not a surprise that they continue to have tons of cash. Not a surprise that they continue to do these buybacks.
It's a sweetener. It's a very nice thing to do. What do you do with cash in this environment? Don't even get us started on M&A and antitrust. I'm extrapolating here. There is literally nothing in the earnings statement that we can kind of really go on here.
So I feel like the same thing with Amazon in a large way, right? Just
you gotta wait for the commentary.
Like sanitized, and just here's the numbers, and we'll see what they have to say on the call.
Well, again, like this is their fiscal second quarter.
Right.
But think about what happened in the period, the reporting that they airlifted handsets out of India to the United States. So I'm looking at operating expenses coming in slightly higher than the street thought. It's marginal though. We have no idea if it was more expensive for them to
It doesn't tell a strong tale yet, right? Based on the numbers.
You've been following closely everything that's happening with trade over the last month.
Sure.
When you think about tariff exemptions for Apple's products, there was the confusion in the early part of April that, okay, these handsets are going to be, if they're coming from China, they're going to be charged a tariff of 145%. Then there was that news that actually we're going to exempt them because we're going to see sectoral tariffs on the whole category as related to chips, et cetera. I mean, what is there guidance? Is there clarity about the tariffs that Apple will face if the products come from China?
So think about what happened when the president initiated the pause. The administration followed up and said, but we will be coming with specific policy for semiconductors. But They didn't say we will follow up with specific policy for handsets and assembled consumer electronics.
The way I read into it was that the semi policy will encompass this stuff. Is that wrong?
Yes, but depending on the point at which they apply a levy, right? So China has a very clear definition that in the context of a semiconductor, a chip, the levy, their reciprocal levy would be applied where it's called taped on. That's where the digital, the electronic instruction set, the design of the chip is typed up. That happens usually in close proximity to where the chip's manufactured. Where are they manufactured?
China.
Right. So if you're, or Taiwan.
Or Taiwan.
If you're at Qualcomm, for example, I'm trying to keep this as simple as possible. You design that chip in California. It's taped on in Taiwan, so your exposure to the levy in that direction is not as much. America didn't give those clearly defined definitions, but my point was, because the president didn't say, I'm going to come up with a plan for smartphones, a lot of behind closed doors, frankly, what CEOs would tell me is they think that it was Apple that kind of was the really big winner of that pause, or they were the ones that initiated it.
Yeah,
you saw the way Apple shares moved as a result of it.
Just to recap again, Apple shares, they continue to trade down about 2%. Again, we talked about, I mean, the numbers are kind of clean, and if there's a miss, maybe except for China, it's not a lot, and there was a second quarter revenue beat. iPhone revenue beat, and again, boosting the share buyback, but down about 2%. And just real quickly, Amazon is down about 4% here in the aftermarket. And again, that second quarter operating income below street estimates. But again, we need to know the details on all of this.
Well, that's my question for Ed right now. Ed, given that we didn't get much in terms of looking forward in the current quarter from Apple's report, I think it didn't surprise a lot of people. Maybe we'll learn more on the call. In your view, is that potentially why we see the stock moving lower right now? Investors said, okay, fine, second quarter, fiscal second quarter is done. We want to know how you're thinking about the current quarter, and we just didn't see that yet.
We just don't have, I mean, Apple's also being consistent because the earnings statement or press release, call it what you will, it doesn't often include that anyway. You know, it gets to the call, it's usually the CFO, and they usually say, you know, tracking into the current quarter, we're seeing X, Y, and Z. You know, I think on the Bloomberg terminal, we're putting emphasis on the idea that services missed estimates. But, you know, Apple's pointing out in the release that services revenues continue to push to all-time highs, and they do that every quarter.
It's a slight miss.
It's a slight miss, but it's proportionately becoming more important, right?
Okay.
And we haven't even said that word yet. We haven't even said the word Siri. We haven't said the words A or I, you know? And like, it's so weird. But there's not a lot to talk about in the statement on that front either.
Go ahead.
Well, I will say, Ed, at the end of this statement, just the press release, it goes on to include what Amazon included as well, the boilerplate, risks and uncertainties include without limitation, effects of global and regional economic conditions, including as a result of government policies, trade and other international disputes, geopolitical tensions, conflict, terrorism, natural disasters.
Are these guys talking to one another? Are they talking?
It goes on literally all the way, you know, to the end of the paragraph, including, you know, natural disasters, public health issues, and other things.
Well, hold on, let's do this. Keep going, and I'm going to bring up the prior quarter's boilerplate and see if it's the same on Apple, and then at least we can...
It is like a Fed statement.
You know, it's very interesting, but like, you know, loads of your listeners will know this if they work on Wall Street or in the world of public companies and finance. But this is a collective effort when you publish earnings between leadership, the IR team, investor relations, and the press team. The wording is chosen very deliberately. You know.
Yeah, a lot of eyes see it.
It's the reason they get paid the big bucks.
Are very aware of what they, of what they chose. Yeah, we know the challenges, right? In terms of Apple, AI. This is something we did talk about with Mark Gurman. You know, he wants to know what they're doing in terms of AI, the innovation, you know, for this company, where it's all coming from. And so these are things that maybe we would assume will come up on the call, and we'll see what they have to say. But yeah, kind of wild. But again, very different from where we were 24 hours ago when we were breaking down Meta and Microsoft. Obviously not apples to apples, but both of their results soaring in the after hours
Trade is
yesterday.
not in the one last quarter.
Geopolitical tensions, conflict, terrorism, government policies, but Apple has also added that to the boilerplate. And I don't know what happens next, but while you guys work it out, I'm just going to email the editors and make that point in case we missed it.
All right, you go ahead and do that. We're
I hope they're listening or watching now.
Co-host of Bloomberg Technology. Folks, we're continuing to watch Apple down about 2.2% in the after hours, Amazon down nearly 5%. Let's, a lot of earnings, though, after the close, as Tim reminded us earlier. It's the biggest, I think, earnings day for the markets and certainly for the big tech companies and big companies overall. Let's get a check on the aftermarket. Here's Charlie Pellet.
I thank you very much indeed. One more component of the Apple story, the iPhone maker also announcing plans to increase its share buyback program by $100 billion, also boosting its quarterly dividend 4% to 26 cents a share. As we have been reporting after hours, we do have Apple shares selling off, down now by just about 2.6%. They are at the low of the aftermarket. Apple sales from China declined more than anticipated in the latest quarter, overshadowing otherwise solid results from the iPhone maker. Right now, Apple down by 2.5%. The other big A stock after the close of trading, Amazon.com, out with a weaker than expected forecast for operating profit in the current quarter, citing tariffs and trade policies that may cause consumers to pull back on spending. After hours right now, we got Amazon down by just about 4.7%. Amgen outperformed Wall Street's quarterly profit estimates as it moves forward with plans to crack the multi-billion-dollar market for novel weight loss medicines. Turned out to be an up day for the Dow, the S&P, and NASDAQ. S&P higher for 8 straight days, its longest winning streak since August. Max Wasserman is co-founder and senior portfolio manager at Miramar Capital. And right here on Bloomberg Business Week Daily, he offered up this advice for investors.
Short term, fasten your seatbelt, and they say, and put the trays in the upright position, because it all depends on what the White House says. And then next week, what does the Fed say about this?
Right now, the S&P down by 35 points, 56.04, where we ended the trading session. Up the S&P up 35, up 0.6%. Dow Industrials higher today by 0.2%. Nasdaq up 1.5%. But again, the key takeaway there, we had the S&P up for the 8th straight day. The 10-year yield 4.21%. The 2-year 3.69%. Gold down 1.5% right now, 32.38 the ounce on the precious metal, and crude up 1.4%, 59.02 a barrel. Our Apple, our Amazon coverage continues. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, along with Tim Stanovic, live here in our Bloomberg Interactive Broker Studio. Ed Ludlow still with us, too, of course, co-host of Bloomberg Technology. And we want to bring into the fold Mark Gurman, back with us, managing editor for Global Consumer Tech out there in our San Francisco bureau. All right, so Apple down about 2.7%. Mark, we know you really are interested mostly in the call, but the numbers are out. What, if anything, is of interest here or you think is notable?
I mean, overall revenue is up 5% year over year, so obviously that's a good thing. You saw iPhone sales beat slightly expectations from Wall Street, so that's a good thing. It shows some solid momentum for the iPhone 16e. Notice that Tim Cook mentioned the 16e in particular versus the Pro models, which generate the most amount of revenue for Apple, obviously. Mac did a little bit better than expected, iPad better than expected, but we saw some softness on China, services, as well as wearables, home, and accessories. Wearables, home, and accessories, the softness there continues. It's been this way for several quarters. That's sort of surprising, given the momentum that we've seen in the past on the Apple Watch and the AirPods and some of those peripheral products. Services still pretty considerable double-digit growth, but not at the same level that Wall Street was anticipating. Services in particular is quite interesting because that's going to probably be a real headwind for Apple in the coming years now that they're needing to adjust some of their App Store policies in relation to commissions. And then, of course, we have the Google search deal overhanging all of this stuff. That's a double-digit billion-dollar annual revenue stream for Apple that may also go away depending on where the U.S. government goes with this trial against Google.
A lack of commentary, though, and maybe we'll get it on the call. I know you're looking for it, about supply chains and about tariffs. Do you think that's why investors are sending shares down ahead of this call?
No, I think it's because of the continued softness in China in particular. Obviously, China is Apple's third biggest market. China really swings the pendulum here when it comes to Apple shares going up or down on earnings calls. And in this case, we're at an annual decline, certainly an annual decline compared to where Apple was 2 years ago in China this time around, and then missing Wall Street expectations by about $500 million. So definitely not a good sign for Apple in China. And I think investors, or at least those analysts on the call, are going to have a lot of questions about that. But I hope they do dig into tariffs as much as possible.
Hey, Mark, I just want to go to the iPhone beat, because like it all comes back to the iPhone sometimes, right? 46.84 billion. Estimate was 45.94. The third-party data showed a lot of consumer electronics flying around the planet in the first 3 months of this year. Do you see any sort of evidence just from the pure number that this was people buying handsets front-running tariffs in anticipation that maybe prices might go up in the future?
I don't think the front running of purchases to avoid price hikes in the future really happened until, late April, when that's already within Apple's third quarter. So no, I don't think that any of the iPhone sales numbers that we're seeing here really were influenced by people trying to get ahead of tariff price hikes. I mean, Trump made his announcement in early April, and this was not really in the public consciousness until then, which again is the start of the third quarter for Apple. So I think the impact there will be in the current quarter, and I'm looking forward to hearing any guidance that Apple gives on the call, which may give us a taste of how the iPhone's going to do in this current period.
Mark, well, go ahead, Carol.
What do you think they're going to say in terms of price increases? It's something you gave us a heads up on earlier, in terms of margins, impact, and then price increases, in this tariff-filled environment. So do you think we'll get any kind of clarity or specifics on that?
So if I was a betting man, at least one analyst is going to ask about the potential for price increases. And if I remained a betting man, I would say Tim Cook would say, we'll see, nothing to announce today. And then maybe, if we're lucky, talk about how they think about these types of things.
How does Apple do price increases?
Well, they really don't. I mean, the iPhone price has been stagnant for the most part. There are some exemptions over the past, 7, 8, 9 years. So they really don't do price increases. And so when they do make the price increase, they're going to do it from a position of strength. They're going to focus on installment plans. They're going to focus on carrier deals, and they're going to focus on the technologies that they've implemented over the last decade to make the iPhone more valuable. They're going to talk about how useful the phone is, how it's equivalent to X number of cups of coffees a year, et cetera. And they're definitely not going to mention tariffs as a reason, because they saw what that did to Amazon the other day.
All right. Well said, well said. Looking forward to your reporting after the call as well. Mark Gurman, Managing Editor for Global Consumer Tech, Bloomberg News out there in our San Francisco bureau. So, Ed, just got about 30 seconds here. I mean, what are you thinking about? Is it just, again, tariffs for Apple or Amazon? I don't know.
Yeah, to Mark's point, if it wasn't that front running on the iPhone, then what was the beat? Are people still in love with the iPhone? I think that's a really basic question. But again, all we've got to go off on right now is that we noticed that Apple added the word trade.
Right.
One single word to the boilerplate in the forward guidance or financial disclosures disclaimer. And
both of them, right?
I'm surprised Apple didn't have that in there already, given what we knew about this administration and the way that those risks are listed.
Global supply chain, the iconic
they know what happened in
global supply
2017
chain.
too. Yeah, but hey.
Ed Ludlow, thank you so much.
Never a dull moment.
Fun to do this with you. Ed Ludlow, co-host of Bloomberg Technology on Bloomberg TV at 11 a.m. Wall Street Times. Shares of Apple down 2.4%. Amazon also lower.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody, a very, very busy Thursday afternoon. Two big mega cap Mag 7 companies, as you know, just reporting. Apple down 2.5% here in the after hours. Amazon down about 4.5%. Keep in mind, we now move on to the call.
That's where the action happens.
Yeah, there are so many questions because, as we said, the reports seem very clean, streamlined, and not a lot of commentary about the uncertainty or the tariff environment and all that good stuff.
I mean, if you're an analyst and you have the questions,
they're
going to be about tariffs and about trade, right? That's what it's going to be, right?
I mean, yeah.
So,
you know, as we were saying earlier, in terms of Amazon, that second quarter operating income, we want to understand why that outlook is not what the street's expecting. Where is that coming from? Is it AWS? Is it retail, right?
Yeah, that's exactly the question. Also, when it comes to Apple, what are the questions that people have for supply chain expert Tim Cook, who has spent decades building up this global supply chain, now that he faces tariff concerns and I think it's fair to say, Carol, a trade war between the U.S. and China.
And Mark Gurman saying those iPhone numbers, which came in better than forecast, he did not think it was a lot of pull forward.
Yeah, that's interesting.
So, okay, so where is that coming from?
Maybe you just pulled it forward.
Well, I know we did, but I know a lot of other people who were doing, buying some iPhones. All right, guys, a very, very busy day, and the markets overall finishing in the green, but off their best levels of the session.
Let's get a look at some stocks on the move today. Bloomberg News managing editor for the Bloomberg Markets Live blog, Christina Kino, is here with us. What is on your radar?
Well, we have to talk about it. Amazon and Apple, of course, Tim. Let's start with Amazon. Well, yeah, because Carol, you're exactly right? It's, what is going on with that miss in the operating profit for the current quarter? I mean, AWS, though, was slightly a beat. It's a 17% gain to $29.3 billion. So, well, it's not a beat. It's more in line with analyst estimates, but that is still the slowest growth in a year. So probably a lot of questions over whether the valuations that we're seeing for Amazon at the moment, does that still justify the potential, particularly on the AI front? And of course, probably a lot of questions over their supply chain, because that is the one thing that is on a lot of people's minds. Remember that Amazon made headlines earlier this week because there was a report that said the company was considering displaying the cost of tariffs to shoppers, which the White House lambasted them for, and ultimately they said that they wouldn't implement it even though they were considering it.
Yeah, no, it's going to be fascinating what else in terms of color and commentary we'll get around these numbers, because there wasn't a lot initially in the press releases, but we did mention that Amazon shares definitely taking a hit here in the aftermarket. What else?
Well, Apple, of course, the big focus there is that second quarter Greater China revenue missing estimates just ever so slightly, $16 billion versus an estimate for $16.8 billion. But of course, again, that supply chain question, right, especially now that tariffs are front and center, probably going to take center stage for that analyst call. The good news, I suppose, is that the iPhone revenue beating slightly here, $46.84 billion versus an estimated $45.94 billion. We did know that Apple was slowly starting to shift its production line, right, from China, even though that was a weak spot for them. We did get a report last week saying that they were seeking to import most of the iPhones that they sell in the U.S. from India by the end of next year. But that's, of course, an ongoing process, and clearly that's not yet complete. And so there's still a lot of exposure for them when it comes to this U.S.-China trade tension.
You reported for Bloomberg outside of the U.S. for many years, London, Singapore. What was your view then? And you've been here in the U.S. for a few years, but what was the view then on Apple and Apple products? High end of the market, luxury market? Like, what was the view?
Yeah, I mean, I think it was still considered one of the best of the best, when it comes to the consumer phone sector. Though I have to say, I did see a lot more Androids in Europe and in Asia, because there was a kind of Samsung competition that was coming around. And I was one of the early adopters, actually. Remember those folding phones that Samsung had? I had one of those giant folding phones. It was pretty cool, though it got a little too big for me, actually. I just switched eventually. I'm still an Android user, though, which I get ridiculed for constantly by my friends in the U.S.
That's so funny. Shares of Apple, though, we should point out, down about 2.5% in the aftermarket. Got another name for us?
Yeah, we're looking at Delta this afternoon. We're just seeing some small gains here in the post-market, 0.7% last we looked. And that was because we reported earlier, Bloomberg News reported that Jim Graham, who is the head of its Endeavor Air regional carrier, will step down, but will still remain with a parent company. There was an Endeavor flight that was involved in an accident on February 17th, in which one of their aircrafts hit the runway, tilted to the right, and left 21 of 80 people on the flight injured, though Delta was declining to cite specifically what the reason was for this move. But we did get that news slightly before the close today. And we see Delta shares up slightly in the post-market.
They are, and it looks like they also, am I reading this right? Yep, authorizing a $1 billion share buyback program, right? So that is certainly something that can get but investors excited. Good stuff. Thank you so much. Really appreciate it. Bloomberg News Managing Editor for Bloomberg Markets Live, Christina Aquino. For more conversations, check out our Stock Movers podcast, 5-minute episodes on the biggest winners and losers in the stock market. And you can find it on Apple, Spotify, or anywhere you get your podcasts.
All right, Apple shares down about 2.6% right now. Once again, to repeat the headlines, China sales miss estimates. That came in at declining 2.3% to $16 billion. That was in the fiscal second quarter. Overall sales, though, Carol, gaining 5% to $95.4 billion.
Amazon down 4.4% after giving a weaker than expected forecast for operating profit in the current quarter. The analyst calls with the companies about to begin. Watch for headlines at Bloomberg.com, certainly, and watch that aftermarket trade. That's going to do it for this hour of Bloomberg Business Week Daily. Balance of Power starts right now.
From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons.
Tonight, Donald Trump shakes up his national security team.
Mike Waltz, I guess he said he claimed responsibility, I would imagine. It had nothing to do with anyone else. It was Mike, I guess. I don't know. I was told it was Mike.
Weeks after a wave of criticism following that Signal chat scandal, the current National Security Advisor, Michael Waltz, tapped to serve as the next UN ambassador. What his NSA departure means and the rocky Senate confirmation we could expect when Senate Foreign Relations Committee member Senator Chris Coons joins us.
And could a major trade deal be imminent?
Right now, countries from all over the world, because of President Trump's leadership, are desperate and dying to make trade deals with the United States.
The White House says it's nearing an announcement of a first tranche of trade deals with partners that would reduce planned tariffs, what we can expect, and what's in the fine print.
Plus, we have developments on several fronts tonight, from secondary sanctions announced on Iran oil to the earnings calls now underway for giants like Apple and Amazon, and what Elon Musk is now saying about the future of the Doge.
But we begin tonight with Bloomberg's Washington correspondent Tyler Kendall, who joins us live from worldwide headquarters in New York. And Tyler, a day of turnover in the Trump administration, though it's not actually departures, it's just moving pieces around on the chessboard, if you will.
Right, exactly, Kaylee. And in his post on Truth Social announcing these changes, President Trump said that he thinks that Mike Waltz has served the nation's interests well and that he'll continue to do so. And that's why he's appointing him to be the next U.S. ambassador to the United Nations, though, of course, he won't have that daily access to the Oval Office. Now, as you well know, Mike Waltz came under scrutiny back in March when he inadvertently added a journalist from The Atlantic to a Signal group chat that was discussing pending military attack plans against Houthi rebels in Yemen. But up until now, really, there has been very little public indication that this essentially demotion was pending. In fact, the White House press secretary told reporters almost a month ago today that they thought this case was closed.
As the president has made it very clear, Mike Waltz continues to be an important part of his national security team. And this case has been closed here at the White House as far as we are concerned. There have been steps made to ensure that something like that can obviously never happen again. And we're moving forward. And the president and Mike Waltz and his entire national security team have been working together very well.
So you see Mike Waltz here just yesterday at a cabinet meeting, but a person familiar tells Bloomberg News that it appears President Trump soured after Waltz asked Elon Musk to investigate what happened with that Signal chat. Sources tell us the White House felt Waltz should have just admitted he made a mistake and not suggest something more nefarious was at play. Waltz, of course, has been at the forefront of President Trump's foreign policy agenda, particularly when it comes to the war in Ukraine. He's considered to be very hawkish on Russia, Iran, and China. Waltz is a former three-term congressman and will need to get through Senate confirmation to be the next UN ambassador. So that Signal incident is by no means behind him. Joe and Kaylee, during this announcement, President Trump did say that his Secretary of State, Marco Rubio, will serve as the National Security Advisor for the time being while he continues to lead the State Department.
You just made an interesting point, Tyler. That would involve Senate confirmation, and we're going to have a conversation with Senator Chris Coons about that coming up. Bloomberg's Tyler Kendall, we thank you so much for the update from World Headquarters in New York. It appears to be the end of the road for Elon Musk's involvement with the Doge. Here's the president yesterday.
I want to thank you for your help. You really have sacrificed a lot. Been treated very unfairly. We just want to thank you very much. And you know, you're invited to stay as long as you want. At some point, I guess, he wants to get back home to his cars and his $150 billion. Think of that.
Yeah. It's 160 now.
Yeah, 160.
Tesla stock, of course, has dropped more than 33% since Trump's inauguration, and Musk has lost about a quarter of his personal fortune, roughly $113 billion. Today, Tesla's chair, Robin Dennell, denied a report that the company's board has started a search for a new CEO to replace Musk. Joining us now with the latest from our headquarters in New York is Ed Ludlow, host of Bloomberg Technology. Ed, I thought that Musk was trying to put any concern around his leadership of Tesla to bed when it reported earnings. He got on the earnings call and basically immediately said, "Don't worry, guys, I'm coming home."
Yeah, he committed to up the amount of time that he will be spending at Tesla and scaling back the amount of time allocated to Doge and the administration. As Joe and I discussed the other day, this is only a surprise to those that have not been paying attention. Any special government employee has a limit of 130 days. This is an interesting development. The Wall Street Journal has reporting that the board conducted an executive search to replace Elon Musk, then citing the chair, as you said, the official Tesla X account denied it. What you need to know is very simple. Like, the board have previously discussed, for example, in the context of Musk's compensation trial, their plans for life after Elon Musk. The idea of long-term succession is not new. You know, lots of sources tell me that their expectation is that he's also going to spend a lot of time on XAI, not just Tesla. But there's a distinction between long-term succession planning and, I guess, what was reported in the Journal overnight.
Ed, it's great to have you with us here. We've also got a couple of big movers after the bell, and I know that you're super busy with your eyes on Amazon as well as Apple, pointing to lower than expected sales from China and now a new effort to source more chips from the U.S. this year, according to Tim Cook. Have you heard the word tariffs yet?
No. So what both companies have in common is that they said literally nothing officially about trade or tariffs in the earnings release, other than both companies amended the boilerplate in the forward guidance section in Amazon's case and the forward-looking statement section of Apple's case. Both added the word trade, which wasn't in the release or the document from a quarter ago. And in Amazon's case, they added the word trade and tariff. Very little to go. Numbers reflect, in Amazon's case, the current period outlook, and in Apple's case, weakness in China, but also some weakness in others.